with CoreWeave, why don't we? Because obviously we have seen these deals, these partnerships, Meta and Anthropic last weekend. We have seen a 30% increase in the stock even just over the last 5 trading days. So this is obviously one to watch, particularly off the back of these deals, which has sort of further cemented its position in the AI infrastructure landscape. And that's really what a lot of the analysts have been talking about as well, Nicole. So just yesterday, you had Macquarie, for instance, upgrading CoreWeave to outperform. So coming off the sidelines here from a neutral rating, they've now got a price target of $125, up from $90. So what they're getting at is that the recent announcements they mentioned with Meta and Anthropic suggest this ecosystem is becoming, quote, more structural. So CoreWeave, they see, is no longer just a temporary solution, it seems. Macquarie does believe that CoreWeave will increasingly become a structural player into the next decade as opposed to a stopgap on the balance sheet financing GPU risk. So basically what they're getting at here, it seems, Nicole, is that companies used CoreWeave really temporarily when they lacked GPUs or the infrastructure, but the view now seems to be, particularly from this analyst over at Macquarie, is that it could become a more long-term essential provider of some of the AI computing power. Now, they also say that the company has the near-term capacity to shore up compute needs relative to the in-house deployments, and it says that recent headlines validate CoreWeave's differentiated platform, because obviously these companies like Meta and Anthropic, off the back of these tie-ups we learned about last week, they need a huge amount of GPU power, Nicole. We know that. And so CoreWeave is basically selling this AI infrastructure now. It's not actually betting on just one model, and that's where it sort of stands in the entire ecosystem here. But I've been talking to a number of analysts off the back of some of these tie-ups we learned about last week. I mean, obviously you've got some of the concentration risk as well. And don't forget also, the other risk associated with a name like this is that it does rely heavily on NVIDIA GPUs. And so the view is that if NVIDIA sneezes, CoreWeave could catch a cold. But for now, it's shaking that off. I mean, look, we are up in the pre-market right now, looking to add some onto these gains that we saw last week, as I mentioned, up almost 30% over the last 5 trading sessions. And if I look across some of the analyst consensus as well, Nicole, I mean, you've got the most of the cohorts in a buy camp, 7 in a strong buy. There are a number still waiting on the sidelines, just waiting to see how things pan out here. They do really want to see the ROI.
Yeah, without a doubt. Any other quick thoughts on the market before the opening bell?
Well, I mean, with 40 seconds to go to the cash open, we of course are counting down to this blockade at 10 a.m. Eastern, Nicole. What that's going to look like, what it's actually going to mean. I mean, a lot of conflicting headlines still, but it looks like the market response with oil only at 103. I say that because a lot of the conversation has been focused on the fact that some had suggested it could have gone higher, a fragile ceasefire, but holding. Obviously, Trump did say that the meeting went well and that the points have been agreed to. So you've also got the dollar firmer today pressuring other currencies around the world. Keep an eye on dollar yen, nearly approaching 160, economically and very politically sensitive.
Sambada, thank you. Catch our morning stream live. Opening bell. And there we go. We are up, and we are seeing now some down arrows. The Dow Jones Industrial Average is down 247 points, 271 points, down a half of 1%, basically. The S&P 500 down 14%, 14 points, down a quarter of 1% at 6802. The S&P was was up 3.5% last week. The Nasdaq was up 4.5% last week. Right now, the Nasdaq's pulling back a quarter of 1%. And the Russell, by the way, we should note, gained 4% last week. It's pulling back a little bit here, and it's down 1/3 of 1%. Gold's down $30. Oil here is at 103 and change. The 10-year bond yield is at 432, and energy is higher. So that's the one sector in the green. Oh boy, you got to reach to find green sectors here as we kick it off. We knew we were going to have a down arrow, but we are up off the lows of the day. Some of the market leaders, SanDisk, Semi, Albemarle, and on the downside we have Goldman Sachs, Carnival, and Hewlett Packard, Norwegian. Those are the laggards of the day so far. We talked about Goldman earlier. Let's continue to talk about some of the movers here, and we're joined by Diane King-Hall. Best Buy, a double downgrade over at Goldman. Let's hear about that.
Yeah, it's getting hit with this double downgrade. Shares are responding in kind to this negative viewpoint from Goldman Sachs on Best Buy. It's downgrading it to a sell from previously I saw it as a buy. 76 here. The firm says that while near-term demand for PCs and a boost from tax refunds could support results in the first quarter, the big concern is what comes next after that for Goldman. They're warning that rising memory costs could push laptop prices higher, and that would be a pain point for Best Buy from the view of Goldman. They think that would squeeze margins, force consumers to trade down to cheaper options. At the same time, suppliers are shipping fewer electronics. That, to their point of view, points to softer demand in the road ahead. That's the view of Goldman Sachs. They see earnings revisions turning negative in the back half of the year, and they think that's a setup for potential underperformance of the stock. Again, margin pressure is the big concern here. Rising memory chip costs and the ripple effect to laptop prices, higher prices, at least to weaker demand there. Consumers trading down, looking for cheaper options. Best Buy shares right now down about 2% right now. The stock, the year-to-date performance, trying to pull that up, taking a second to pull that up. But again, the stock is down right now about 2%, Nicole.
Yeah, understood. So you just there looking at Goldman Sachs, and
oh look,
got
more downside on that.
Right? And Goldman Sachs there year-to-date, I have pretty much flat, just up.
Yeah, no, Best Buy is what I was.
You were on Best Buy.
Goldman.
Sorry, I'm looking at everything all at the same time, Diana. I was just looking at CoreWeave. Sam just did a great job covering CoreWeave, and I had said Stephen Orr fixed it a week ago. It's been up 30%, a great call. And she had covered the Macquarie, and also I see Bank of America put a 120 on CoreWeave, up from 100. So a lot of positive.
So we got
news,
the
but not on
bank
Best Buy,
earnings
with a double downgrade. Okay, let's get to your next one. You have
I thought we had
Starbucks. It's
some
getting a
big
little
players
bit of love. It's not a full vote of confidence yet, though. Jefferies increasing their viewpoint on Starbucks. They're upgrading it to a hold from underperform here. They're increasing their price target to 92. They think there's a cleaner story here for Starbucks since they've completed that China joint venture that cuts some of that international exposure there, reduces volatility tied to that market. And the viewpoint from Jefferies analysts is that the core U.S. business is starting to stabilize under Brian Nichols. So this is a similar story to when we think about both Mark Elliott over at Nike, trying to turn that around, although you've got analyst patience wearing thin there. Here at Starbucks, it looks like the view is actually a little bit more positive, even though this is a hold rating. They're coming off of an underperform rating. They like the visibility that we're seeing into the turnaround here for Starbucks. This is the viewpoint that Brian Nichols' work is starting to show. The viewpoint is starting to show through. Jefferies isn't all in yet. Their viewpoint is still below where Wall Street consensus is. They're still cautious around same-store sales and then margin pressure from higher labor costs. And the valuation for them is still a sticking point because they think Starbucks is still trading at a premium compared to peers. So there's progress. They see progress, but to the point of Jefferies, they still want to see a little bit more proof in the pudding there for this turnaround story at Starbucks.
All right, and last but not least, what about Constellation Brands? We heard from the company last week.
Yes.
Now?
Yes, and Constellation Brands, this has been an interesting one because it's been an outperformer so far this year, but there's been some weakness outside of beer. But TD Cowen is more constructive on this one. They've upgraded it to a buy from a hold. Their price target is 190. That's up from 142. They think that the beer guidance for Constellation Brands is actually overly conservative. Again, that was the point. That was the segment where we saw better progress there, especially compared to other segments there. They see some World Cup benefits. Their viewpoint is there's going to be subsiding pressure on Hispanic households. That's one of the key segments and key demographics for Constellation Brands. So they think the beer business's biggest driver has a clearer path to growth than what management sees. Easing comps, so they think that they have better comps when you look at it on a year-over-year basis. And then again, the World Cup bump, they see that there's a potential boon from there, and they expect Constellation to outperform, Nicole.
All right, lots of names to watch. Thank you, Diane King-Hall. Coming up, potential drivers for the market this week, where you could find some opportunities. Our guests weigh in. Opening bell. We'll be right back. The Dow's down 372.
At the news, I help you read between the lines, from what's moving markets to what's next, with sharp takes and market know-how. Follow me on all social media platforms at Diane King Hall, and connect with me on LinkedIn for more.
Last week fell 20% down last week. Over 20% down.
Kick off the
Everybody
morning
down here
with
at
the
$20
data
again.
and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
What you want, bro?
Live insights, actionable data, and market-moving analysis. Schwab Network connects the headlines to the why in real time. Watch free 24/7 at schwabnetwork.com.
Welcome back to Opening Bell. Stocks are lower here, mostly all sectors with the exception of energy this morning on the heels of failed talks with Iran over the weekend and a blockade due any moment in the Strait of Hormuz. Bob Lang, founder and chief strategist at Explosive Options, is with us, and we did have 2 weeks of incredible gains after 5 weeks of selling. So folks should continue to expect some volatility. How do you handle geopolitics and your portfolio at the same time?
Great to see you, Nicole. So, so after the weekend, basically no deal between the United States and Iran. We saw that actually futures really got hammered last night when they opened up for trading, but they've come off their lows in a big way. And also oil, energy prices, I think a lot of people were expecting much higher prices overnight, but only up 7% is not horrible. We're kind of in the range that we were in for about 2 weeks there. The only thing that really troubles me, Nicole, about the markets is if oil gets above those recent highs at about $115, and what could cause that? Certainly supply issues. There's not a lot of problems with demand right now. There's plenty of demand for oil and energy around the world, especially here in the United States. But if oil prices on the short end of the curve start getting squeezed and prices go up with supply becoming an issue, then I think we have some real problems. Oil's been up about 35% over the past couple of months. Real strong move in energy and also energy names as well too, as you mentioned.
So the S&P as of Friday's close was about 2% off the record highs. Goldman Sachs said, that's great, but secular growth stocks remain more than 20% below their highs from October. Sort of saying, look, I do expect to come back to some of the tech stocks. They had some of their names like Meta and Google and Netflix and Amazon that they do like, but I guess there's somewhat of a divergence when it comes to picking stocks these days. What are you picking? What works? What doesn't work?
I agree with that, Nicole. I think if you look underneath the hood of the market, I think there's a lot more structural issues and problems that most people aren't really paying attention to. If they're just buying the big names like the Nvidias of the world, they're not seeing what's happening in the rest of the markets. I think there's been some beaten down companies
come down here and test this MMA and break down below it.
Sectors in their own personal bear market
they
with
come to test the
Homes
lows.
and Lennar. Some of these private equity companies also
have
been in bear markets.
If they get a bounce
I think
and
the
hop into
financial
this 50
stocks, which are
RSI,
going to be reporting the early part of this week, most of this week, we also already heard Goldman Sachs this morning, and that stock is down quite sharply. I think we're not going to hear some great news from these companies this week. Certainly, I don't know if that move that those stocks made last week is going to be long-lasting here. I think there's going to be some profit-taking, certainly, after these stocks have made some sharp moves up over the past 4 or 5 days. But by and large, Nicole, I think if you're looking at the markets here, I think we have to pay attention to interest rates. If interest rates start coming down and the yield spread starts widening out, it's something that I watch for. Small cap stocks are going to perform well. I turned my back from Netflix. It went to $100. So I'd be taking a look at the Russell 2000.
I want to say I bought a $100 call like 6 weeks
ago.
Tell me more
about the bullish option flows that you're seeing.
I heard Netflix had $100.
Intel, you can separate them each one by one, or is it a big story overall?
Yeah, so semiconductor stocks, Nicole, SMH made an all-time high on Friday. It followed did close with a poor candle, so we could retreat a little bit on the SMH, but the SMH is covered by all these semiconductor stocks like Intel, which is pushed out to a new all-time high today. NVIDIA also has been strong, Broadcom as well too. We've seen some good options flow, Nicole, out to June and July and to September on some of these names. That is 2 and 4 months further from where we're at right now, but still, it still shows the optimism from big investors that see higher prices in these names going forward. Certainly up to the end of the year. I think most option trading here is indicating a good 20% move up in a lot of these names over the next 4 to 5 months. So any dip, I think, is probably a good spot to get into.
It might have ran too fast.
And don't forget, Taiwan Semi will be reporting their earnings on Thursday morning before they open, and that is always a big mover and driver of the semiconductor stocks.
Yeah, we'll be watching for that without a doubt. And they were pretty positive in the last monthly update that they gave a few days ago. I think that was.
Right.
And we'll watch ASML with that also. Are you expecting some weakness when it comes to software or anything else?
So, a lot of people have been paying attention to this IGV, which is an ETF, which includes a lot of those software as a service names, SaaS. And I guess apparently the speculation or the worry is that, is AI going to blow out of one of these companies? And is there not enough money to be spent by companies for AI and for software? So the transition perhaps from software into AI could be very real. I mean, if we take a look at the price action in some of these stocks and the IGV. IGV is down 35%, Nicole, in about 4 months. That's an astounding move to the downside. Now, I'll admit that while that has been pretty large, it does look and appear that perhaps some of these stocks have made a bottom here. That doesn't necessarily mean to buy. What it tends to mean is to watch, pay attention to where the money is flowing in these names. And we're looking at names like Salesforce, Microsoft, ServiceNow, Datadog. Some of these names have just been beaten up horrifically over the past 4 months, especially ServiceNow, which is trading in the mid-80s right now. And I know that's been a darling for a lot of people, but certainly the chart is telling you to hold back right now and not do anything just yet. If it goes into a nice basing period for about 2, 3, 4 months, and then starts making higher highs, higher lows, then that's the time you want to get on board.
Yeah, understood. And Bobby, I saw Goldman Sachs talking about the IPO activity and that the market conditions somewhat tempered the execution for that. But in the long term, they feel that markets are rebounding. They see long-term opportunity in private credit, their ability to deliver attractive risk-adjusted anything with that. And final thoughts, whether it's about earnings or anything else, quickly?
Well, it's about earnings right now, and my colleague Chris Versace sent me a note last week saying that earnings estimates have actually gone up for this quarter, which is really kind of shocking and surprising to me when you think that the estimate for GDP has come down sharply from about 4.5% to 5% for first quarter all the way down to about 1.2%. Now we'll get that first read in about 2 weeks from the government, but having come down from 4% down to 1.2%, and then having earnings estimates actually being revised upwards 16 to 18% year-over-year, Nicole, it's pretty astounding. And somebody's wrong here, right? Either the government is wrong, or the estimates are wrong for GDP, or the earnings are wrong. If the earnings are wrong, good luck because holding on to those stocks because they're going to come back down as the multiples start to contract.
You better know how far they're falling.
Right. Most people are counting on the fundamentals that they're still pretty good when it comes to some of these earnings. So we'll see. And Bob Lang, thanks for giving us some of those fund flows too that you were seeing. Bob Lang, founder and chief strategist at Explosive Options. Good to see you. Coming up, key levels on charts to watch. Kevin Green is standing by. Opening bell. We'll be right back.
Sometimes,
all the way down here in Balance Pool,
you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping the markets in real time. This is Schwab Network. Subscribe at schwabnetwork.com.
You know what you're looking for out here in the markets? Alright, what's
This
oil
is
doing?
Trading 360. I'm Marley Caden. We track macro forces, market trends,
The
and
stuff that
companies
you have to
that
put in our
shape
cars
investor decisions, all with expert
to get
analysis
clean and
and
stuff.
actionable context. From inflation data to sector rotations, earnings to policy, it's a
All
comprehensive
the
view of the
oil.
market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
It was interesting. I saw that Goldman Sachs was noting that the S&P was within about 2% of its highs, but looking at some of the secular growth names and some of those stocks which are still down big
Look,
time,
bounce like a
20%
motherfucker right there.
of
Bounce.
some of their highs. So you are seeing some
Getting on that
divergence,
chest of
but
MMA.
in 2 weeks again,
Bounce.
let's get to C market.
Ah,
Taking a
Jojo,
look
boy.
at the S&P.
They ain't playing with the
Last week
business,
was about
boy.
3.6%. Let's see what we're seeing here today.
What the fuck?
Yeah, we are seeing around 40% of the stocks in the S&P 500 in the green so far, but if you're looking at the
So what
sector
the fuck is
composition,
that?
we're really only seeing energy actually in the green at the moment. We actually did see
What the
industrials
fuck
actually
is that,
turn slightly
boy?
positive here. But I think it's an interesting
Damn!
radar. Today we are seeing the semiconductor space actually sell off here a little bit. But the IGV or software is actually catching a bid. If you're looking at
Damn, that was
here,
bounce
those
right
names are
there.
seeing a little bit more of a retracement bounce to the upside compared to what we saw for last week. If you're looking at the levels to the upside, I'm looking at 68.30 as your major area of resistance. That's where I'm seeing the majority of the call flow this morning, and then to the downside trying to hold 67.85. We got relatively close there. Looks like we're trying to bounce off of that level at this point in time here. And if we actually get a breakdown below that 67.85 level, you're looking at 6700. You're actually still seeing the options market really kind of pricing in a wider range in this market compared to what we were seeing in the VIX complex. But this is actually a pretty decent setup for today. We're able to hold the 50-day moving average that has been acting as our area of support overnight. And if that's going to continue over the next couple of days, we'll get a little bit more confident that they're able to get back to the all-time highs. The failure of the 50-day moving average, I think, kind of flips the map here a little bit, especially when it comes to the options positioning.
All right. And then when it comes to the VIX, we did see that Goldman Sachs during the call here just making some comments. You know, while they're mostly positive and see that the conditions will improve and things will get better, they did say the geopolitical landscape remains very complex. And that brings me to the VIX.
Yeah, you know, what's actually very interesting with the VIX right now, we're actually flirting with this backwardation level at this point in time, even though the market, Nicole, is actually ripping pretty aggressively here, so we may have some news on the wire. I know that you're going to be able to get to that. But if you're looking at the VIX curve for the most part right now, we're still kind of getting close to that flat line or potentially in a backwardation type of scenario here, which could lead to maybe greater volatility over the next couple of days. But if we do have some good positive news, obviously we can see volatility crush and would be conducive for equities to move higher here. I'm a little bit more skeptical about this market move, and maybe we have the ability to refill maybe some of that gap that we had on the S&P that we saw starting off last week.
All right. Well, it's great to see you. Thank you so much, Kevin Green. A good start off with our week with some of the details that you gave us. Appreciate it. And it's time for our market meetup panel because we want to take a look at some of the big picture. We have a lot of earnings coming out. Alex Coffey and Joe Mazzola, head trading and derivative strategist of Charles Schwab, is with us. Joe, I'll start with you. Some of your thoughts here this morning.
The market's holding up relatively well. I'm looking to see the most recent data that just came out, or news that just came out. Kevin's right. We did just recoup about 20 points in the S&P 500, so hopefully, maybe that comes in by the end of the segment. We'll know what that is. But for a market over the weekend, came to discover there's going to be more shipping risks and rerouting, and the likelihood of a blockade in the Strait of Hormuz from the U.S. this time, particularly targeting Iranian ports. It's holding up relatively well. Even given Goldman Sachs sold off about 4.5% on its earnings, but it's just so headline driven right now that coming into this week, if you were to tell me that all that news was going to pile on top of each other and we'd be basically unchanged right now, I would have a hard time believing that. But I think what we're seeing is we're seeing a market that's able to maybe see past this a little bit.
That was wild. Did y'all see that?
Because
what is this?
Whether or not you believe in the strength of 14% year-to-date earnings growth,
ain't no way. if you was
a
fast, you
lot
probably
of
could
this,
say steady. Got some.
a lot of this oil tension and a lot
That
of this
shit was
spike that we've seen in the
ridiculous.
prices won't be priced into the
But we're
Q1
gonna get a little
earnings
bit of it,
data.
though.
You know, there'll be
This
some
retest.
residual effect, but it's probably going to be more Q2, and I think that's what investors will be listening to. And it looks like right now they're they're seeing past that.
All right, and we'll continue to follow. As you noted, we did see a leg up a moment ago, though we're coming back down a bit. We'll continue to follow this volatility. Alex,
Anybody
tell me
catch
some of
any
your
of that?
thoughts.
That was.
Yeah, I mean, granted, I think we're expected to hear about or see this blockade imposed in the next 10 or so minutes, inside of 10 minutes now, so perhaps it's related to that, but I continue to see a market that's seemingly looking beyond this conflict, and I think as earnings are really kicking off now in earnest, we're going to see, Nicole, a market that becomes a little bit more micro-focused, a little bit more stock-picking oriented. I think that's good. I think it's healthy.
Above 50
it's not
like
often
this.
that we see these
Like
correlation one kind of whipsaw markets, and I think, equity traders are looking forward to a market that's a little bit more favorable for those who are reporting nice earnings, and maybe not so much for those who are struggling.
You know, it was funny because I saw, there was a call on Walmart today from Guggenheim, and it's an important call, but the language within the call was Walmart's price target was raised to 137
that 15 really tests your patience, though.
But within the language, they said that Walmart was well positioned for the macro-related schizophrenia that has been seen in the market ping-pong, risk-off, risk-on preferences of the past year. I mean, for them to call this market schizophrenic, I understand why they're calling it, right? Alex, I mean, it's certainly, we have been whipsawed, and we have seen winners and losers.
They try to run out fast and then slow down. But look how slow they go.
Yeah, I mean, the last thing I'll say is if you look at Schwab traders and how they've kind of interacted with this marketplace and used sort of the stacks methodology, and Joe would have more thoughts on this as well, I'm sure. 7 of the last 8 weeks, exposure has been reduced. 6 of the last 6 weeks.
Let me interrupt you, gentlemen. Here is the news. Iranian officials are studying abandoning uranium enrichment as a U.S. condition for ending the war. NYP is the source there, just came over on our teams that we look at. And so with that, we did see Joe Mazzoli were first to call it there, and we saw stocks move to the highest point of the session here. And so we will continue to follow this story for you. So thank you both here for being here. Right now, we continue to see that now, look, the S&P is down just 7 points. So that is the breaking news, is now blocking the payment that Iran was trying to squeeze out of the ships with the blockade, enough to make Iran to come back to the table and consider abandoning the enrichment of uranium. I'm Nicole Petalides.
Oh. And then that show bullish divergence on the IWM right here. So that makes me nervous on the market right there, for real.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds.
$15
that means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Schwab coaching is concepts brought to life in the
Schwab coaching is learning constantly.
It's relatable, it's practical, clear, understandable, and hopefully entertaining. Take it for what it's worth, but I think it's absolutely world class.
Schwab coaching is actionable, individualized, community, growth, and empowering.
It's really a human touch with your investing.
We have coaches who have been in the industry and around the industry for a long time.
So the nice thing about Schwab coaching is that clients get access to 9 different sets of expertise.
We want to you in chat on the shows we host. We want to engage with you outside of the classes we host.
Consolidation. That could add to this trade. So
the entry had to be here,
different
and
formats
exit had to be
people
there.
learn differently at different times.
Real bookworm, we've got courses for you to learn from. They can dig in, go at their own pace.
We have webcasts running through YouTube all day, every trading day. We've got this ongoing 24, 25 times a year events making their way around the country. So you get that opportunity to share experiences and knowledge with other traders.
They show crazy volume right here on this
Step by
index.
step, along with the education that we provide.
Well, they gonna reject. They gonna come up here and
regardless of where you are
That's
on
just
that
obvious.
path of education. It's
But
really
when they start
unique,
slowing
not
up like
just that
this,
it
bro, they
exists,
speed
but
up
they
and go
can
the other
tap into
direction.
30-some hours
And vice
worth
versa.
of it each and every week. How
You know what
incredible
I'm
is
saying?
that?
When they
And
try to
it's
go
free.
somewhere, they go somewhere fast. It's still bullish though. Trend is bullish. But they gonna go somewhere and reject hard.
Live insights, actionable data, and market-moving
The reason I don't
analysis.
like it is because
Schwab
how it's
Network
looking on the
connects the
other
headlines
rim.
to the why in real time. Watch free 24/7
I
at
didn't even check them
schwabnetwork.com.
out. But I come right up here. Reject hard as hell. Who is?
Hello, everybody. Happy Monday. I'm Sam Riders live from the floor of the New York Stock Exchange. We have plenty to hit on both.
Yo, why is
the
ATT
next hour,
falling?
busy weekend, a busy morning. So here is a look at what is coming up on today's show. We will dive into the fluid
Jeez,
situation
look at
over in
this.
Iran. What would a potential U.S. blockade of the country mean for oil, as it is 10 a.m. Eastern right now when this is due to come into effect? Over the next hour, we will have example trades for Nike and Citigroup. Nike is lower this morning after a downgrade, and Citigroup releases their earnings tomorrow morning to help kick off a big week of bank earnings. But for now, let's take a look at where markets are trading half an hour into the session. And a fresh week, of course. We have had these lines about Iranian officials studying abandoning uranium enrichment as a U.S. condition for ending the war, as per the New York Post. It comes as we have now struck 10 a.m. Eastern with this blockade is set to take effect. We are waiting for the details, exactly what that will look like. In the meantime, it looks like stocks are looking for some direction from that. S&P 500 flat as a pancake here. Just as some upside bias with the Nasdaq 100, just some fractional gains here. The Dow Jones are shedding about 165 points, and the Russell 2000 just up marginally for us this morning. So a bit mixed as we are, of course, looking for a little bit more clarification and confirmation here. Let's flip the balls and take a look at how foreign markets are faring. We've got Europe still currently trading. We've had risk off across our regional friends here. Hang Seng Index down 1%, Nikkei 225 down 0.7%. I'll explain why that's the case later on in the show. But for now, we've got the German DAX off the lows, but still down almost 1%. The London FTSE sitting at 0.4% lower right now. So as I mentioned, some weaker sentiment as we did see risk softening across regional equities.
Yeah, you did. I heard you. I watched that shit. I don't know what you're talking about, girl.
Announced over the weekend. So
I
let's
told
take a
y'all
look
them
at how
bulls was
futures
active.
products
I
are
don't know
also
why y'all
trading,
listening.
because oil is the big story. And of course, the reaction we've seen in stocks this morning coming
People
off the
talking
crude
about
oil
Bitcoin
climbing back
this,
up 5%.
Bitcoin that.
101 right now. We're
I
at
said
103
Bitcoin
this
got
morning,
this
so we
same
are off the
MMA that
highs,
everybody else
particularly
got.
as we are continuing to follow these developments
Like this
and these
MMA
lines
right
coming
here,
out of
boy.
Iran. The 10-year yield currently doing this,
That shit
432
is
on the
ridiculous
benchmark,
just
and the
now.
dollar index catching
Look,
a bid.
see?
So we're seeing some strength coming
The
through for the
same
greenback.
MMA
That's
right
pressuring some regional currencies.
Keep
Even
bouncing
our
off
dollar
forever.
yen, we are nearing the 160 mark on that currency cross. Gold is lower
Soon as
as
the
we've seen
volume
the
came
greenback
in, they
firming up
bounced.
0.7% down, 47.52. Bitcoin is lower for us this morning at 71,000 and change. Let's get out to Kevin Green, senior markets correspondent, because of course we have got a lot of headlines coming through. As I mentioned, Iranian officials are studying abandoning uranium enrichment as a U.S. condition for ending the war, as per the New York Post. KG, I don't know what else you're seeing on that front, but just walk us through the big picture
Everything
of
was
what this
red
all
a
means
second
and the
ago.
market
Now
reaction so
everything
far,
look
which
at
seems
circle.
fairly
Okay.
limited at this point, you could say.
I told y'all put that on that watch
Given
list.
the
Told y'all
events,
that.
especially the naval blockade of Iranian ports and Iranian ships, that's obviously going to create a little bit of a...
Came all the way down here to $80 just so we can go back to 100.
And I think the market's really discounting that we might see a turnaround here when it comes to the ceasefire talks, maybe some optimism moving forward. We have that New York Post report.
That is
We
wild.
have the really
Hey, what?
benefited off of
Can I tell you something? You know the craziest thing I heard over the
headline,
weekend
but
was?
the market continues to try to move higher. Last night, we actually leveraged that 50-day moving average for the evening S&P 500 futures as a key area of support. Exactly what you would like to see. We
What would
talked
tell
about
you
that
the
last week, closed
what would tell you the
dating
craziest
back
shit I just heard
retested,
over
and
the
now we're
weekend,
trying to
bro?
move higher. And let's see if we're going to be able to continue to do so, and the news flow is going to have to support that.
I don't
I
want
think
to go
also
home.
a different dynamic outside of the geopolitical risk, which I know we'll probably talk about a little bit more when it comes to oil, but the fact that stock is
Damn.
actually catching a bid. If you look at Microsoft right now,
They
I'm
did
not
what
seeing
to
any
her?
other headlines outside of the
To him?
Cloudflare report that we saw this morning from OpenAI, but Microsoft is up about 1.6%, moving very aggressively over the last 2 minutes, 3 minutes or so. And you are seeing ServiceNow as well as the other software names catching a pretty sustainable bid. So maybe some buyers are stepping in because those have been aggressively oversold.
What's he gonna
That could
do
also
now?
create a little bit more of a tailwind for this market. So a lot when it
He
comes
got
to
to get
these
her back
headlines,
there.
I still think that there's a perceived risk out there that's probably being underpriced on the energy front, Sam. But at the end of the day, the market's trying to look past that
What is
and
wrong
look
with
a
you?
little bit more
And where
optimistic
you at?
to the future. Let's see if that's going to actually hold here.
Yeah, I mean, it's good to see software's catching a bid after that beatdown last week. I mean, you had Dan Ives kicking the week off with a note saying another turbulent week ahead for markets. Focus on tech winners. Now, he says they're on
I
sale.
need
He
you
does
to
say
sit
his
down
favorite names are some of
and
these
evaluate.
security players, CrowdStrike, Palo Alto, but he also talks about Microsoft, Salesforce, and ServiceNow as really standouts that have been very disconnected sell-offs relative to the AI monetization story. So catching a bit this morning, as you mentioned, but let's just talk about the big picture on oil. I mean, what do we know about this blockade? Because obviously we are waiting for a little bit more of an update here. I think it's really telling that the markets are reacting the way that they are this morning, KG, perhaps off the fact that Trump did say the meeting went well. I mean, he says that there were points that were agreed to. So let's wait and see. But I'm just wondering, what it means for Iran's onshore crude storage. I was reading about how they have 13 days before it fills up. How much damage could that potentially inflict there on what has been really an economic lifeline? And then a lot of the chatter this morning around how maybe this is a way to get to China.
Yeah, China's definitely going to be the impact, and that's probably what's being underpriced at this point. Obviously, seeing flows from the Strait of Hormuz back and forth from Iran, going to China, going to India. That's another one to keep your eye out on here. We do see a disruption that could cause a little bit of pressure in the global landscape, especially when you're looking at the logistics here, which we still are seeing a major problem, especially with the amount of crude oil that's being taken offline. If we see a full-on blockade by the U.S. on these Iranian ships, you could make the case that maybe 1 million and potentially 2 million barrels per day are then going to be constrained in the Asia-Pacific markets, which will be a problem, but maybe this also does force Iran to come back to the table. If you remember a couple of weeks ago, everybody was talking about Kharg Island and how that could be a strategic point. But at the end of the day, Sam, you can have as much oil as you want at a particular location. If you cannot transport it, then it's no good in the market. So this is actually a very strategic move when you're looking at the naval blockade. If this is going to go through, there's definitely some perceived risk here. But it makes it a little bit more flexible for the administration or the U.S. to be able to try to manage these ships and really constrain Iranian crude oil flows. And that will have an impact. I think the cross current that we will see and will recognize, and I'm not sure if everybody's pricing this in, is what's the retaliation going to come from, let's say, China or even India, if they do see this bottleneck actually take hold here. And there could be some other fallout for that, but the market's not pricing that in. At least the equity market is not. I think the energy market, if you're looking at crude, is still kind of pricing in heftier premium, which is another reason why we're seeing crude oil, their WTI, move a little bit more aggressively than Brent. So a lot that is out there. If we see a full-on blockade and nothing moves through the strait, unfortunately, from a global economic standpoint, it would definitely cause some pain here. I think the administration's taking that risk to say maybe short-term pain is going to bring the Iranians back to the table and they can have a resolution here. We'll see if that actually happens.
Yeah, absolutely. I mean, the story over the last 24 hours had been the fact that there had been some reporting around the fact that China had been supplying arms to Iran off the back of this. China now coming out and denying that. You then had President Trump coming out and saying that China will be hit with a 50% tariff if they do help Iran, which obviously Beijing's not impressed by either. You just wonder, I mean, this is sort of the tone going into what is going to be a very high-stakes meeting between President Xi and Trump next month, and it comes off the back of a week where Trump had been
Yeah, it's a big problem. I mean, if you're looking at European spot markets right now for oil, it's trading at $150. If you're looking at the actual physical market. And so there's still a major disconnect here, and it makes it harder for a lot of these energy companies to hedge as well. We'll probably see that impact, not in this quarter's earnings, but maybe their guidance moving forward on their next the next earnings announcement. And then you are seeing this rerouting of ships to whoever the highest bidder. So you have some destinations that are may have been planned a month ago, 2 months ago. You see those ships now saying, well, hey, I can go and sell this over to the European markets for a $15 premium per barrel, and those ships are rerouting. So this is causing a logistical problem as well. And I would not be surprised, Sam, if you actually do see over the long term, 2 months, 3 months, 4 months down the road,
cool down
that you
period
actually
right
do
here.
see one of these major players like India or China actually become the hub for a lot of the energy flows from Iran, or basically laundering Iranian oil, and that's something
this
that's not out
MMA
of the
bounce
norm.
was
We saw the same
crazy.
situation happen with the Russia-Ukraine conflict, where India actually started
That
exporting
was
more
a
than
printing
imported,
move.
and India is
Then
not
the
an energy
retest,
producer at all. So the numbers
another
really didn't
printing
add up.
move.
That's because they were obviously moving that dark fleet oil
Can't get a
to the
whole lot out
international
of that.
market.
It was some
Probably
money
will
there.
happen in this type of
Can't get a whole lot out of that.
respect as well.
There you
I
go.
think the last thing that we have to also keep
We
in
need the
mind
market to
here
pull back a little
is
bit
the
more.
fact that we are seeing the cooking oil aspect within
And then go
India is
higher.
really impacting their economy, and a lot of that LPG, or a lot of the tankers have been actually moving LPG, or liquefied petroleum gas, not really crude oil. So that would actually put a little bit more pressure on their economy as well. So a lot of dynamics taking place here. We'll see how everything kind of shakes out. The market's trying to be as optimistic as possible. If you're looking at these red lines between the U.S. and Iran, it's not only just the enriched uranium, it's the ballistic missile program. There's a lot of different items that probably did not get resolved over the weekend, and I think that probably gives us a little more heightened, volatility here in the back end that we still have to be mindful of. And I'm not sure if we're in the all clear yet.
Yeah, absolutely. I mean, look, I think the market seems to be pricing in what seems to be a fragile ceasefire, but at least holding for now as we're in week 7 of this conflict. So we'll wait and see. KG, thanks so much for breaking down the details and giving us a bigger picture on what is happening with oil right now in this blockade. Coming up, we will get into the situation a little more from the macro perspective. Morning Trade Live is back after this.
I'm Nicole Fedelides at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now.
I told that girl what I need to come home. You know what I'm saying?
It's where I get all your
Well, you want to try and hang out with her?
golf balls, your fancy coffee,
No.
giant CDs, and everything in one place. Like
Why you so
Schwab.
funny?
Everything investors need in one place. Like that. Yeah, at Schwab they can do everything.
Alright, so here's the
Trading,
retest right
full
here.
service wealth management, anything in between.
This spot where you can't bounce from at first.
We have to buy that now.
Invest your way with Schwab. No politics,
This is
no
a
spin.
nasty pullback
Just
if they do.
the market. From open to
Look,
close
that whole
and
strong
beyond.
is hard.
Streaming 24/7, any screen, anywhere at SchwabNetwork.com.
We're back on Morning Trade Live. Goldman Sachs double downgraded shares of Best Buy to sell from buy with a price target of $59. The first cited a risk to margins as higher memory costs lead consumers to potentially trading down and volume declines as manufacturers prioritize fewer consumer electronic shipments.
This is why they didn't like it. See, that's why I was just saying. And the IWM had got this shit first. You know what I'm talking about? They got the bullish diversion first up here. But then had a light ass pullback. What the IWM get? They got a light pullback. While the SPY and Q's got a heavy pullback. Well, it's not. This ain't that heavy, but
in the business of materials is up at
Q's got the rest of
6.5%
that.
right now. So there's some of the winners on the session. Let's take a look at the laggards board. Some of the losers. Momentum is lower. Sienna is down. Conagra down 4.5%, and Goldman Sachs down 4%. Even though we got a beat recently, of course, a record equities trading revenue number, and of course we did see revenue and fixed income coming off. So it was a bit of a mixed quarter, but all in all, it was a beat across the top and bottom line for Goldman Sachs, but we are trading lower this morning on that name. All right, joining us now is Michael Schall, who's the portfolio manager at Ion Macro Fund. Michael, it's always nice to check in with you. Thanks so much for joining us. So obviously we continue to monitor these headlines coming from the Iran conflict. The market seems to suggest, given this performance this morning, that the fragile ceasefire, while somewhat confusing,
and the
is
whole
at least
train
holding
is
for now,
reversing.
as right, we got failed talks, but Trump seems to think the meeting went well. We need a bit of an update on what this blockade actually looks like, but how are you thinking about it from a macro perspective?
Well, as you said, it is a ceasefire, and it's something of a ceasefire within the market as well. I think we had a lot of de-risking between March 1st and the first week of April. And I think people have sort of half re-engaged with the market, and I think it's going to be difficult to shake them out of their new positions unless there's an obvious deterioration of what is happening out there.
Do you think the market is adequately reflecting the macro impact? I mean, is this a good or bad indicator right now?
I think it's doing the best it can with, very imperfect information and a very fluid situation. I think to me, the very big question going forward, and I'll tell you right now, I don't know the answer to it, is are we just in a period of sustained high energy prices, which I think, I think can be managed by the sort of global economy and by the global equity market, or do we actually run into physical shortages of energy? At which point, you may see industrial activity really shut down in different parts of the world. As I say, the first one I think is fine. Second one's like really a problem. In theory, over the next couple of weeks, we should start to see the effects of this conflict turn up in the physical market. All that oil which was on its way from the Gulf to the Far East, leaving at the beginning of March, that is now arriving, and so we should start to have sort of rolling shortages from this point on. So I think it's a tense few weeks. I think it's helpful to some extent that we'll have the distraction of corporate earnings.
I want to bounce on
Which means that the headlines out of Iran won't be the only thing that the market has to react. As I say, on balance, I still think we end up in a sustained period of quite high energy prices, and the nice surprise is that the global economy proves to be more able to keep on moving with high energy prices than people would have expected 2 or 3 months ago.
How much do you think, as far as those higher energy prices, and then obviously we need the duration of that, can the market, I should say the economy, Michael, withstand right now, given where it was at, now the data showing us before the war, and then obviously what it's starting to show up in the month of March with some tinges of stagflation starting to emerge?
Well, I'm of the view that crude oil somewhere between $90 and $100 a barrel is quite affordable within the United States. Historically, at personal sector earnings power or corporate sector earnings power, in sort of real terms, in other words, if you sort of look at the ratio between personal earnings and the price of crude, it's really quite affordable at $90 to $100. That doesn't mean there's no sticker shock. People don't like the price of something like gasoline going from $3 to $5. But the sort of brutal truth is, it's quite affordable. And I don't think you're going to see demand destruction. I think people have really been well ahead of that. You know, and as for stagflation, you know, it's really about the inflation side of things, not the stag side of things. The U.S. economy, it's not ripping ahead, but this is not what a recession looks like in any way, you know, in any way whatsoever. So as I say, I think we have higher than anticipated inflation, higher sticky energy prices, okay nominal growth, kind of mediocre real growth, and what that really means, you know, as far as the U.S. equity market's concerned,
good morning, y'all.
Is that you ship a whole bunch of, you know, you shift a whole bunch of earnings capacity away from, you know, non-energy towards energy. I think energy just very straightforwardly ends up being a big winner out of this.
I'm here every day, every morning.
Okay,
we'll be watching.
Michael, always appreciate it.
And your insights today.
Michael Shelton, portfolio manager at Ion Macro Fund. Thank you so much. Coming up, we will get a closer look at the big picture with the team from Charles Schwab. Morning Trade Live will be right back.
Right. Just don't play chess. Don't play PUBG.
I'm Diane Kinghall on the floor of the New York Stock Exchange. When markets react, we are live with analysis that matters. Watch now, only on SchwabNetwork.com.
How's it going?
First day, so
sometimes, you know. Next. Try
again. She don't even look the same.
Same goes for where you invest.
She looks like a skin.
Level up and invest smarter with Schwab.
Girl, my skin.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning
She
Mover
got whatever
Diane Kinghall,
Stacey Dash got.
from the floor of the New York Stock Exchange.
They took her in the back and said, hey, boy, you better start acting right. She came back out here looking like...
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading needs. Plus, get 24/7 live coverage and access support by phone.
What are you talking about? You make an AT&T fall more, girl. What the fuck? Alright, hold up. No, it ain't. You get my push ready and buy shit at the same damn time. Shit.
From earnings shocks to sector rotations, we're tracking the catalysts that move
You buy shares and get my push ready at AT&T. I should have held my damn $27 put. This is ridiculous.
And in Chicago, we break down the data.
Keep thinking I'm taking profits and shit. Fuck that shit. I'm about to take more profits.
Coverage of the close
fuck that shit, boy. You gonna start holding my trades.
This is Market on Close, live
Tuesdays,
3 p.m. Eastern, only on Schwab.
You heard me, chat? We're gonna start holding them up a little bit longer. Like, my thing is, I don't like to be too greedy. Like, once you get like over 100%, bro, it's like, what do you do now? That shit was showing bullish divergence.
With Meta and Anthropic is strengthening its role in the ecosystem to the point of becoming structural instead of a stopgap and validates their differentiated platform now. So this has been up about 30 sessions, putting on another 8% this morning for us, trading at 110 and change before we, so it's having a
they say he had to be quiet in his house.
so that is the price action off the back of the Macquarie upgrade. Welcome back to Morning Trade Live. It's time for the big picture. Let's welcome in
just tell us no
Head
anyways.
of Fixed Income Research and Strategy, Schwab Center for Financial Research. Very good morning to you, Colin. Thanks so much for
Bro, I
joining
did not
us.
want to get hurt on this
New
put,
week,
bro.
same uncertainties. How are you and the team?
Like, look how over fucking sold they are. And then as soon as I come in here with another put, right? Another put, because I just seen this rejection from up here. I come in here with another put, trying to chase some shit. And get liquidated. That boy bounce like I'm on see,
whether it's the bond market or the stock markets, they're being driven mostly by headlines in the Middle East, and that's kind of driving our view right now. It all comes down to the price of oil and how long it stays elevated, and therefore how long of a pass through that will have into inflation. And again, that seems to be the key driver. I mean, if we go back a week ago or a little bit less than a week ago, we got some good news with
So I was
hit
thinking, I was like,
lower
bro, they're gonna
expectations
downsize
about
it.
the path of Fed policy where potential
Here
rate
they are
hikes
just
switch
going
to
load it.
rate cuts again. But now we're back where we started, and Treasury yields
But they
are
like
back
really
up
in the
again
range
as the
though.
price of oil has increased. So we're using that as our guidepost right now, but we're trying to take a step back and have a more of a long-term view. So even though we see Fed rate cut
Really
expectations or even rate hike expectations shift by the minute or the day, our view is that we expect the Fed to remain on hold for several meetings. So that is mostly unchanged. And when we look at longer-term Treasury yields, like the 10-year Treasury yield, we think it'll probably stay in the 4% to 4.5% range. There'll be some volatility in there. It'll bounce around in the range.
There ain't nothing wrong with
Likely
being
given
friendly
on
with somebody.
news and headlines of the direction of the price of oil and a potential end or no end of the conflict. But we expect it to trade in that wide range for now. So even though there's a lot of moving parts each day, a lot of new headlines, our views haven't changed too much from where we were coming into the start of the year.
Okay, yeah, I mean, this 10-year note, the bond yield has done quite a short-term round trip as we've seen just in recent sessions or so. I'm just wondering then, there seems to be a debate going on about the stag versus deflation. I just had my previous guest more sort of focused on the latter part of that, but then I had another guest on last week who was more concerned around the stag part of the equation, and she was saying that there's a serious problem with the integrity of the data coming out of the government, and even said that 80% of economists in the US are in agreement with her. So I'm just wondering where you guys sit on that debate right now, as we've started to see tinges of it coming through in the data.
Yeah, well, it would be a concern if that were to come to fruition. I'm not saying it won't, but it's a concern of ours because we know that the longer that the price of oil stays elevated, we do see risks to the economy and to the consumer and to consumer spending. So if we look at the stag or the inflation, that part always gets me. Stag, I guess we're talking about growth there, right? So on the growth side, growth is still okay. And that's been our case coming into the year. We've seen the economy growing at or above trend for a number of quarters now. We thought 2026 would actually be pretty strong given the tailwinds we'd see with tax refunds and the stimulus from the One Big Beautiful Bill Act. So that was pretty good, and I think it'll take time for the potential negative consequences of a rise in oil and gas prices to filter through to the economy. And I think we're generally seeing that so far. The labor market, yes, there's some cracks forming, but we got some good news with that March non-farm payrolls report. The unemployment rate remains relatively stable. So I think that's good, but the longer the conflict goes on, it poses a risk there. But for now, it appears to be holding up. On the inflation front, I think fears of stagflation usually go back to the 70s and 80s, and we're nowhere near those inflationary numbers. Inflation by whichever reading you want to use, say in the 2.5% to 3%, maybe a little bit more than 3%. Yes, it's above the Fed's 2% target, but it's well below levels we saw just a few years ago. So we think that those fears are probably a little bit overblown for now, but it is a risk the longer that this conflict goes on, because so far everyone's talking about inflation, but there can be negative consequences, and that's something that investors need to consider. If that flows through to the economy, that should flow through to businesses, and that can have an impact on stocks, it can have an impact on corporate bonds, and there's a lot of flow through there.
Right, and at least we're starting to get some corporate leads this week on how some of these companies are actually thinking about this. But I guess it's no surprise then, Colin, given everything you've just highlighted as to why TIPS, which are obviously the government bonds which protect against inflation, have been outperforming across fixed income. Can you explain just by how much as far as that relative performance
Even knock on my door all the time. I could be in the house
and no
answer.
TIPS would be a pretty good investment to consider if you are worried about stagflation. Because in a stagflationary environment, you have slow growth but high inflation. And that's a conundrum for traditional treasuries because which will be the key driver there? Will it be inflation that pulls yields higher and prices lower? Or will it be the slower growth aspect where investors want safety and they go to perceived safety of U.S. treasuries? It's an unanswered question. If you look at TIPS, they have inflation protection because they're indexed to the CPI, but they're still considered safe and backed by the full faith and credit of the U.S. government. Now, there can be price fluctuations. We always like to say that TIPS can offer protection over the long run. They're not necessarily short-term hedges because we saw that in 2022. But
if
market
you're
is looking
worried
so
about
damn weak,
inflation
but it's
and you're
above
worried
50,
about
so.
slower economic growth, we think tips are pretty attractive right now, especially given their positive real yields.
See what they do with this.
Okay, then, Colin, what's the next catalyst you're looking out for as far as moves in these markets, given we get back to fundamentals this week, but no doubt keeping an eye on the macro picture as well?
Well, I think we're focusing most on the conflict. Good news, bad news, that's the key driver. But we're going to be looking to see, are there potential spillovers to the economy? And that's when we'll get a little bit more nervous if we start to see that, because right now, if we look at the Fed, for example, inflation and oil prices are
I live in a good neighborhood, bro, so it's like
see the spillover,
nothing like that over here for real.
consumer spending decline or retail sales decline,
like you might get like some bums that come through here because they think there's a pantry over here too, so they might think that they can come over and get something to eat.
It's not really the case right
They
now.
can get something to eat and stuff like that.
To see this flow through to the
But don't
economic
nobody
data,
be asking me.
but that's
You
really what
can't
we're
even
looking
get in
for.
where I
So
live at,
cracks
bro.
in the labor market, but again, they've been
I'm over
okay
in the
so far.
condos, right?
And I think
Motherfuckers
cracks
can't
in
even walk
consumer
up to my
spending.
door.
If the high price of gas is taking away spending from elsewhere, that would be a cause for concern. Again, so far things have been holding up relatively well, but if we start to see a slowdown in other parts of the spending markets, then we'd start to get a little bit more concerned.
Great stuff, Colin. Really appreciate it. Thanks so much for joining us today, as always.
When DoorDash and Walmart come bring that shit over here, bro, they be sitting my shit down the street on somebody else's porch and shit. So every time I order some shit, I be getting free shit. You know that?
Morning Trade Live. We'll be right back.
they put it on the wrong, because I tell them, I give them the code and everything. I say, come to the gate and come in and hand me my stuff.
Giving traders even more ways to sharpen their skills.
The code is due with the Spurs hat in the back.
An expanding library.
The Spurs cap in the back. There's only one dude that wear the Spurs hat. But nobody even fuck with Spurs over here, except for me.
And with guided learning paths, stacked with content curated.
But they be trying to find somebody else to get my food to and shit. And I gave my food to a whole cowboy dude with a, you know what I'm saying? Somebody that's one all black and shit.
Schwab Network delivers real-time market insights, live from the NYSE, NASDAQ, SIBO, and beyond.
But them
From
crackheads,
earnings to economic data, we cover what matters as it happens.
I'm about to get you out the hood, though, kid. You wanna come over here and live with me?
Free on SchwabNetwork.com.
Whether you're an experienced
Bro, if you put your money and my money together, bro, we really would be millionaires, bro.
Right for you. Are you a long-term investor? Our investing roadmap breaks down different investing styles.
Y'all be out the same butter, but
you can ask questions by chatting with
I doubt it, bro. I think I have more. We'll have more there.
Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
But why the market taking so long to break out? Y'all come on here.
From the most iconic trading floor in the world, this is Opening Bell with Nicole Petalidis.
It don't matter what time
New York
frame it is,
Stock
bro.
Exchange, the countdown, the setup, the story.
I might as well get up and do some push-ups.
Minute by minute breakdown of the biggest headlines, earnings, global movers, just the trades that matter. As the bell hits and the markets react in real time,
what's she asking for?
Live at the NYSE, right when it counts.
So back on Morning Trade, the focus on Nike now. The athletic footwear and apparel company is down over 13% this year and down over 20% in the last 20 trading days alone. Here's a look at the chart. So comfortable, it's down 0.4% right now, trading at $42 and change. But as you can see, it's come a long way off those highs that we saw. So it is very much on a downward trajectory here off the back of course, its earnings, some of the downgrades we've been talking about as well. So that very much is the focus of the morning trade. So joining us now for a closer look, I'm very pleased to say, is Marley Caden, who's back in the hot seat. It's so nice to see you, Marley.
Running with their hands in the back.
So Nike just can't do it. What's happening?
Yeah, just
can't do it,
like Sam. And it's not just coming from HSBC. This is just the most recent one, and it's great to be back with you as well. HSBC downgrading Nike this morning to hold from buy. We got a new price target of $48. That's down from $90. Right now, trading below that range at about $42.39 for Nike. They cited a few specific things, but the overarching theme of the note from the analyst is that they have limited visibility on the company's business recovery.
August.
They finally broke this in
Feel like
May
it's
though,
moving
which is
fast
crazy.
enough. They said that the turnaround thesis has shifted from what they called a not if but when thesis to now a show me story with no short-term catalyst. As we know, Nike CEO Elliott Hill, who took the helm back again in 2024, has made a lot of restructuring decisions from people to processes to products, but it's still showing weakness in Converse brands in China and Europe, in the Middle East and Africa, and sportswear continues to weigh on the company's recovery. So in addition to the downgrade and the price target adjustment, HSBC also cut its fiscal 26 and through 28 EBIT estimates by about 35% for Nike. That's a huge
Oh yeah, I forgot to tell you. The craziest thing I heard over the weekend. You ready for it now? You was distracting me with some other shit. The craziest shit somebody told me over the weekend. I'm gonna tell y'all. Somebody told me the market was gambling, bro.
But also cited these prolonged recovery
I did not slap him?
challenges, particularly mentioning Greater China and other segments. That China story, as we know, Sam, we covered the earnings live together, was a big miss for the company, and I think that that's where there was some optimism coming into earnings this
Bro, why
quarter.
is this guy breaking out right here?
It just didn't hit for Nike, so
Why is
just in
it
the last
going
month
so
alone, we're seeing them
slow?
down more than 20%. Yes, that turnaround story that's just
Well, we are at the top, so that's why
it's really about the timing, isn't it? It just hasn't proven itself at this point, and you say the China story is such a big part of it, but a lot
Yeah, I told him, I was just like, bro, you can sit here and invest your money in the market, bro, for 5 or 10 years, bro. How you gonna say it's gambling when you gonna see all kinds of times, bro? You gonna fuck around and be a millionaire if you do that.
Latest downgrade, Barley. Let's trade this name now with Mike Shore, Director of Trading Education, Prosper Trading Academy. Mike, so nice.
I ain't talking about day trading and not knowing what you're doing and losing money and blowing up your account. Yeah, you gamble if you don't know what you're doing, you don't have a strategy, and you don't use the shit right. But just
if I had to make a trade in Nike right now, it just doesn't make a whole lot of sense selling it on the lows if you don't have a position that you're just like, well, I'm just done with this. And so looking at it from the outside, that you're looking at it from an inside out type of way, that you probably have more room to the upside than the downside. It's not like Nike's going to zero. It certainly feels like it. But if we're bottom picking here, then I was looking. My initial thought was, well, implied volatility should be high. It is. It's up in the 73%, but actually the put skew is not really all of that steep, meaning that I think that we're probably bottoming out here. So I think that if you're going to do something, that you would take a shot to the upside. So I want to give myself a little bit of time and go with the May 45, 47 half cost spread. You should be able to buy that for around 40 cents. And that's obviously a pretty good reward to risk ratio, probably in the upper threes there. So it's just very hard to initiate a short position here, even though the chart doesn't look all that good. We're still holding that 42 level. And so if we can get any sort of good news, I think that we have a little bit of bump in this stock.
Okay, we'll certainly be watching. I mean, as we mentioned, it seems to be the cadence of that turnaround story that's just not doing it for the markets and the street right now. Also, the overall performance of the market, I mean, a bit directionless today, Mike.
Yeah, I'm surprised we're not down a little bit more today, or at least exploring the downside and see if the buyers are going to come in. But at least, early on,
who's that talking, bro? Fire him.
A little bit of support here, which I'm frankly kind of surprised about. I think that, I thought they'd let it run a little bit, and I thought that the buyers would come in a little bit lower, but not here.
Yeah, I think some are surprised by the moves in the market this morning and the lack of, because of course we do have oil back over $100. So I think everyone's just waiting for the contours of, what's going to happen next.
Hey, bro, is Sky Q the new oil play, bro?
But so far it looks like the ceasefire is holding, so I think market's taking some comfort in that. Mike, always appreciate it. Thanks so much. Yeah, that's it. Mike Shore, Director of Trading Education.
I woke up, Sky Q had me extra $15, $20 in the account. Of 2 shares too.
Impacting global markets too. Morning. be right back.
Alright, well, y'all already give a thesis on my market. I'm just gonna say we bullish. You know what I'm saying? Until we ain't. From this point is lower. Well, this point is higher. So they in this wedge right here. For this to stay bullish, we need this to stay above 50. I see a breakout soon after this. I gotta go to the bank later on, put some more money in there.
Morning movers, be the first to find out what's shaping early market action.
So I gotta pay my internet bill too.
Futures focus, technical analysis, morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
And I gotta turn these papers in. Let me, I gotta get a hold of my
Stay connected to
assistant.
what moves the market. Download the Schwab Network app and stream anytime wherever you are.
My assistant should have been getting a hold of me, but I gotta get a hold of my assistant.
This is Trading
Tell her
360.
what,
I'm Marley
you know
Caden.
what I'm saying?
We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Welcome back to Morning Trade Live. I'm Sam Bardas coming to you from the New York Stock Exchange. It's time now to take a look at the sectors that are moving markets this morning.
Good morning, everybody.
Very good morning to you, Alex. Happy Monday. So we've got a flat performance for the S&P 500.
About to check this crypto too.
Beneath the surface. Walk us through what you're seeing there.
Hey, all in all, Sam, good morning to you. Happy Monday. It's kind of a relatively strong start, I would say, for equities, given where we opened last night in the futures market. So quite the comeback.
Yeah, everything bounced off that
This is
MMA.
about as unique of a breakdown sector-wise as I
Bitcoin
can
bullish, everything
recall
else gonna be
since
bullish.
the onset of this particular conflict. So really what you've seen is a push-pull between energy and utilities and consumer staples on one end, and then everything else led by kind of high beta technology on the other. Now, embedded within all of this has been the software weakness, but what you have today uniquely is a little bit of relative strength out of the energy sector, not surprising. Crude oil back over 100 both in Brent and in the May WTI contract. You have financials a little bit higher here alongside earnings kicking off. And then you have IT higher. So first I was like, okay, that must mean that some of these more memory-centric chip names are leading. Well, no. You look over, and NVIDIA is a little bit lower on the session. So as you look at the heat map of the S&P 500, you're going to see a big green area. And it's the software stocks, Sam. They're making a comeback today, and it's a much-needed one.
Yeah, and do we know exactly what the catalyst is here, or is it just this sort of short-term money that just keeps bouncing around in this never-ending kind of ping-pong match we're seeing between hardwares versus softwares?
Well, because it's a general move as a sector, there's clearly relief. That said, Oracle's at 7%, almost 8% today, Sam. So I look over at Oracle to begin, and they did unveil a few AI updates that,
this is a great pullback, so
particularly for utilities, at an industry
event.
Now, I'm not going to say specifically that this is the driver, but it does highlight that these companies are still working to solve market needs, and they're doing so with AI technology that is seen as sort of disrupting their spot in the marketplace.
I told you that, market.
I don't know
we're trying to get to them
exactly
kids.
the catalyst, but
We're trying to have a good time too, boy. Trying to teach them everything we know about the stock market and how they're gonna get the bread too.
You see a bounce back in some of
also
need the
talking
market
about,
to hurry
it's
up
going to
and
be
push
another
it up.
turbulent week ahead for technology stocks, saying that the big tech winners are on sale now. And he called out a couple of those cybersecurity names, actually. And as I mentioned earlier today, Microsoft, Salesforce, ServiceNow as well in his notes. I mean, he thinks this whole thing has been a bit overblown with respect to the SAP apocalypse. But that's Dan Ives, obviously, for you. But just walk us through anything else that stands out. I mean, Mag 7 related, I know you highlighted Microsoft, Nvidia, but anything else that sort of catches your attention today, Alex?
Yeah, what really stands out is just how
I need to bring some more of them God candles back
the
out.
Mag 7 is as well. You don't see a lot of bright colors. It's pretty mixed in terms of performance. You got Apple, Amazon, Meta, Nvidia all lower. You have Tesla, Microsoft, Alphabet higher. So about as unchanged as this would be if you were to index it. It's almost perfectly unchanged. It's 1/100th of 1 percentage point lower on the session. So a little bit of a drag today, Sam, on the overall index, but all in all, I think it's really symbolic of the performance you're seeing, which is a very mixed market today that has about 50-50 breakdown up versus down, depending on the index that you're looking at.
You can do it, Shawty. It's your birthday. So that's up there. Shit. Yeah. Early birthday for me. I'm coming, bro.
Regional equities kicking off the week mostly lower as oil was back above $100. Stocks in Hong Kong, South Korea and Japan all tumbling as risk has softened on the news of the blockade. And we're seeing follow through in Europe right now. The German DAX and Spanish IBEX seeing the deepest losses, although off the session's lows now. The DAX just down 0.3%. A big story in that patch was Hungarian Prime Minister Viktor Orban's election defeat, helping the local currency hit a 4-year high and stocks jumping to a record. But the strengthening dollar today is weighing on other major currencies as traders seek relative safe haven. The euro, sterling, the Aussie and the yen coming under some pressure. The Japanese currency once again nearing the 160 mark right now. So keeping an eye on that. It's economically and politically sensitive. The recent yen weakness is fueling inflation concerns in Japan as it raises import costs. Japan's 10-year government bond yield hitting its highest overnight in nearly 30 years. Now, one bright spot in the market today, Chinese stocks over in the mainland, which ended the day higher. Chinese A-shares have shown notable resilience thanks in part to China's energy strategy and AI strides. And shares in Chinese EV makers bucking the trend in Hong Kong today after some solid export numbers. So we are just seeing a BYD up right now in these ADR trades. All right, coming up, it's time for Inside Out, and we'll take a closer look at Citigroup and the beginning of the earnings season and bring you an example trade when Morning Trade Live returns.
But you talking to Frankie now? I don't even know why you even answered the door for it.
Hey, investors, you know the market moves.
You was trying to hang out with her. That's what it really was. It's all good, bro.
Selling, holding, or planning.
Everybody get lonely.
ETFing or 401k, saving, spending, or even
but you just gotta remember,
you can count on
you got a
Schwab
friend
for market insights, live support, powerful trading platforms.
You don't gotta talk to no crackheads.
All at your service, all so you can invest your way. Sounds nice, right?
I'm Alex Coffey.
I just seen a post on Facebook. They said them dudes that be messing with them crackheads, and they said somebody said, "Do y'all girls be messing with them crackheads?"
Clear analysis and forward-looking market coverage every trading day.
This is a make-or-break level for this.
Somebody said, we already know them dudes be messing with the crackheads. Somebody said that the girls be doing it too on a Facebook post. And I was looking at that shit and reading the comments. And the girls was just like, absolutely not. Oh, look at this rejection right at the top. They can't do it, boy. But they try to give us a God candle going down, boy.
Head over to schwab.com/coaching and start learning today.
Look, they want to go fast, boy. They think downward to go fast, boy. Look at that.
Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live. Subscribe free at schwabnetwork.com.
Welcome back to Morning Trade Live. This week
did a 21% ROTE. They beat estimates. They had a record backlog at the end of December, but that's still very strong today. You have the IPO issuance, record levels in a number of their businesses, and then their M&A, which is a huge part of their franchise, just continues to be very strong. So a great outlook from the CEO this morning, and I think that sets the tone for the other investment banking franchises on the street. So we'll hear more from them as the week progresses.
Okay, so obviously that is if you do have more of that exposure to the equities trading as well. I'm just wondering if you're more sort of consumer facing, also thinking about some of the regional players as well. How are you thinking about those?
Right, so I mean, we know that this is pretty significant.
Look at Saudi trying to go higher.
And M&A, and we had a delay as Solomon talked about a little bit. Just
you just hate on Saudi. Saudi going, bro.
On some of that stuff, the pent-up issuance. So that's a really nice hotspot for the overall market. But on the consumer side, I expect pretty good, commentary from the banks in terms of, I think the retail spending's been good. We know that there's been solid refunds, so the average refund up $300 year over year. We did have a decline in consumer confidence, but unemployment has been relatively stable. And credit also at the consumer level has been stable as well. So you put it all together, I think, slow to modest loan growth, and, capitalizing on some of the balance sheets, et cetera, and NIMs have been pretty stable. So a pretty good quarter set up and kind of within the expectations for the full year for the banks.
Private credit, what do you expect they're going to say about that?
So we heard from Goldman Sachs, which is a big player in private credit, over a 30-year history. They actually had net inflows into their private BDC, and they deal mostly on the institutional side. So I think that's kind of the evolution of the space.
You need to start teaching
stress here, widening of spreads, et cetera. They're seeing institutions that are looking to commit more to this space, in contrary to some of the issues related to fraud we've seen in some of the wealth management platforms and more dedicated private equity firms that service those. So, look, I mean, it's going to be a challenging part of the market. There's lots of skepticism, certainly the headlines from the media as well. But, for someone like Goldman Sachs and the way they explained it, this is another cyclical component to credit. They look forward to taking opportunity from it, taking share. And even though they acknowledge that there will be some challenges, they're well positioned.
Right, I haven't had a chance to look through Goldman's call yet, and I'm just wondering if they did touch on anything to do with artificial intelligence. Given some of the banks that we're going to be hearing from this week did have their CEOs meet with Powell and Bessens in DC last week over some of the fears regarding Anthropic, and obviously, just how powerful some of that technology is, scary enough to get at least a lot of them in the room together.
Yeah, so there were a couple of comments related to that. I would just say that first, this was not the first meeting that they've had as bank CEOs. This has been an ongoing process. So this one was more noted, I think, in the media, but this has been a continuous component for the bank CEOs, just talking about cyber risk, AI innovation, et cetera. So they continue to monitor it. Goldman Sachs is spending a lot of money on cyber. They're constantly at the head of some of this innovation as well. They're working with partners in the AI space. They highlighted Anthropic, et cetera. So they're at the cutting edge of this stuff, and they're doing it both defensively for their own businesses and understanding the disruption, as well as advising clients about it as well. And so the engagement around AI and understanding some of the disruptions is a boost to their overall franchises. They provide advice. So there's a number of puts and takes that are going on. But again, Goldman well positioned to understand the changing landscape, as well as take advantage of the advice for clients.
Great stuff, McCrae. Thanks so much for joining us and giving us a little bit of a preview of what's to come this week. McCrae Sykes there, who's the portfolio manager over at Gabelli Funds. Let's trade Citigroup now with Tom White, host of Fast Market. Very good morning to you, Tom. Happy Monday to you. Just walk us through an example trade for this particular name.
Yeah, typically going into earnings, we see implied volatility levels elevated. Doesn't really happen as much for the banks, right? And that's one of the concerns here. The option market's only priced in about a plus or minus 3% move either way in the stock, about $3.70 in either direction. And remember, Citigroup just hit 17-year highs late last week. We're just down barely.
I got my vegetable cereal on the stove.
That takes advantage of some movement. This is a type of position where you want the stock to move more than that one standard deviation. So I look at a long iron condor where I'm going to buy an out of the money going to buy the 127 call, sell the 130 call. They're $3 wide bullish call vertical. So in essence, the strategy is you're buying a bullish call vertical and buying a bearish put vertical as a combination package, a four-legged long iron condor. You're going to pay roughly about $1.30 debit for this position, and it's $3 wide. So that's your risk, the debit you pay on this this position. With, if the stock goes below 118 or above 130, maybe you get that outsized move, it expands to $3. So you have potential to profit $1.70. So you're taking advantage of that probably lower than should be implied volatility levels in Citigroup going into this report with the expectations, hey, it's going to move below that break even of 119.70 to the downside or above the break even of 128.30 to the upside. So looking for an outsized move here. You got 4 days until expiration, so even if you don't get the move right after earnings, you still have a few days left until expiration on this one. But yeah, just taking advantage, thinking that, hey, this stock's had a great 100% run over the last 12 months, and maybe it's due for an outsized move here post-earnings.
All right, this one's set to report before the bell tomorrow. We will be watching. Tom, thanks so much for the example trade. And we do have markets trading pretty range-bound right now. We are 55 minutes or so into this blockade, so we will continue to monitor headlines throughout the course of the day for you. The Dow Jones down 200 points right now, getting dragged down by Goldman off the back of this beat on earnings. Thanks so much for joining us here at Morning Trade Live. You've got Trading 360 with Marley next.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your Investor Checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get
we hold it never folding.
Investor Checking, the checking account built for investors.
Welcome to Schwab.
And while this is moving,
Real-time market coverage meets expert strategy.
hey, what's the ticker for oil?
Closing bell, we've got you covered. Get inside the minds of pro traders.
My point is that they're getting a higher rate of change
But
in
no, it's
sales
not.
based on their guidance, but not the same rate of change on EPS.
No,
The biggest
there's a bunch of oils.
live analysis, breaking news, and sharp trade ideas.
Oil India,
With shows built for action, we break it all down.
oil futures,
Speed, accuracy, and precision.
and they
I
bullish
think
as
one of the
hell.
most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted
Yeah, because I want to see why
streaming
Scott Q is
live
doing
and
this.
on demand. Schwab Network, streaming 24/7, any screen, anywhere.
Because I was telling you about Scott Q, and he was like, fuck that shit.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know
He
if they could
said,
envision it.
look how far it came down.
Literally
And
come
he was
across
like,
the entire
what are they
world.
going to do
I think
now?
that we totally
Look,
get
they
what
started at
this
$40,
is
bro.
for. Schwab has been with us for almost 25 years through purchasing of houses, opening up our business, having children. They've
That's that
always
whole
been
chart
there
right
for
there.
us.
I want to invest
I
with
did.
a company that can help give my family a happy financial future.
Stay connected to what moves markets. Download the
Bro,
Schwab
y'all
Network
hear
app
him,
and get
but he's
live
funny, bro.
coverage wherever you are.
Look, that shit got up here to the target, bro. Bro, this got up here to the target, bro. This trade right here, they called out on my chart. It made it to this target right here. You went on 2K with them?
Excitement around the Artemis 2 mission and the anticipation for a SpaceX IPO. Our 360 Spotlight will take a closer look at the UFO ETF and how space stocks are being impacted right now. Also, Kevin Green will be joining us today for our Disruptor to discuss Intel's price target adjustment at Jefferies and how the adjustment reflects a healthier CPU demand. Also, Goldman Sachs reported earnings this morning and it's trading lower despite a beat. Our 360 round will walk you through the report and what it could mean for the rest of the financial institutions reporting later this week. Lots to get to, but let's take a look at how the markets are faring as we open a new trading week here. The S&P trading slightly higher. We're up almost 0.2 at 68.2866. On the NASDAQ, we're up about 0.25%, 25,186. The Dow lower, way down by Goldman today. We are down about 0.4% right now, 47,720. And the Russell 2K trading more than 0.4 higher at 26.4205. For the 10-year, we are moving higher. We're at 433 on the dollar, mostly level. We're at 98.55. For gold, down 1% at 47.3950. A troy ounce. Crude oil over the $100 mark. We're at 102.48 a barrel. That is up 6%. And Bitcoin still within that same range it's been trading in.
Yeah, I told you that.
We're down about 1 1/3% right now at 72,520. But I do want to bring in our first guest, Alex Coffey, joining us as usual to take a look at one of the top movers today. Today we're going to take a look at a double downgrade here, though, on Best Buy, Alex.
Yes, shares down 3-4%.
I'm about to start giving some for 2 years out now.
You mentioned this stock not only from buy to hold, but buy all the way to sell.
In fact, let me start shopping for them. That probably would have been the best thing to do today. They don't throw the $25. Again! No, bro, they pulling this shit back.
With higher memory costs likely pushing laptop prices up, and then margin pressure risk as consumers continue to trade down to lower priced items. They also talk about potential unit volume declines as manufacturers prioritize fewer consumer electronic shipments, and leads to continued ongoing weakness in that consumer electronics
$400 for the money right
as
here.
well as their appliance business. And they expect that to continue to
For
drag on sales. They also expect negative earnings revisions in the back half of this year. And as a result, they're cutting their price target from 76 to 59. Well, the stock, as you can see, down about 3.25%, is trading at 60. So they see not only no upside, but a little bit of downside. They are a little bit bucking the consensus, although sentiment is relatively cautious with the majority of analysts in the hold camp. There is still more buys than sells with an average price target of $73. So analysts as a whole either slow to react, maybe waiting for those new numbers to get an idea of where they want to ship this. But for now, looking for 73, Goldman looking for 59.
Yeah, and you bring up a good point there, because this is one of the first notes that we've really seen. We've been talking about this memory shortage and it's coming and the impact, but this is one of the first ones we're really seeing where it's citing how consumer behavior is expected to react to that. And also even mentioned that they think manufacturers are going to deprioritize some consumer electronics as well. So, you know, as far as any other analyst calls, this is the first note sort of this kind that we've encountered, right?
Yeah, so not any more analyst calls, but I do have something for you that I think you might find interesting, Marley. So it's alternative second measure data. So it's 3 different sources. Kind of gives you an idea of how Best Buy is shaping up using some of these different measurements versus peers within the industry. Broadly within retail, Bloomberg has a second measure data looking at U.S. transactions or observed transactions. Observed sales are down by their calculations of 8.5% for Best Buy, but for the industry they're up 14.6%. So that's meaningful underperformance. As far as Placer AI, we've had members of their team across our programming before. They like to look at foot traffic. Estimated visits to Best Buy by their calculation are down 1.1% year over year as of the end of February. And then SimilarWeb, they check web traffic. Web traffic for this company is expected to be up about 2.7% year over year as of the end of March, but it still lags industry growth of closer to 6.1%. So 3 for 3 disappointments when it comes to Best Buy.
Well, Alex, thanks for pointing out those trends for us, too. Always second market data can be very useful in sort of anticipating what's coming next. Thanks to Alex Coffey, co-host of Next Gen Investing, for a closer look at Best Buy, down about 3% today. Do you want to broaden things out, though? Welcome a guest who's not new to the show, Patrick Mueller, our friend RFC and president at Bella Advisors. Patrick, great to have you back. It's been a few weeks since we last talked, so I'd love to start by just getting your thoughts on the market action we're seeing as we continue to get developments or a lack thereof
you, Marley. And yeah, we've seen a little bit of a downturn here in the first part of the year, and a lot of that has to do with the Iran conflict. And I don't know that we're going to see any short-term solutions to that. It looks like it's going to be dragging on for quite a while here, so it'll be interesting to see how things play out. But April tends to be a really good month in the market, so it wasn't surprising to me to see a bounce back up here. And I don't think it's going to be for a long time here, but I think for the next week or two,
they're not just cooling down, bro. This is super bullish. They're just cooling down.
And once we get there, though, I think we're going to see a big pullback. I think you're going to see a lot of institutional money starting to raise cash and take profits, and so I think we could start taking another dip down. So I don't think we're out of the waters here yet.
All right, so if we're not out of the waters, Patrick, what's your expectations for earnings season then? Because we're now really about to get into the thick of things here, and we've got a great, I know we've been saying uncertainty now for months, but we have a great deal more than we were dealing with at the start of our last earnings season.
Absolutely. There's so many things that have been heating up here, and so I think there's going to be some type of catalyst here in the near future. Hopefully earnings come out very strong as they're projected to. And but we saw different components of that like late last year with Oracle, but I think especially on the tech front when we start looking longer term, if somebody big not meeting expectations, especially when it comes to the AI projections. There's just been so much money that's been put into that, and a rising tide raises all boats. So when we have some type of catalyst where earnings, whatever's going to set that off, whether it be the Iran war or earnings season, whatever that's going to be, we could do for a pullback here, and
That's me. Can I have a
re-changing. So I would just caution people who are too overweighted in tech right now to be pulling some of those chips off of the table as we have been for several months now. Just kind of
I'm little, bro. I just
through.
So Patrick, as you're pulling some of the chips off the table, are you reallocating them into other sectors, or are you holding it and waiting for more certainty in the market?
I think you was up.
Well, some of the things that we're going into, I like ACYN by First Trust. So that's an ETF that's structured notes where it's currently paying a 12% yield.
Well, you be leaving in the suit too, bro.
With all the uncertainty and everything that's going on,
ain't no way, bro. You can't live over there, bro.
That we can depend on throughout the course of the year, and we don't really have to worry about these ups and downs of the markets. And the other things that I like paying attention to right now is all the reshoring that's been happening with countries coming back from overseas, people starting to do manufacturing back in the U.S., making those pro-U.S. moves because of all the tariffs that's been happening. So we're seeing those sectors really taking off, and longer term, that's a big push for this administration. That's going to be a longer term trend that I think people can start moving into.
And also with this reshoring conversation now, with some of the damage done to some of the facilities in the Middle East, we're having a bigger conversation about the energy play here at home, particularly as it relates to LNG. Are you looking at anything in the energy space domestically right now?
Yeah, I think it's hard to dismiss. And when it comes to energy here in the U.S., things that I like is taking a look at more so where things are going to be driven with AI moving forward. So there's a fund that I like called Grid that has been performing really well, and looking at all the infrastructure and everything that needs to be put in place. And as far as your national companies for oil and gas, then I think you're always going to look at the big players in the market, right? Whether it be Exxon, companies like that are really going to be profiting from this. And we'll see how things go longer term, but shorter term with gas prices and oil prices going up, and then us being such a big proponent now of oil exports, I think that's going to be really good for a lot of U.S. companies.
And as we look at AI, you're certainly not the first person to mention the infrastructure play here, but energy, a huge component of whether or not this AI data center build-out really plays out to be as big as it is expected to be here.
First 2 hours,
what do you think some of the market is missing that I'm not on a daily basis at least having a conversation about utilities potentially being the major winner in this AI rat race?
And they're above 50.
I think it's going to be
so they might low-key try to break out. We ain't even went over 1%.
So you have all your big tech companies that have big facilities here, and we're seeing these big data centers just popping up everywhere. Actually, we get our internet from a data center right next door to us here, which is a nice little perk. But the amount of energy that's going to be needed is just astronomical. And as we're seeing more and more money going to this AI sector, you got to have the energy to be backing that stuff up. And so I think it's a good play longer term until things start maybe souring on the AI side of things, that it's going to be more hype than what is priced for in the markets right now, which is also a big thing to think about, because you have your top 10 companies and 40% of the growth of the S&P last year.
I told you what to do about
from tech.
I told you about what to do with that.
40% of the S&P 500 that finished negative last year, and we're seeing that disparity as we've been going through a little bit of this turmoil the first part of this year so far. And it's really interesting to see how this is going to be played out, because things are so overvalued and so overweighted towards that. Then I like moving towards those sectors, Marley, and moving into utilities.
And Patrick, I'm glad you mentioned the hype, because we've been talking about how we've seen this great rotation and this rotation away from tech. Still not out of it, but certainly a lot of churn under the surface here, some high expectations for earnings as we come into some of those big tech names. How are you working to protect portfolios right now with that as the backdrop? We've got this churn, the rotation, the uncertainty in the markets, plus we've got a new Fed chair coming and uncertainty around that. I mean, uncertainty is just sort of the word of 26 right now.
It sure is. It's going to be an interesting year for sure. And especially as you see oil become, oil prices going up so much, that's going to put a lot of pressure on the Fed, whether they lower rates or they need to raise rates. So that'll be very interesting. But something we do, which is a great question, Marley, how do you allocate stuff? And we use something called the rule of 100. So take your age, and that should be the percentage of your money that's safe and protected from market losses. We don't want to be taking all that direct market risk. And then the remaining percentage, it's okay to take risk with. So if somebody's 50 years old, you should have 50% protected. Doesn't mean we can't get good earnings on it, just like I was talking about the ACYN ETF, right? We can get 12% yield on that stuff, right, while keeping it protected. So that's just a good rule, because it's not if it's going to happen, it's just when we're going to happen. And you just want to make sure that you don't have all your eggs in one basket, in that tech basket. So when things do pop, that we're not getting caught off guard by that.
Patrick, always great to have you on this show. Great insight there. Patrick Mueller, RFC and President over at Bell Advisors. Thanks for being here today. We've got a lot more for you on Trading 360, so make sure you stay with us. We've got the big three coming your way next. We've got 3 stocks, 3 charts, 3 trades for you. Rick Ducat will take us through the technicals, and Achilles Larea Jr. is joining us to take us through his trades for CubeSmart, Firefly Aerospace, and Intel. That's next on Trading 360 on Schwab Network.
Bro, why was going to feel?
Iconic trading floor in the world, this is Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange. The countdown, the setups, the stories that make markets move. Minute-by-minute breakdown of the biggest headlines, earnings, and global movers. Just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right when it counts.
She's got your smile. Carl. Yep, your #1 broker's here to welcome your new little dependent.
Actually, we invest with Schwab now. We have everything we need all in one place.
I can set up her college fund.
I've been learning about trading strategies.
Schwab helped me generate retirement income.
All this Schwab is everything you need is making me cranky.
Does somebody need a nap?
Schwab!
Invest your way with Schwab.
Bruh.
Welcome back to Trading 360. I'm Marley Caden. trades today. Achilles Larea Jr., the founder and CEO over at Larea Wealth Management. Great to have you both with us. Achilles, happy Monday to you. Would love to start with your thoughts on how we're starting a fresh trading week here. You know, a little bit of uncertainty, Dow a little bit lower thanks to Goldman. What are some of your takeaways so far?
Well, inflation seems to be the big problem here, Marty. Thank you for having me, by the way. We're starting to see, as far as inflation, we're seeing that perennial increases in wages and pricing. We're also seeing housing, which was half of the CPI, affecting it. We're also seeing, as far as tariffs, deportation made this situation even worse. And now with the war, we're coming upon even more challenges because it's disrupting the petrochemical industry as a whole. So gas, diesel, jet fuel, and helium. As a helium is you need helium in order to make chips. So this is driving up prices at an unprecedented scale. The longer this persists, we're going to see even more problems towards that end. The other thing I would watch as we're going along is inflation is going to be driven up to about 4%, in my opinion. It could go as high as 4.2%, analysts have been saying, but that's the number we're looking at currently. And also, you want to say to yourself, well, if these prices and inflation are going up, how can we cut rates? As a matter of fact, we're going to have to actually do the opposite. We're going to have to start raising rates if this continues. You know, so once again, wages are not keeping up with the pricing. So imagine you have, home prices starting to go up because it takes fuel to build, get these components to the actual home site. It takes fuel to get goods to supermarkets. So these are things that seem to be raising everything up. We are keeping watch. We also think, with what right now there's plenty of room to make money, but you can't be timid. And here we are with our 3 picks.
All right, well, I'm glad you got there. We've got to have you back on, though, to talk more about that inflation stuff. But since we have you for Big 3 right now, let's talk about your first one. You picked CubeSmart here. They're a storage REIT, so are you bullish or bearish on the storage space?
We like the storage space. If you think about it, the model is incredible. You have a storage space, and every single year, your rent is going to go up 7 to 9%. So you have a nice revenue to begin with because a lot of people keep their storage spaces. They don't get rid of them that easily. So you could be making anywhere between 7 and 10% per annum on a stock like CubeSmart. We feel that CubeSmart tends to be a name that is not mentioned as much as, say, a Public Storage per se, but there's a lot of opportunity there in terms of valuation versus the sector. You're going to face some near-term resistance and consolidation because as the market does, so will the storage spaces, but not as much as per se a technology, and they're not in the AI space per se right now. Everybody's loving this AI thing right now, and that's cool. We love it too. But we're looking at about 10 to 12% in an 18-month time period, but not without strife. We're going to see some problems in every name. I would not be surprised, but we're right now, I think, in an oversold condition. So in terms of the near-term resistance and consolidation, yeah, we're going to face some, but not as long. And once again, depends on how long and protracted this conflict is.
All right, Rick, so as we look at the technicals here, are you seeing oversold for Cube or potential near-term resistance?
Well, we have seen a nice bounce so far, and this is a REIT type of name, not really known for big swings, so maybe these may look more
day in teal, our 63-day in gold. All of those come together very close to the 38 level. So that gives us a notable bunch of confluence points to watch out for here. Lines up fairly closely with our trend line as well. Meanwhile, our 250 one-day EMA in orange, our long-term yearly EMA, comes in near 39.60. RSI trending upward here. We are on the verge of perhaps breaking through this trend line here, so watch to see if we slip below the 50 midline. So finally, our volume profile study. Not really a lot of clear, distinct small nodes here. More general areas of heavy trading activity. Most notably here, our point of control coming in just shy of 40, so that could be a potential slowdown area to watch out for. A bit of a gulf between 41 to 42 as well.
All right, CubeSmart right now just trading marginally lower on the day, down about 0.8%, but like Rick mentioned, up about 5% so far year to date. Let's take a look at your next one here. It's actually a good setup for our next guest here. You're looking at Firefly Aerospace. Take me through why this is the second pick in your big three.
Yeah, we actually missed the boat on this about a year ago. I was looking at this a year ago. I held off on it, and I usually don't hold off on these type of names, but we feel that there's plenty of inherent value in the stock. We're looking at a 12% move to the upside in the next 18 months. We feel that versus the sector, you know, there's a lot of potentiality in terms of the stock. Could make you some decent money in a short period of time. Maybe that 18-month is being super conservative. Maybe it's not. But compared to its peers, unless there's some big pullback in the sector, which we don't see currently, we're going to make some decent money. We also think that just like its peers, good, high-quality company to be added to the portfolio long-term, and you should do well with this. The last thing is that there may be a correction in the sector as a whole, or some sort of consolidation, but we're not high on that at this particular point, but we have to point it out. We think that there's still plenty of room to run on this. We're not backing up the truck yet. We are accumulating the stock.
All right, and Firefly, a really interesting company right now in terms of talking about Artemis 2, and they have lunar launch and orbital vehicles here. So as we look at Firefly in terms of a technical setup, Rick, and obviously a lot of hype in the space with the SpaceX IPO being mentioned as well, you know, what are we seeing here?
Yes, exactly. I was kind of thinking the same thing. Very much renewed interest in just space exploration in general. One of those charts where we look back at gaps and notable horizontal levels. First, we saw some highs here and corresponding lows here. That matches up with 49.25 and 41.50. You can see 41.50 is where we topped out recently. To backtrack once more, another gap here. A low point that we saw came in at 34.50. That was another high point there. So these levels could stand out going forward here in the shorter term, but for now, an upward sloping channel type shape between our two white lines is the prevailing theme. So not quite a full year of trading activity to go with yet. So in this case, I'm pivoting to our simple moving averages here. You can see that our shorter term 20-day simple moving average are pretty notably below current price activity, only coming in around the 29 level. RSI remains overbought here, above the 70 threshold here, but our green trend line seems to have been broken. Look for, if we do get a crossover below our 70 threshold and also below our trend line kind of at the same time here to show a bit more of a bearish type of signal here. If you did have a bullish outlook still, that would when you would be starting to look for a point to buy in during the pullback. So when we look at our volume profile study, a couple of smaller nodes to consider here. One between 37 and 41 is where we find ourselves right now. Not a ton of trading activity then. Things really start to pick up around 30 then as well. We have our point of control near about 24. To the upside, 45 to 46 or so. That's where the most other notable pocket of trading activity is to the upside.
All right, and Firefly, you know, you mentioned doesn't have a year of trading under its belt, but just in the last month, up 64%, as the markets are definitely taking a closer look at this space sector. But let's move to your next one, and Achilles, I'm going to talk to Kevin Green about them in a little bit in this show. They're our disruptor today. We're talking about Intel here. Got an upgrade this morning, trading more than 3% higher right now. What's your take on Intel?
Well, Intel has always been interesting to us, but lately it was kind of boring. So we've seen U.S. government investment and more interest, more institutional interest year over year in the stock. We think that the stock could easily go to 11 to 12% in an 18-month time period, although we feel that is conservative. The big thing here with Intel is that you want to own this as a complement to your NVIDIAs and your other, and it's kind of funny to say that considering that it was the dominator quite some years ago, and all of a sudden they're becoming relevant again. And we feel that's a super positive, and there's still money to be made. A lot of inherent value in the stock. We don't see any big things in terms of consolidation or near-term resistance to stop this from going up in the short term. But this should be, like the other names we mentioned in the chip sector, should be part of your overall strategy. So just like your NVIDIAs and Taiwan Semiconductors, Intel has to be part of a high quality portfolio. You don't have to own more than a certain percentage. You just keep it within reason. And that doesn't mean 20%, by the way.
Good point. And Rick, as we look at Intel, Achilles doesn't see any potential for near-term resistance coming up here. But as you look at the technicals here, are you seeing any levels that you're keeping an eye on?
But yeah, mostly to the downside here. The gap right here is where I would highlight to the downside, matching up with first our old high point here near the 5460 level. Then our gap began around 5327. Very steep trend line here in white, still in play here, continuing to make new highs. Our old channel type shape here between our two blue lines has been long ago broken with that big gap to the upside. So now we can see as well that our 5-day EMA in blue, 60 roughly is where that one comes in here, so that could be a short-term breakdown point to watch out for. We can also see that RSI, while still oversold, much like our last chart, has pushed beyond our green trend line here. So look for that to also coincide with a break below our trend line if we do slip out of that overbought area. Finally, our volume profile study shows most of the recent trading activity lines up with this range-bound period between about 49 to 44 or so. Not really a lot of significant volume beyond that level to the upside here. So a pullback to that level would be notable because that's where many established positions could reside already.
All right, as we take a look at Intel, as Achilles mentioned, was a bit of a quiet name for a bit there, but no longer year-to-date up 75% for Intel. Achilles, thanks for being with us today for the Big Three. We'll definitely have to have you back to have a broader conversation, but we appreciate your picks today. Achilles Larea Jr., the founder and CEO at Larea Wealth Management, and of course Rick Ducat, our lead market technician, for always being with us. Coming up next, we are going to spotlight the latest in space explorations as Artemis II returns home this weekend and how that's impacting space stocks. Next.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Morning movers, be the first to find out what's shaping early market action. Tech Check, Options Corner, Futurist Focus, Technical Analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Schwab coaching is concepts brought to life in the real world.
It's absolutely world class. We have coaches who have been in the industry and around the industry for a long time. We have different formats because people learn
All day, every trading day, we've got events that are making their way around the country.
So you get that opportunity to share experiences and knowledge with other traders.
How incredible was that? And it's free.
Stay connected to what moves the market. Download the Schwab Network app and stream anytime wherever you are. Welcome back to Trading 360. I'm Marley Caden, live in our Chicago headquarters. It's time to spotlight space stocks. Artemis 2 returning to Earth this weekend. Lots of excitement around a potential SpaceX IPO and how the market is responding. Joining us now to take a closer look, Andrew Channon, the CEO and co-founder at Procure AM. Andrew, thank you for being with us today. You know, a lot of hype around space right now, space exploration, and all of the companies tied to it. You know, as we talk about SpaceX, I think that's a primary driver here and a good place for us to start. It could be one of the biggest IPOs we've ever seen. How transformational do you think that could be for the overall market, not just for these space and aero defense names?
So we've been hearing from index providers around the world, which is in many cases how a lot of investments tick, and they're looking at potentially rewriting their index methodology guides to handle potentially an earlier entry of a potentially newly IPO'd company into their indexes. Many times you have a waiting period and a look and see, and we're hearing companies from around the world that develop these various indexes, including technology-focused ones as well as broad-based ones, are looking at finding ways of potentially including a company like this earlier than normal. So that alone shows how important such an event as an IPO of SpaceX could be.
So if we're looking at rewriting the rule book just to get in early for SpaceX for some of these investors, do you then say that there is an expectation that this will become the largest pure play space company nearly immediately? I mean, potentially overnight? Or are we getting a little bit ahead of our skis here?
This is a company that we're talking about, potentially being over $1.5 trillion in market cap. Although the float offered at IPO might be significantly lower than the overall market cap expectation, this is a company whose market cap at those levels would be larger than the annual global space economy at today's levels. So we're talking about a major impact. But this is a company that many people have been inquiring about investing in. It's been very difficult to get pure play direct exposure to it. Many people looking to utilize potentially costly SPVs or other ways of getting some exposure to it. And this would be a way for retail investors to get truly direct exposure. So to the extent that there was a large buildup of demand for many players, this might be their first way to get that exposure. So I think a lot of people are looking at this from the media perspective, from the investment perspective, and what this could do for the overall space industry as far as bringing more investment which could be one of those uses of that capital raise at IPO.
And so how does that then reshape the competitive landscape in this space? If its market cap is going to be bigger than the whole of the industry as we know it right now, how does that affect the other companies and the inflows we see into the space?
So that will certainly be determined in the future, but this is something that, if you have such a large company, it could be a major competitor, but it already is, even as a private company. That said, there had been talks towards the end of last year that Sam Altman was looking to create a rival to SpaceX, and he said that he would do so by either building, partnering with, or acquiring existing space companies. To the extent that SpaceX says, hey, we have more cash and the ability to acquire those companies to block out a potential emerging threat, that could be one use case, or pulling forward investment in certain areas like orbiting data centers or other areas that we're starting to see some significant investment interest in. These could all be uses of proceeds. Now, for other companies, what we've noticed is that for some, just because SpaceX is doing well doesn't necessarily mean that it hurts those companies. SpaceX, you have to remember, is the pioneer of reusable rockets. So the significant amount of reduction of cost to access space is something that SpaceX helped provide, and for companies that need launch services, their ability to continuously reduce the cost of accessing space could be a driver for other companies. So it's not necessarily a one company wins all. In is, we have companies that build out infrastructure for space that can benefit that company, but also in many other cases benefit other end clients.
So we've been talking a lot about investor demand in there and it moving into the space. So I want to talk about your ETF, your space ETF. UFO is the ticker here. I was just talking to my last guest about Firefly Aerospace, which I think is still a part of your ETF here, and just the massive move we've seen into this sector. As far as that surge in investor demand that we're seeing, how much of that is tied to the SpaceX IPO versus Artemis 2 launching and the excitement around that? Or is it more just broadly tied to space still being the new frontier, even though that's been a line for decades now?
So it's difficult to tell exact percentages of where the interest is coming from, but for us, we've been seeing inquiries from investors, small and large, as well as even foreign companies and foreign investors looking to get exposure to the global space economy. And UFO is a global fund, so we have roughly 50 publicly traded companies from around the world, and space is also a truly collaborative and global industry too. So it's an interesting representation that our index providers have been able to capture, but this is something that is drawing interest, I think, from all pockets of investors, of space enthusiasts, and it's something that we had seen maybe several years ago during the pandemic, where there were a lot of retail investors starting to look at different momentum stocks, and space had been a hot area. It also was one of those heavily invested in SPAC target areas, and we saw some kind of post-SPAC areas where people didn't want to necessarily touch those de-SPAC names. I think a lot of that kind of SPAC contagion has worn off, and we're starting to see companies get priced based on their own merits as opposed to what the broader SPAC economy was doing. And so, hopefully we've built out a more fertile kind of foundation for the space economy to grow. But we've also seen many different drivers out there, including the militarization of space, which has been now deemed by all global superpowers as the strategic high ground for military conflict going forward. So space is already a vital area of our economy, as well as national defense and security. So it's something that deserves to be in your people's focus today.
Sadly, we have to leave it there, Andrew, but definitely going to have you back on because there's lots more to cover in space, and of course with the SpaceX IPO impending, you'll definitely come back to the show, I hope. Thank you so much for your insight today, Andrew Chanin, CEO and co-founder over at Procure AM, their ticker UFO, up 141% in the last 52 weeks. Coming up next, we've got the disruptors. We'll be taking a closer look at Intel after getting a price target hike over at Jefferies. Markets, the Schwab Network.
Tune in 24 hours a day, 7 days a week on SchwabNetwork.com
and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Netflix earnings will be key. Nike got another downgrade. Also, CoreWeave has just been an incredible name with more and more deals. Is up about 32% this month. So that is the big picture. The home sales came in. And Marley, I'm sure you weren't surprised to see that, that number dropped 3.6%. The forecast was just for minus 0.7%. So the number of homes sold fewer than expected because the housing market is still struggling in the big picture. Marley?
Yeah, certainly the housing market continues to struggle without any sort of fix to the affordability crisis. But I want to talk about Starbucks here and pivot and take a closer look at one of the upgrades we got today. We got several notes today, but Starbucks got a nice upgrade. Not seeing a move to the upside too much, but can you take us through the note?
You know, it was interesting. Over at Jefferies, they put a $92 target up from 86. Look, that's still lower than where we are. But some of the language was some good news. It was just talking about the big picture here, less exposure to China. I know they recently made a deal with Boyu to have more capital holdings. Boyu now has 60% of the China business, and Starbucks has 40%. So really now surging here in the United States, also having 90 initiatives to try to cut costs overall, maybe cut $2 billion in costs. So they put now a hold from an underperform. The company has invested $500 million in labor, and the vision maybe is a little more clear when it comes to how they're going to execute things. They've also doing things like expanding tipping and bonuses for barista pay, so people are maybe seeing some of the same faces. They're getting rid of some other less performing stores. They also continue to expand in cold brew and protein and things like that. What I did think was interesting was RBC last month did talk about the young folks and the competition from the likes of Dutch Brothers. Will all the investments that Starbucks is making in hopes for a turnaround, will that really still hit the young folks, which are much more online oriented, which do drive things like Dutch Brothers? And so RBC was a little more hesitant, and they had a hold rating. Marley?
Yeah, right now seeing Starbucks down about 0.5% at 96.08. Nicole, thanks for breaking down that note for us. Nicole Petalini, it's great to have you on the show. Now it is time for our disruptors. Kevin Green, our senior markets correspondent, here to talk about Intel today. We had Intel in our big three today, KG. We've got Intel. They also got an upgrade today from Jefferies. Jefferies released a lot of notes today. To start, can you just take us through some of the sentiment around Intel right now?
Almost 3.5% for today's session. It's going for 9 consecutive days in the green here. So some buyers have really stepped in on a lot of optimism when it comes to the CPU business, and that's why we are seeing Jefferies raising their price target on the shares to $60, and that's up from $45. Now, they still have their hold rating on the shares, but they do see a healthier server CPU market here in the near term, which is going to be a tailwind for Intel. They also mentioned the fact that they have pricing power and the ability to expand margins here because of the high demand as well as the lack of supply when it comes to certain memory chips, which they're able to kind of pad that supply shortage, if you will, and they're able to pass that off to their potential customers, and that's what's also going to be able to backfill their business. Now, we kind of talk about this artificial intelligence space, and obviously when it kicked off, we were looking at NVIDIA and it's the GPUs, but the CPU market is actually a little bit larger if you're looking at the tangible addressable market, but it's just been a little bit slower in order for it to actually catch a little bit more traction. Intel's trying to really capture that market. Seems like they are getting a little bit more enthusiasm here for today in the last couple of trading sessions. And we also know that they have the tailwind of the administration at their back as well, which has been supportive for them and really gave them the initial boost or shock to the upside when we saw the U.S. government invest in the company last year.
Yeah, certainly. I mean, and then they've got their expanded Google partnership announcement, involvement in TerraFab. Those are just recent headlines. Shares up more than 40% just in the last month, and we are only 10 days away from their next earnings. So, KG, as you're looking at Intel and all of its consecutive days in positive territory, year to date really outperforming the market overall, how might you structure an example trade here?
Well, if you are a shareholder and you're concerned about maybe a pullback to the downside, or if you're taking a little bit more of a bearish stance, if maybe this run that we've had, maybe we do see a little bit of a pullback, especially for the fact that we do have a gap between this $53 level and $55 level. Actually have a little bit more of a hedge trade or a bearish trade, but put, selling the $50 put, doing this all for a debit of $1. So the max loss on this trade is going to be $100, with a max profit potential up to $400 and a break-even point of $54. Now, obviously, you need the stock to move. You're going to have to move below that $54 level in order for you to start seeing a profit. But this could be, once again, a little bit more of a hedge if you're long the shares and you're concerned about a small pullback, or if you are looking for that reversal. This is a trade that's going to pay out around 4-to-1 reward to risk ratio here if you are able to see those shares go below that $50 level at the time of expiration, Marla.
All right, and right now, as we're looking at Intel, we're at 64.70, but again, a more than 3.5% move to the upside, thanks to that note and some of those tailwinds that you mentioned. Kevin, thanks for being with us for Disruptors today. I'll talk to you again later today. That's Kevin Green. Coming up next, it is time for our 360 round. We'll be taking a closer look at all the financial earnings coming our way, as well as Goldman Sachs, which we got this morning. Stay with us.
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren, planning for their college educations. Someday it'll be their turn.
This is Fast Market, built for traders who want more than just headlines.
We walk you through trade ideas with structure, risk management, and a focus on execution.
From options to earnings to volatility plays, we bring decades of trading experience to every segment.
With real-time insight across products and sectors, we deliver what active traders need to stay ahead. Fast Market, weekdays at noon Eastern, live on Schwab Network at schwabnetwork.com.
Welcome back to Trading 360. I'm Marley Caden. It's time now for our 360 round. For that, let's bring in our panel to take a look at bank earnings kicking off this week. Joining us now, Pierre Boulay, the Managing Director at global consulting firm SSA Company, and Stephen Bigger, the Director of Financial Services Research at Argus Research. Great to have you both on the show. Pierre, let's start with you. We got Goldman this morning. They had a beat on the top and bottom line, but I was just looking at them. We're down about 3.25% right now. Can you take me through some of your takeaways from the report here, and why you think we're seeing this move to the downside?
It's interesting. I mean, for Goldman, and I think for all the banks this week, we will see very good results, record results in many ways. At the same time, we have a lot of dark clouds that are in front of us. Specifically, there are risks around potential stagflation, 25%.
They like slowly,
the market doesn't feel 100% comfortable at this stage about the growth of pharmaceutical plants. They could be greatly affected on their earnings in the coming periods.
And Stephen, if you take a look at Goldman too, I mean, is this a case of good but not good enough? Why are we seeing this reaction?
Well, I think a couple of reasons. Yeah, there is some concern. Obviously, the longer this the conflict goes on in Iran, the more corporate boards will be hesitant to make big moves. So there is that. I do think the results were pretty strong. And also keep in mind, I mean, Goldman Sachs is up 80-something% in the past year. It's actually done very well over the past 4 weeks when the market has not. So I think there was a good head of steam coming into these results, and the expectations, at least, that at least on the volatility side, what helps trading volumes, on the fixed income issuance side, very strong. Even investment banking at large was pretty healthy here. So I'm not reading too much into today's bit of weakness in a down market.
Pierre, as you look at the space on the whole, what are your expectations for the earnings we're going to get this week?
So the earnings will be good this week. There is no question about that. I mean, if you take JP Morgan Chase will come with no surprise, I think, this week. CD and Wells Fargo continue to operate and recover very well. Bank of America as well as Morgan Stanley, I think, will have very positive results. Wells Fargo is continuing to do well as well. So overall, the earnings should be very healthy this week.
And Stephen, are you in agreement with that? Are we going to get healthy earnings across the board this week?
I expect so, yeah. We look at bank earnings up probably 15%
some lending categories. With prime rate down, corporates have gotten more interested in debt issuance at these levels, so that helps. Net interest margins also benefiting here. We've had a bit of a steeper yield curve in the last 6 months. That's beneficial. So the lending businesses are, in a good position, and no surprises on loss provisions either. I think credit quality is going into the quarter pretty strong here. We've got pretty stable unemployment trends. That's a big influence on net charge-offs and therefore credit loss provisions. So probably no surprises there. And again, this capital markets cycle continues on the upswing. So I think we'll see good results not only this quarter but going forward.
And Pierre, Stephen just highlighted, credit looks stable on the surface here. What are your thoughts there, especially as we're seeing, banks like JP Morgan Chase and Wells Fargo building their reserves?
No, that's exactly the point. I mean, clearly they are very well positioned on the current level of reserves, and they are building reserves, which means they are expecting effectively a downgrade or some worsening with regard to credit worthiness in the coming few months. They tend to be very conservative in their approach, and therefore they are beginning to provision, which tells us, again, as I mentioned before, there could be some clouds on the horizon.
And Stephen, with Goldman today, we saw equities trading as a big standout in terms of the numbers here, and the expectation seems to be pretty heavily across the board that there will be strong trading and investment banking numbers. But my question is, how sustainable is that beyond this quarter if we start to see some of this volatility cool down in the markets?
Sure. Well, these investment banks and global banks can live and die by trading in a certain quarter. So, yeah, it does feel unsustainably volatile here. So I don't think these results are necessarily what I would book into the second, third, and fourth quarters here. So I think we will get some calming down. But at the same time, banks being as well hedged as they are, when that does pull back a little bit, then the investment banking will likely pick up because may not be the all clear single, but it will be at least corporates and institutions saying, okay, now is the time. Maybe we're backing off this volatility and let's get to work on financing and more deal activity.
All right, and Pierre, we're starting to run low on time here, so I want to make sure I get both of your thoughts on who's the best positioned coming into earnings right now. Who are your expectations the highest for?
Clearly, Goldman and JPM continue to be the fortress banks. The other ones which surprise us nonetheless. I mean, if you see CD will go up significantly. I mean, a lot of them will do well, but the strongest ones remain JP Morgan Chase and Goldman Sachs.
And Stephen, same question to you. Who's best positioned right now? What are your expectations for this week in terms of who the best performer will be?
Well, I think likewise, we're looking at the Goldman results here. Will probably show that the Morgan Stanley results are going to be pretty strong. JP Morgan Chase as well, and I would expect even a Citigroup to do a bit better in this environment also. So really the large global banks have the upper hand here. We've been looking for and waiting for some recovery in regional banks, and I think the lending environment is there, but they just don't have the kind of leverage from the capital markets that these large global banks do. So I think that's where the excitement this quarter is going to remain.
Well, it will be an exciting week as we kick off earnings with the banks, but want to thank you both for taking a closer look with us and previewing them. Pierre Boulay, the managing director at global consulting firm SSA & Company, and Stephen Vicker from Argus Research. Also want to thank all of you for being with us today on Trading 360. I'm Marley Caden. You can download the free Schwab Network app in the Apple App Store. You can also tune in 24/7 on SchwabNetwork.com. Stay with us. Fast Market is coming up next.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors. constantly. It's relatable, it's practical, clear, understandable, and hopefully entertaining.
Take it for what it's worth, but I think it's absolutely world class.
Schwab coaching is actionable, individualized, community, growth, and empowering.
It's really a human touch with your investing.
We have coaches who have been in the industry and around the industry for a long time.
So the nice thing about Schwab coaching is that clients get access to 9 different sets of expertise.
We want to engage with you and chat on the shows we host. We want to engage with you outside of the classes we host.
A consolidation that could add to this trade. So we shall see.
We have different formats because people learn differently at different times.
Somebody's a real bookworm, we've got courses for you to learn from. They can dig in, go at their own pace.
We have webcasts running through YouTube all day, every trading day.
We've got this ongoing 24, 25 times a year events that are making their way around the country. So you get that opportunity to share experiences and knowledge with other traders.
They're kind of helping each other learn step by step along with the education that we provide them as well.
We're going to be able to help you regardless of where you are on that path of education.
It's really unique, not just that it exists, but that you can tap into 30-some hours worth of it each and every week. How incredible is that? And it's free.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are. Welcome to Fast Market here on Schwab Network. I'm Diane King Hall. Coming up on noon Eastern here at the New York Stock Exchange. And trading activity has been range bound today as investors monitor ongoing tensions between the U.S. and Iran. Let's get into a check of your scorecard as we hit the lunch hour on Wall Street. The S&P 500 just above the flat line right now. At the top of the leaderboard, no surprise here, is energy. It is followed, though, by information technology. Energy, we're continuing to watch crude oil prices tick higher. We're sitting above $102 a barrel right now. The Dow's taking a step back, off by 0.5%. NASDAQ 100 better by a little bit more than 0.1%. Russell 2000 has a gain of a little bit more than 0.25%. Here's the roadmap for today's show. It's a big week for the banks. We'll look at example option strategies for JP Morgan Chase. It's got earnings due tomorrow. Plus, the team from Lightfolio will be along with new sentiment data on Best Buy. And Citigroup is also on our radar today ahead of its earnings. It's been an outperformer year to date. Now that we've got the roadmap for today's trading action, it's time to bring in my co-host. You've got Tom White in our Chicago studio, and Kevin Eakes joining us live from the CBO. As you know, we've got you covered from exchange to exchange and beyond. All right, oil still in triple-digit territory. You guys, although we're kind of off the highs of the session, Wall Street trading in this narrow range today. It seems like investors are trying to read the tea leaves in the aftermath of these broken peace talks between the U.S. and Iran. You've got President Trump posting on Truth Social about, kind of, it seems like what has happened, what comes next. Tom, your thoughts when you look broad strokes across the market today?
Yeah, pretty powerful comeback from, we were down over 1% when futures opened up on Sunday night with this, the fact that J.D. Vance and his team left Islamabad and basically didn't have anything set in stone. Now there were some conjectures in there basically that they weren't willing to give up uranium enrichment, but then the New York Post comes out today and says that Iran is willing to give up that enrichment. So it's headline-driven moves that we've seen in the equity market. This comes off the back of the best week for the major indices since November. So we've had a little bit of a reprieve from the downturn here, but to see the market kind of claw its way back to basically unchanged at this point, pretty spectacular. I think the market should be thanking those software stocks that took it on the chin last week, down more than double digits as far as a percentage basis in CRM, Palantir, ServiceNow, Snowflake, and others. Those are all the winners here today. And that's probably, we're still going to be driven by headline risk at this point. China's just come out recently with stating that, hey, they have a trade deal with Iran for their oil. Nobody better stop our crude oil from getting through the Straits of Hormuz. So, yeah, there's he said, she said rhetoric on both sides here, Diane, and hopefully we'll get some type of resolutions. Right now, the ceasefire still in place, but will that change? It seems like crude oil's ready for the worst, but equities are a little bit more optimistic at this point.
It does seem like that, right? When we look at crude oil prices, that's telling one story. On the flip side, equities are telling a different story. Kevin, your thoughts?
You know, I think the market, that Tom's right. I saw it down 1.2% early evening last night on the E-mini futures. They've come back, I think, because I think the market is starting to interpret several things. And one of them is there's less and less impact from these headlines. I mean, think about it. The headlines of a breakdown over talks over the weekend, and the VIX currently sits right at 20. It was 31 a short time ago. So you're getting less and less impact from these headlines. Also, I think the Trump administration has found something that they can really pressure Iran on, and that is the Strait of Hormuz and this blockade. Why? What Tom mentioned, it brings China in. China buys 90% of the Iranian oil. And by the way, they buy it under market value. They buy it at a pretty good discount. So if they've got to go to the market and buy fair valued oil, that brings China as a big player in this. And they could pressure Iran. So without any boots on the ground, just through pressure in the Strait of Hormuz, they could put pressure on Iran. I think that's why the headline that Tom talked about of them willing to give up enrichment, that's the key thing here. And I think that overall tension coming down, not showing up in short-term crude oil prices yet, but the stock market is starting to look past this. Why? Because I think the Magnificent Seven stocks are all so beat up that they're all starting to become, the bar is going to be low going into the end of this month. I think people are making some moves here to buy this dip ahead of first quarter earnings season. I think it's fascinating what's happened since the market opened, Diane, Tom.
Yeah, I guess some investors don't want to get caught flat-footed if this is like April of last year. Tom, let's talk Goldman. Those shares are under pressure. That hasn't changed. They did beat expectations on both the top and bottom line, but you flagged one segment in particular earlier. What's your take when you look across Goldman?
Yeah, pretty good report across the board, beat on top and bottom lines here. And then if you look at the growth rate that they had within specific segments of their industry, the profit climbed 19%. You look at investment banking fees up 48%. Now, they expected that to be pretty robust. Remember that wealth effect was built into the first couple of months of 2026 where they expected those numbers to be good. Fixed income operations revenue fell 10% to just over $4 billion. That came in light by about $900 million. But I think one of the keys here that you look at the different segments that are doing well, besides investment banking fees, equity trading rose 27% to just over $5.3 billion. That was about $400 million more than anticipated. But if you look at their asset and wealth management, those grew 10% to just over $4 billion. So good segments within this report. That one, the one fixed income kind of weighing down on the stock. But remember this, guys.
Wow.
The stock was already up
pretty
significantly over the last 12 months. Maybe this is just a little bit of selling pressure on maybe profit taking at this point. And remember, this quarter, most of the quarter that was just reported was built in before this conflict started. What is that going to do moving forward from some of these segments that had pretty good numbers? But it sets up well for earnings season so far as the financials go moving forward, whether it's the investment banks like Goldman, Morgan Stanley, or the money center banks like JP Morgan, Bank of America, and Citigroup, and Wells Fargo. So, yeah, setting up pretty well, but I think this was expected, maybe just some profit taking here out of Goldman Sachs, just because of the run-up that we've seen over the last 12 months.
Yeah, and then the CEO
was the first bank to come out with earnings, and fixed income, currencies, commodities. That was the miss. The question now is, as we get into JP Morgan, Citi, and Wells Fargo, is that going to be similar to what Goldman does? Usually, Morgan Stanley is the one that shows the most comparison with Goldman. Wells Fargo, Bank of America, JP Morgan, all a little bit different, but we'll see if fixed income, if that part of this weighs on all these earnings. Remember, they usually move in a group. Citigroup might be a little bit different because they're coming out of a restructuring, but not a great start to earnings season. If you want to know why the Dow is down with the other markets higher, it's the Goldman Sachs effect on the Dow. But Tom's right. Stocks had a great historic move up. So when the bar's high, any one weakness like FICC did there can hurt the stock, and it did.
All right, guys, let's talk home builders. Evercore ISI turning more constructive on housing. They're upgrading Pulte, Toll Brothers, Masco, saying the bad news is likely priced in, and the home builders have hit a historic buy signal. But it doesn't seem like the market is buying it.
Yeah,
When you look at
Pulte,
Toll Brothers, Tom, your take.
Yeah, they said they don't see any near-term catalyst to help out this sector, and maybe the downside's limited here. I mean, we've had pretty significant pullbacks from 52-week highs in a lot of these home builders. And if you look at, maybe a 1 or 2 year chart on a lot of these names, it's been a roller coaster, and this is probably due to the fact that, hey, interest rates are still elevated. You got that 10-year yield. It's not the 30-year mortgage rate, remember that, but it's tied into it. 30-year yield, 4.33%. Until we get back down to maybe 4% in the 10-year, you get that 30-year fixed mortgage rate back under 6% at this point. We've been in like a rolling kind of roller coaster recession in the home builders, and maybe they should be. They've had to give incentives on some of their sales. You still have that affordability issue at this point. If wages start to crack here a little bit, we've seen pretty good wage numbers over the last couple of years. If that starts to crack a little bit, maybe you look at the jobs market. If that starts to show cracks, even though that's kind of consolidated at about 4.3% for the unemployment rate, it seems like it'd probably be a good idea to say, hey, maybe the bottom's in a lot of these names. But at the same time, we all know this is going to be based on where interest rates are, and it's going to be based on affordability, consumer spending, and savings rates. So you have to take a look at all these different silos when you're kind of assessing them. Now, we all know the valuations on these home builders are low, right? Historically, they're typically low just due to the cyclicality within this sector. So you got to take that into consideration also. But I've been pounding the table on it, guys, and I'll say it again until we see those 30-year fixed mortgage rates getting under maybe 5.5. It's going to be probably fits and starts for the home builders.
You have, and listen, that's what some of the economists that we've talked to have said about this year, that this year you would start to see some incremental improvement. Kevin, what's your take when you look across the home builders?
I think for Evercore, this is a great second half of the year bet to put on because interest rates, 30-year mortgage was below 6%. Now disruptions and everything going on has raised the 10-year yield, which has then raised mortgage rates up. I think last week was 6.57 for a 30-year mortgage. That has halted all housing, and it's basically hit these home builder stocks. Now, if that is short term, then these are going to turn out to be a great buy. Kevin Warsh coming on in May as the Fed chair, he's targeting interest rates lower. And so if those interest rates start coming down, housing is going to be maybe a good place to be in the second half of the year because, remember, that is a big goal of the Trump administration. Get interest rates lower, make housing more affordable, and get that part of the economy moving. That has been dead for quite a while. So I think it's a fair bet for the second half of the year.
All right, let's talk Nike. Another day, another downgrade there. HSBC reducing its view on the athletic wear maker to a hold rating with a $48 price target. To put that in perspective, that is all the way down from 90. Tom, your take?
Yeah, not surprising. This turnaround story out of the CEO, Elliott Hill, is taking a lot longer than maybe Wall Street wanted. recession hit 12-year lows. It's not good for investors in this name. It's been a falling knife for the last couple of years. You know, they've got some segments within their business that are picking up, maybe North America sales, but you look at China, you look at their Converse brand, those have been lacking and actually losing market share to some of their competitors. And we've mentioned this in these discussions about Nike. This isn't just you know, a macro theme or maybe tariffs are hurting them. It's competition also that's come into this space over the last several years that's taking market share. Their innovation's been lacking. I mean, these are all the things that Elliott Hill continues to kind of pound the table on, that, hey, this is taking longer than we thought, but we're on the path to correcting a lot of the issues. Well, the stock is telling a different story over the last couple of years. And, you know, you wonder, after the downgrades post-earnings, Piper Sandler downgraded them last week. Others have been cutting price targets here. Valuation's really getting inexpensive, right, compared to the historicals on Nike, but is the bottom in? And I think that's what a lot of investors are questioning right now because the stock has just been pummeled.
Kevin, your take.
Excuse me while I rant here, but this is why we don't trust analysts. Think about what just happened. Friday, with Nike down, you know, close to where it is right now, the stock's barely moved today. They had a buy rating and a $90 price target. And today, after this big move that Nike, you look at the chart, now they lower it to a hold and a $48 price target. This is why you shouldn't listen to analysts very much, because that is probably a recommendation or a downgrade that's not going to look good in a couple months if this turnaround starts to happen. And Rory McIlroy won the Masters. He was Nike from head to toe yesterday, and he won the Masters. And today you downgraded. This might not look good in a couple months, guys.
All right, we shall see. Right now, it doesn't look like investors are in on this one. We'll put a pin in it. We've got bull versus bear coming up. The guys get their example trades put together for JP Morgan Chase ahead of tomorrow's earnings report. We'll have more Fast Market after this break.
You're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back to Fast Market here on Schwab Network. On the earnings front, banks take center stage this week, and JP Morgan Chase is next up at bat. The nation's biggest bank is expected to turn in a profit of $5.46 per share on an adjusted basis. Revenues
at Goldman, is it going to be the same, or is that a weak sector at JP Morgan? That is probably why there's a little hesitation here. Stock's had a pretty good run. It's sitting just above, after backing off from recent highs of 337. It's sitting just above the 50 and 200-day moving average. Right now, the 200-day moving average is 303, so it's back above there. That in itself is pretty bullish, but these banks don't move in big ways on earnings, and there's, private credit. Is that going to be a problem in some of these banks? Consumer credit, you just mentioned credit card balances and delinquencies. So I think the overall market might have some fears. Jamie Dimon, sometimes when he speaks, he plays a little risk manager, and he brings out all the potential issues. So I think they're going to put up good numbers. They're going to probably beat on earnings per share and revenue. I don't know if the stock's going to go up based on that, Diane and Tom.
Good point, because listen, often off the back of its results, you see some pressure on JP Morgan Chase. So we'll see. And also, Jamie's often, he seems a little sour when he talks, and even if you have strong results. But Tom, your take?
He's a risk manager, Diane. He's supposed to be saying that kind of stuff, but you look at, Goldman's results, and you can kind of parlay that into maybe what we should expect from JP Morgan. Investment banking, that's supposed to be up pretty significantly. Net interest income is supposed to be up 10% versus year-ago levels. That's going to be a bonus for this company. The trading activity is probably going to be pretty robust. We'll have to wait and see on maybe the loan activity. One of the caveats that we didn't really hit on with Goldman Sachs that might impact JP Morgan also is those provisions for credit losses. If those get hiked up at all, I think it was the biggest since 2020 for Goldman Sachs this past quarter. So that might be a current concern. And then also Kevin mentioned the FICC numbers, if those come in a little bit lower than anticipated. But you know what? They're at the forefront of what the consumer's doing. The first couple of months of the year, we saw a lot of consumer activity and business activity starting to pick up. Now, what will they say as far as guidance goes? Are they going to give something a little bit lighter, maybe like Goldman Sachs CEO did a little bit, where maybe things are getting stressed here a little bit in the economy, and that might be a headwind. The stock's up over 30% over the last 12 months, hit all-time highs at the beginning of January, but we pulled back here a little bit. So, I think there's a bunch of different segments that you're going to have to focus on, but as we just saw from Goldman Sachs, it only takes maybe one, maybe two areas to kind of push this stock lower.
That's a good point. All right, let's get into the example trades. Kevin, we'll start out with yours. What's the approach you're taking today?
So mine is something more in the complex paper money trade where we combine spreads to create a banana. So if this is range bound, I looked at something in the neutral to bearish case. So I looked at the expected move, about $9.50. That's only 3%. Not a big expected move from these banks, because frankly they don't move very much historically on earnings. So what I looked at about $9.50, $10 higher, sold the 320, 330 call vertical, and then used that credit to purchase the 1 week, the April 17th, April 24th, 300 put calendar. Combine those together, and the total package trades for about 25-cent credit. It's maybe a little higher than that now, up near 35-cent credit. But trading this for a credit means if nothing happens and the stock just sits range bound, you're profitable because you've done this for a credit. If it moves down towards 300, you're profitable on the short call vertical, and you're profitable on the put calendar. Now the risk is the fact that you're short a $10 wide call vertical above the market top. The whole package is about 25, maybe 35-cent credit top. The risk, the difference in those $10 strikes and whatever credit you take in.
Yeah, let's break this down because it's directional, right? You can see here from the risk profile that Kevin brought us on this example trade, you want it to go at or near $300, right? The option market pricing in only a plus. This is a high price stock, right? Only a plus or minus $9.40 outsized expected moves in the banking sector. That doesn't mean that they can't move, but Kevin's example here, neutral to slightly bearish on this one. That 300 strike where he's buying the 1 week wide put calendar is where you want the stock to go, but because you collected a credit, anything below $320.25 is going to be profitability. But let's break this one down. In the April 17th
market high
monthly
right now.
options that expire in 4 days, sell the 320 call and buy the 330 call. So there's that short $10 wide call vertical that helps finance the purchase of the 1 week wide 300 put calendar where you're buying the April 24th 300 put, selling that same 300 put in the April 17th options that expire in 4 days. 25-cent credit, the risk $975, but that's all the way above the 330 level, all-time high 337 in
I'm almost
January.
100% on this.
So this is a directionally bearish type of trade, lining up with that 1 standard deviation at or near that 300 strike. But at the same time, as Kevin mentioned, if the stock does nothing,
that's 107%.
You're still going to be profitable on it. What you don't want to happen is maybe that 1 standard deviation move or more to the upside where you start getting into losses on that above $320.25. Now, Kevin, you mentioned the fact that historically sometimes these banks don't move that much.
If they go any more than that,
standard deviation moves are relatively muted. But I looked at a strategy that takes advantage of maybe an outsized move where it moves more than 3%, 4% in either direction on this.
If they go any more than this, we're going to super
iron
print
condor here, Kevin.
200%.
I went out to April 17th. Monthly options that expire in 4 days.
A little patch right here.
And I'm going to buy an out of the money call vertical. I'm going to buy the 317.5 strike call, sell the 322.5 strike call, and then on the downside, buy the 300 put, sell the 295 put. So a $5 wide long iron condor. You're going to pay roughly about a $2.10 debit on it. Trading closer to $2 right now, so you can get a little cheaper.
They can't
but
do
the
it
debit
though.
you pay on this strategy is going to be your risk. $210 per spread. It takes your break evens on this one to the downside.
Took my 100%
where you don't want it to go
still.
below 297.90, or where you do want it to go below 297.90, and on the upside, Kevin, 319.60 to the upside. So while we've got muted implied volatility, you got 4 days in this position. So even if you don't get the move initially, you've got a little bit of duration, Kevin. But this is definitely a bull bear type of trade in one, right?
Exactly right, Tom. These trades couldn't be more opposite of each other, except on the bearish side, right? You're playing for some type of move,
every single
and
time
you don't care which direction. You'd like one of these $5 verticals to go to $5. You're paying about $2.10, so you'd make about almost 150% on your money if you get that move. I'm looking for lack of a move or slightly bearish. You're looking for a move in either way. Bearish is okay there too. So a move to 300 would, well, it wouldn't help Tom,
push out.
but it would definitely
no
help
volume,
me. And Tom would do better on a move through 300 toward 295, Diane.
That is, I like the way you contextualize that there. So one of you wants a move towards 300, one of you wants something different than that. All right, that's a true bull bear debate there. We've got cash tax coming up, guys. Investors are not buying Best Buy after a double downgrade today. Keep it right here on Schwab Network. Fast Market will be back after this break.
Oh my God. Yo, come on. So when they be going down, boy, they be flushing that thing, boy. When they want to go up, they go slow.
Hi, I'm Alex.
I'm Jean. And I'm his mom.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Sam Varnas, live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
There you go. Come on. Come on. Push, 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 push. A 30-minute candle.
Trading at Schwab
Almost
is
about to
powered by
close.
Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter
access for it by phone.
I'm up 264% now, bro. Just ripping. Let's go. Let's go.
Whether you're an
Let's go.
experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader?
Let's go. Let's go then.
Trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
No politics, no spin, just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at schwabnetwork.com. Welcome back to Fast Market here on the Schwab Network. I'm Diane King Hall alongside Tom White in our Chicago studio. Time now for our cash tag segment. For that, let's bring in our next guest, and that is Andy Swan, co-founder of Lifefolio. Taking a look at Best Buy today. So investors are not in love with this one today. Those shares are under some pressure after a double downgrade. You've got the latest look at sentiment right now. Walk us through how Best Buy compares to some others in the retail space, Andy, and good to see you.
Yes, you too. Happy Monday. Best Buy is underperforming
Trends on.
Lifefolio tracks, especially if we look at web visits on a year-over-year basis.
No signal over here on the 1 minute
Walmart up pretty big.
or the 5 minute. This signal came though. No signal on the 15-minute, boy. I had to take this on my own. This already came down. Test this MMA. When they hit the MMA, bro. That first time it hit it, I missed it. The second time I had to get it.
Considered kind of a showroom for what you could
I came down here to retest the MMA again. Super bounce. Just like they did earlier. Down here. Super bounce. That's what I was talking about. Talking about Bitcoin bearish. I said, what? Bitcoin got this MMA right here, boy. They gonna super bounce off that thing, boy. Look, they gonna super bounce off this MMA, which they did. And they came down for a retest, right? What they do off the MMA? Super bounce, right there. Yeah, look at the chart. Look, I was telling you what I think. Talking about they was gonna be bearish. Look, talking about they was gonna be, but I just went 300% on a day trade with the strategy. Yeah. And we swing in the market. See, look right here. That's why I said, bro. They've been bouncing her forever, for years, right here on Bitcoin. I said, Bitcoin really bullish right here. Bro, you go again with that bullshit. You and Tucky, bro. Y'all gotta chill, bro. This nigga woke up on some bullshit, bro. Go back to sleep. I thought you was asleep. Been quiet that whole time. You was asleep.
Coming to the downgrade conclusion, Lifefolio's been bearish on this for a little bit now, and we don't see that changing anytime soon. There's no real catalyst out there that we see that's going to turn this company around in the near future.
Yeah, Andy, competition in this space is pretty rampant. Last quarter, they barely sold 12.8%.
Oh my God! Come on, please.
Friendly with buybacks and their dividend. Historically, that's kind of supported.
I already got out of that trade. I'm in a swing. Come on, baby, please. I need you.
Mindset where, hey, I used to like to go to Best Buy because I wanted to kind of
I already got out of that trade.
In action, and maybe you
I had two contracts at 16 on the
market,
market, bro. Them motherfuckers would have printed too, but they held them a little bit longer, bro.
Buying things online, going to Costco and just picking it up when you make.
How about two contracts, bro?
Amazon. They don't care about.
They did. I got out of them, but the market's still bullish. It's bullish on all time frames right now. But you know me, I don't be having no patience, bro, because I don't like to see my account fluctuating too much, bro. Like that shit. I can't be holding too long, bro. That's my problem.
And it's not just Amazon.
No, all my money be fluctuating, bro. I don't like that shit.
Amazon was that primary competitor where, you go into Best Buy, maybe you check Amazon
Did you
important
pay
than
it
that, I
already?
think, is the
I like
competence
re-entering
of all the
the
other
market on the
competitors.
pullback.
Walmart
Like
has
you not do that.
dramatically improved the online shopping experience. Costco
Look
has
at
dramatically
AT&T, bro.
improved
I
their
put it on
online
everything I might
shopping
buy. I never
experience,
put on them, bro.
as has Target. So everybody is now
I do like
doing what Amazon used to do, and that hurts Best Buy.
because the way the strategy
more
is,
than it
bro. I
hurts
got a
anyone
lead
else.
and
So
I do
I don't
short-term
think
puts
Best
on
Buy
them.
has the
And I
greatest
take
online
all the money
shopping
I get
experience
and I buy shares
between
with
them,
it, bro.
and they are held back by the fact that they have to maintain these stores and that overhead
You get me?
and that employee base that essentially acts as a showroom for their competitors. And so we're back to that story with Best Buy, and Wall Street,
Bro, you woke
for
up
good reason,
negative,
doesn't like
bro.
it.
You didn't go on back to sleep.
Andy, let me ask you this. Now, the one thing I noticed in this chart is Target's at the top of your leaderboard. Is something about that easier
funny.
year
Quit
over
looking
year for
outside and go sit your ass down.
We can kind of throw Target out of there. I think, the real number for Target, they're coming off of very low comps. They had a devastating
I ain't hear you talking to nobody
there
though.
for a little while. So they're coming off of very low comps. I would put them more in the same category as a Walmart.
I ain't hear you talking
if
shit.
I'm looking at this from a peer-to-peer perspective. And so, but they are competent competitors to Best Buy at this point. So is Walmart. Now Amazon is
Damn, bro. Bro, you know I got IWM calls too, bro. I'm almost just printing too right now, bro.
at the kneecaps.
Is the market like it?
In terms of why people go into that store.
Yeah, I know. I got my strike at $300, bro. You really think they are, bro?
A refrigerator or
I got my strike at $300 on IWM.
And now you can check out Amazon against that
For a couple months out. Because I was thinking they was gonna end up around there too.
Are quickly disappearing with more and more competitors able to traverse
They
those.
bearish as hell, bro.
Very difficult situation for Best Buy. The financial engineering, the short.
No, look at us, bro.
That only
Look at us,
goes
bro.
so far. You have to see growth in a company. You have to see light at the end of the tunnel. When you don't see growth,
No, they just keep falling, bro. Man, what's their ticker,
you
bro?
look at the valuations, it seems like the 60 level is going to become a line in the sand over the last couple of weeks. Do you guys have an earnings score on this going into the report? Because it does pay a big dividend if they continue to pay that, and they are shareholder friendly, and that's kind of helped them. Do you guys have a decent earnings score going into this, or are you guys sellers?
No, we're sellers. I think we're bearish on this. The risk is clearly still to the downside. There are some things that Best Buy could do. I think they'll lean in on some of the AI PC
She thinks I'm gambling.
that they have and those partnerships that they have.
No, you're not.
The showroom of choice for those, which is great. So they've got
Even though I show games every day,
like you said, that could
motherfuckers be thinking I'm gambling this shit. Because I didn't withdraw no money.
But over the long term, I think they have real problems, and it's going to be tough to put a Band-Aid on those in the conference call that follows the earnings report.
That's supposed to be your job to me.
All right, thank you, Andy. That's Andy
Bro,
Swan,
have you been
co-founder
looking
of
at Lead?
Lightfolio, with
I
the
mean,
latest look
Light.
at Best Buy and the competitive landscape around those retailers. Now, for the trading perspective, all
That shit
things
going for
Best Buy. Let's bring
$1,000.
Kevin
I
back
told you
into the
that.
call. Tom, you got some insight from the Lightfolio team. He said, listen, they've been essentially bearish before.
I ain't
These
gonna lie, bro.
analysts seem to have caught up with what they're seeing. What's your thought before you guys get
This
into today's
MPL, bro.
Yeah,
We called out some good trades,
charts,
bro.
they have that
Some good
seasonality around
investments.
the holidays every year, but it's continuing to drain.
I don't know why people
I
weren't
mentioned
listening
that
to me,
$60
bro, when I was throwing
level.
this stuff out, bro.
We're hitting right there right now, and this has been an area of support over the last month and a half or so.
This would have actually made us all millionaires, bro.
Remember those April lows from last year when the whole
When I
market
get paid, bro, I'm about to put all my check into this
down
company,
to
bro. I ain't
just
gonna lie
below
to you.
55 bucks
This
a
shit,
share, but Kevin, you look at this
light,
name,
bro. This shit going to 1,000,
the
bro.
valuation's pretty low. Trailing PE about 12.
Yeah, it's too expensive
The
because
PE
it just
of the
keep going
stock
higher.
is now below 10 times next
But I
year's
put up
earnings.
here.
But I mentioned that dividend yield's climbing up there, 6.34% if they continue to pay that, Kevin.
Hey, get Cole in here,
And
bro.
the option market's only pricing in a $1.25 move either way in this stock over the next maybe one day. But it does have a market
I really
move
want to see
today,
where the
no
Q's
earnings
is
are
going,
a few
bro.
weeks
Because I
off.
just printed on it, bro.
Earnings, I don't have earnings till the end of May, but this is a company. Let me
need
take
to
a
see.
little bit of the other side of some of this argument. This is a very well-run company.
My God, bro, this
said,
Rigetti
they
Elite
have
would have printed
struggles
too,
going
bro. They
forward.
cheap as hell,
It
Rigetti
might
Elites.
be like
And
a
the QS
carbonic
leaps, all the
situation
quantum leaps is
where they
cheap right
just
now.
have too much brick and
Because they don't
mortar.
melt it.
They can't get down
And
to
it
the
might be
prices that other people can.
the end of next year,
but
I mean
they
the end of this year or next
they do
year,
a great
but
job
they coming
of,
back, bro.
buying back stock and controlling their head count and doing all the things that management can do to maximize what they do. But boy, Lycolio's data is not great. But you also, Tom, can't ignore a 6.3% dividend yield.
Bro, I got 11 days on this position right here, so I need them to run it up real quick.
What I looked at is something, because the stock, if you look up at a 3-year chart, Tom,
Go ahead and come back down here for a retest and bounce.
$60 is a pretty long-term low in this name. So I looked at something because of that dividend. I looked at something in a simple covered call strategy. I went out not 4 days but 11 days. I bought the stock.
Plus that person that told me that the market was gambling, I said, bro, don't you know you can be investing and do a cover call strategy on that shit and collect you a premium?
59.90, 59.80, something in there. So if you think
And the weather said when I said that,
you're net buying the
I said,
stock,
you can get you 100 shares and do a cover call on that
and you still get to capture that
and get you a
dividend.
little premium.
If you think neutral or
Alright.
bullish in a stock like Best Buy, if you think the management can navigate these
That way every time you do a play, you're getting a credit.
and you're collecting data on a weekly basis. So sometimes, Tom, that dividend just tells you to do the covered call.
Let's break this
Look,
one
he's
down.
talking about a covered call now here.
Stock you buy, you sell, and out of the money call in Best Buy. Haven't used the April 24th weekly options expire in just about a week and a half.
Yeah, the way the market just ran up, I gotta be careful on the call side. Let them pull back first.
We've got 59.60. That's where it was trading earlier. Actually,
Let
trading a
this
lot lower than that
come
earlier.
down here to
But now up to 59.90.
50 again if they have to.
It's also going to be your break even. So you're buying the shares at a discount. It's a capital intensive type of strategy on this one, but it creates yields on two fronts, right? You create that yield on the 6.3% dividend because you own the shares, and then also selling it out of the money call. So while it's a bullish, slightly bullish trade,
while
it's
the
also
market
a
is
neutral
running
strategy.
up,
As you get closer to
IWM is
expiration
going to
over
be
the next
running
11
up.
days, you'll have that opportunity or potential to roll that short option. That should create credits. That'll increase potential profitability, lower your break-even point. But you want to be a shareholder on a strategy like this.
I don't know how much they can pull back at the top.
Yield, but that's why it's capital intensive.
But it's
right?
definitely a short right there.
$5,990 in risk, $5,960 in risk if the stock were to somehow go to zero. So keep that in mind on a strategy like this. While it's a longer term one where, hey, if the stock just kind of consolidates at the 60
I'm
level,
never trading gold
an area
again,
of
bro.
support, you can start trade management skills on this.
Don't ever
You
tell
can
me
start to collect
nothing
credits.
about.
You've got some assignment risk on that short option over the next 11 days. So you might get your stock taken away if you don't adjust it to a higher level if the stock does rebound. But yeah, Diane, setting up not really with what Lycolio's data says, but you got some time until earnings and maybe the stock on basically 12-month lows might find some support, but the dividend comes into play here.
No, it's a great point that you made, especially about that $60 level, because it's really, kind of just continue to kind of come back around that level over the past year. And year to date, it's certainly been an underperformer compared to the S&P 500 and its sector. All right, good stuff, guys. We've got the breakdown coming. We're going back to the bank with a look at Citigroup ahead of its quarterly results tomorrow morning. We've got more fast market after this break.
Market don't know what it want to do, boy. So it's a retest right here. Cool it down so it can go higher. Oh. Oh, look, a buy just came in right here on this retest. The target is right here. The target's up here, cuff. I seen this other one hit the target over here. This one right here. When this one popped off, this one hit.
24 hours a day,
I
7
seen
days
it.
a week.
I was right here and it popped up
And
here.
on all your favorite streaming
Right here.
services. Schwab Network.
Available anytime, anywhere, on any device for
We're gonna
free.
see if this one does too.
Whether you're an experienced investor or just getting
Create
started,
your own risk though. All these targets on the
offers a
sometimes they
webcast
go,
that's right
sometimes they
for
don't.
you. The platforms and tools webcasts are designed
Sometimes
to
these
help you
signals work and
broaden your
sometimes they don't.
knowledge of platform features and resources
This ain't
available
been
from
fully back
Schwab.
tested, but I've
You'll
seen
learn
some of them
tips
hit.
and tricks to help navigate Schwab.com, Thinkorswim, and
Need
mobile-based
some more
platforms.
volume.
Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand.
Well, I agree.
Head over to schwab.com/coaching.
If it's RSI stay above 50, I believe it says bullish to me. They're bullish into the red. Right now the bears is trying to push it lower, so I will wait for this bear cycle to end.
Before we get to the breakdown, let me give you a check of where the markets stand as we get closer to the bottom of the lunch hour. Here's your scorecard. We are on the plus side for the S&P 500, better by about 1/3%. Dow still a little lower, but it's been gradually inching higher throughout this hour. We're off by less than 0.1%. NASDAQ 100 is better by a little bit more than 1/3%. The Russell 2000 is higher by 0.8% as investors continue to operate with, or as optimism, I should say, increases about the U.S. and Iran negotiations. Going back to the banks, though, Citigroup has been one of the few outperformers in the sector. Year-to-date,
Where's the
net stocks
volume
up
at?
more
Show
than
me
6%,
some volume right
more
here.
than 90% on a
I want to
year-over-year
see
basis.
medium
As
right
it
there
sets
at
in front of
least
it with
for
earnings due tomorrow. Analysts are projecting
there should
revenue
be
will top
some volume right there.
$23.7 billion, which would be up from the same time a year ago. CEO Jane Fraser has
They're trying to
turned
push
Wall
this
Street
right
into
now.
believers, bringing in top talent, and to
A
use
little bit,
her
slowly,
words,
slowly,
quote,
slowly.
competing for the full wallet. Time now for the breakdown for that. Let's welcome in Kevin Green, senior markets correspondent, taking a look at Citigroup today. All right, this is the big focus on the banks.
That's how they've been doing though. They really been
We've
going
got
slow.
JP Morgan Chase coming up.
And then when
We've
they
got
pull back,
Citigroup
they
coming up tomorrow.
these
What was their
tremendous force,
expectations,
boy. They just
KG?
break it down.
So when you're kind of looking at Citigroup, kind of think about this company as more of a retail banking focus or consumer banking focus. They have really divested themselves away from a lot of the international exposure, especially when you're looking at South America and really focusing on the basic lending as well as taking in deposits. That business has been their bread and butter
Johnson
here,
Hurd
and trying to
buying
turn
puts and
that
shit.
is what Jane Fraser has been
While
kind
the
of
market
focusing on.
turning
And it has been
upward
paying
on
off
all
for
time
them. And
frames.
actually, if you're looking at it from a technical standpoint, we are seeing a
And they offer breaking
pullback
all
and
time
kind of
highs
testing
and
of a
not all
neckline
time highs,
before a
today's highs
breakout
and stuff.
right before the earnings
They're here
announcement.
buying
Now
puts
we
and
are
stuff.
expecting around a 3% move to the upside or downside if you back out some of the theta decay over the remainder of this week. But as you talked about the revenue expectation coming in at $23.7 billion, a lot of that may be driven by the net interest income, which is going to be the estimate right now sitting around $15.5 billion.
Oh look, it's trying to go to this target, y'all. Real, I'm watching it. I'm trying to see something. You see, I'm trying to get me. I'm trying to see something.
And they did come up a little bit light when it came to the fixed
If I
income,
got
currency, and
our shit
commodities
back,
trading portion of their
do a
business.
little bit back
Citigroup
testing.
doesn't have that much of an exposure compared to their overall revenue mix.
Ain't gonna stop us
So
from
if you
getting
were
our babies.
concerned
Boy,
that
we had
maybe
our
they'll miss
babies
on that
last
particular
weekend.
metric, they
We
may
went
be
to
able to make
Malibu
it
Jaxed.
elsewhere within their
What y'all talking
business.
about?
Now, the last thing that I think we have to
People
be
say he
mindful
want
of, and I bring this up
a
every
girl
week,
like mine,
when you're
spending all
looking at
that
the consumer
bread.
banking segment, it still is writing down
Who
a fair
talking
amount
about?
of assets, or their losses, if you were looking at their assets. They continue to write down a pretty significant amount compared to others within the space, which is why we are seeing it trade at around a 12.5 forward multiple here with a growth rate of around 30% year over year when you're looking
If
at
this hits
EPS
that
growth.
target, I'm
Now,
really gonna
compared
be
to their
printing,
peers,
bro.
they've been actually
I'm on
holding
this
up pretty
position
well when
too.
it comes to price action, but they still have a very long way to go if you're looking at trying to get the stock back to all-time highs that we saw pre 2008 financial crisis.
I might, depending on what this looks like,
Income matter this time around.
if I can get a couple more cents,
It's going to be a factor, and actually
I'm
that's
gonna
probably
trim
a
out
good
my
price
swing.
spot
If they
because
get
we've
up here,
seen
I'm gonna
the
trim
curve
out my
itself,
swing
the yield curve
on my
actually
market.
widen out during the quarter that's
All
being
of it too.
reported. So as you see that yield curve widening out,
Trim
it's
out
meaning
all of
that
that. I
the
need that
longer
bread.
duration paying a little bit more of a higher interest rate than what we are
I ain't
seeing on
spending
the
nothing
shorter
all month. It's my
duration.
birthday
That's
month.
where the banks
We
make
came in
their
here
money. They
investing
basically
everything.
borrow on the short
Shit.
end, and then they lend on the
Trying to
longer
get a
and
couple
on the longer
dollars.
end really is only about 7 years to 10 years. But that actually does expand
You know
profitability, which is why I
and
also
read the
kind of
whole month
mentioned
too.
that it could offset maybe some of the weakness that you're seeing in the fixed income trading as well as the currency and commodity trading portion of their business. So it's going to be a big deal. Now, unfortunately, when you get to the latter half of this quarter, what we did see is that spread kind of coming back into the fold because of the uncertainty that we have seen when it comes to this geopolitical risk as well as what the Fed's going to do moving forward. So kind of a double-edged sword here. But Citigroup is kind of positioning in a little bit of that sweet spot where it has investment banking exposure, it has traditional consumer banking exposure, some commercial banking and commercial real estate.
Like this
Pretty much
volume
a
is
good
like,
25-30% blend
oh,
each
come
of those
on,
And then KG, when you
push,
performance
like,
so far this year,
push,
outperforming
man.
the S&P 500, outperforming
Give
other
us the
peers in the
volume,
sector.
give us
Is the
the
bar higher for
momentum,
Citi
like,
given its outperformance year to date?
like. These
I don't
1
think so.
minute
I mean,
candles
the
are
bar has been
slow.
really
All
low
these
for this
candles are
company
so
for the last
slow.
couple of years. We have that chart up here right now. It kind of just shows you where we were at before the financial crisis and where the stock is trading right now. We have to remember there was a significant reverse split for this name in order for it to kind of get back on its heels. So it still actually has a long way to go to get back to all-time highs. You compare this to a Wells Fargo or JP Morgan Chase for that matter. A lot of those stocks are actually trading at relative all-time highs or new all-time highs at the moment here. So still a long way to go, but this company has really transformed over the last 10 to 15 years where it had their hands in pretty much every type of business, especially overseas, especially if you're looking at South America.
Bro, because you don't see that it's going up the whole time?
Because they provided a lot of risk, a significant amount of risk that once again Jane Fraser is just not really willing to take.
You don't see that it's bouncing right here, the whole, you don't see how many green candles this is right here?
And technically speaking,
You got a retest right here to go higher. You didn't see that, Josh?
Have a good earnings report. It might actually have more room.
Try to take a put at the top when they bullish and shit. Try to push through that thing. Look, then they put high volume on that thing right here. Pushing on up there. Hit this target right here.
Thank you, KG. That's Kevin
You can
Green, our
print.
senior markets correspondent with the breakdown on Citigroup. So let's get Tom and Kevin back in here for example trade purposes.
You can print a little bit
Jane
more.
Fraser, I love it. You know, just this is more the
Done for the date.
a female at the top of the banking system there. So hats off to her. But let's get into it, Tom. What's your approach?
Yeah, divesting money-losing portions of the business, kind of tightening their belt around, being more domestically based. Now they're trying to get into the M&A activity, that a lot of
these were some nice candles right here. They're trying to push up. Then you got a rejection right here at this top.
The exposure to the consumer might be a little bit
like somewhere over
here.
here.
Net interest income is supposed to grow. Trading activity is supposed to grow. Now, are they going to have to set aside
go higher, I think.
for credit losses for those
You
loans?
never know. They also
That
could
might be a
break down
concern
at the
moving
top.
forward. We
They have
saw
to pull
that with
back
Goldman Sachs earnings.
and
So
start
you
making
have to
lower
look
lows
at different
right here
segments
where they
within
at.
their business
If they don't
that
bounce
might
higher,
drag
then
down their
they
entire
could start
earnings, even
rejecting.
if they're good results on the upside,
Pushing
because
downward
for the first two
right now.
months out of this quarter, activity was really robust for a lot of these money center and investment banks. So I looked at a strategy. The stocks hit 17-year highs here today, guys, in today's session. The RSI is at the 70 level right now, so overbought on a technical basis at this point. So I looked at a strategy that takes advantage of vol dispersion. If you think maybe this trades like Goldman Sachs does, where it's a good report and it goes down because of the gains that we've seen. This stock is up 103% over the last 12 months. So I looked at a bearish put diagonal here, Kev. I went out to the April 24th, really short-term positioning. April 24th weekly options. Buy the 125 strike put that's basically at the money, and then against it in the near term, April 17th. Monthly options that expire in 4 days. Sell the 120 put. It aligns about with that one standard deviation move that the option market's pricing in. $5 wide bearish put diagonal, Kev. Paying roughly, we've got 270 debit here. That's your risk. It's probably trading closer to 240 right now because the stock has moved higher as the market is now hitting session highs as we speak. But the debit you pay is going to be your risk. So a $5 wide bearish put diagonal, Kev, only paying roughly about 250, 270 on this. There's your risk. And so, anything below maybe 124 is going to be profitability on this one. And on a percentage basis, you don't need a big move to the downside.
Goldman Sachs price move today has got everyone on the defense when it comes to these banks, that even good news might not be enough to make the stock go higher. Remember, good news or bad news, we're betting, you're saying that the stock can't hold these levels or may not hold these levels. And so I think that this is one of those, we do a lot of diagonals on this show. This is the put side, so a bearish diagonal top.
Man, bro, what they doing to Walmart?
1 week, only spending $2.70, $2.50. If it's less than that, that is the risk on this trade, guys.
Yeah, and the vol dispersion lowers that entry point price, so anything below about 124 is going to be profitability on this one, because you're buying about 40% implied volatility on aggregate in that April 24th 125 put, selling about a 48% implied volatility on aggregate in that near term April 17th on the 120 put. But definitely a bearish trade here, Diane, on this example, looking for maybe a Goldman Sachs type of move that we saw after a good report.
All right, we shall certainly see. And as you mentioned, sitting at the highs of the session, we had President Trump posting on Truth Social saying 34 ships went through the Strait of Hormuz yesterday. So it seems like we're seeing progress on that front. We'll continue to monitor the latest on between the U.S. and Iran. That's going to do it for us today on Fast Market. I'm Diane King-Hall alongside Tom White and Kevin Higgs. Download the Schwab Network app. It is available in the App Store. Tune in 24/7 on SchwabNetwork.com. You've got Next in Investing coming up.
So what is unique about Schwab Coaching is the community.
There's a lot of energy, like-minded people are learning with you. You can just see and feel all the excitement around getting to learn a new topic.
Some of you want to get everything face-to-face with you and 400 or 500 of your closest friends.
Some clients like to be in the privacy of their own home on an online workshop, but still having that live interaction with the coach.
As I'm talking, questions are coming in from that live audience, and they help me fill in those gaps as an educator. People learn differently, but all those ways we actually teach
They stay above 50,
all come back
bro. They
to
bullshitting me.
making a difference and helping you make progress.
And so that
They
means
try.
not just giving you theory, it means giving you the practical implementation using our platform.
So we want it to be fun, we want it to be informative, and most of all, we want you to walk away with a skill set and independently be successful in achieving your goals. Welcome to Schwab Network, where real-time market coverage meets expert strategy. From the opening bell to the closing bell, we've got you covered. Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and
That
sharp
target
trade ideas
615. We're gonna see if they hit.
With shows built for action, we
Do
break it
some
all
live back testing, boy. What y'all talking about?
I think one of the
We're gonna
most
call the
important
stream
things
live
is
back
making a
testing
play
on
in a
Frosted Strategies.
risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand. Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com. For instant reactions, earnings breakdowns, and hot takes that teach you about stocks and markets.
Look at that.
Follow me on X
Let's
at
go.
Petalides. And
Push your
connect
ass up
with
there.
me, Nicole Petalides, on LinkedIn, Facebook, and Instagram. I'm Sam Linus, live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at
I know they was talking shit about Frost, right? They was talking about he wasn't the coldest this, he couldn't day trade that, he shouldn't swing this, he shouldn't buy that.
I don't even know if they could
I've been
envision
trading for years.
to leave everything behind.
They ain't gonna tell me what to do in the
across
markets.
the entire world. I think that we totally met with their wishes.
We're gonna get somebody
Schwab
somewhere.
has been with us for almost 25 years. Through purchasing up houses, opening up our business, having children. They've
I've always
They
been
come.
here
They
for
just
us.
need some
I want
volume to
to
push up some more.
invest with a company that can
They
help me give
slowly
my family
trickling
a
up.
happy financial future.
Welcome to Next Gen Investing. I'm Jenny Horn alongside Alex Coffey, and we have seen a bit of a recovery here in the overall markets as the session has gone on, of course, to start off this week. After seeing some of that
The
pessimism
small
build in
wins,
on
though.
Friday,
The
still
small
not
wins
week,
is
but
what fills
does
up the
seem
bucket. I
like the
swear,
tone is
like,
getting a bit more upbeat
you
as
be
investors
trying to
are
get these
clearly hoping for an
home
eventual
run plays,
resolution with Iran. Did not see that pricing the
and that's where you
futures
get
this
liquidated.
morning, but again, a nice recovery
And that's
here
why,
we're
like,
seeing
I swear,
yesterday.
I come in here,
How
I
much better
just
does
get
an up
little
30
bitty
day feel when
wins.
you get open
It's like
down
little bitty
60
wins, little
Sunday
bitty
night?
wins.
So, hey, whatever's going on,
A
this
drop
sort of
fills
one
up the
step
bucket,
forward,
bro.
2 steps back, 2 steps forward, whatever it is, seems to be working.
You
The
don't have to
market
be
seems to
greedy.
like it.
Yeah,
Try
the
to
market
get
only
the
continuing
whole
to
trade
improve
all
here in real
day,
time
get
with that
everything.
strength led by the Russell 2000.
Catch you a
Before we
couple
move
good
on, I mean, we're
moves.
now within like what, 2% of
Buy you
not the
some
all-time
shirts.
closing high, like the spike high for the S&P 500, which like just eclipsed 7,000. Like,
And get
it's not
Frost's book. I know
unreasonable
he
that we
wrote a
could
book
be
out
there by
there.
the end of the
Got
week
the letter to
with a
his
couple
kids in
good
there.
earnings and maybe some
Told
couple
them they need to
good
start
updates for the
investing in that
S&P
market.
500.
Seems like
So,
get them
you
some
know,
money,
all
boy.
this talk and
We getting
chatter of
Google.
the last 2 months
We getting
now,
Tesla.
or
We
1.5
getting Apple.
months of, hey,
We getting Microsoft.
war and weakness and uncertainty.
I told them that.
This is the best crash I've ever seen.
I mean, yeah, when you look at the month-to-date performances, and I know we're still very early into the month
So
of
you guys
April,
check
but
it
like
out.
considering there is this massive geopolitical uncertainty that is still an overhang in the market, we're up almost 5% in the S&P 500 so far this month. I mean, to speak to that, and like today, seeing again this real appetite for some of the dip buying we saw overnight.
And I'll add to it, and it's the exact same point I just made, though. It's not like in the tariff situation last year where you rapidly repriced like 15, 20%, and then you started to see the market stabilize and bounce back. You might have a 5-10, during COVID, you had 5-10% days several times.
Oh my God, they pushed higher first. Like, oh my goodness, this is so bullish.
The bounce back effect, the snapback effect. We're not starting from a low point. We're starting from a point of elevated valuation. So you could already say, not even just the fact that it was at all-time highs, but those all-time highs were expensive, all-time high to all-time high. And we're basically all the way back there already. And there hasn't even been the resolution yet. If anything, you saw an escalation.
Yeah, I mean,
talk to it nice. Talk to it nice. Look at it. Talk to it nice.
Which I know is not a
Just
small
push it
move,
up.
but
Talk
I
to
mean,
it nice.
it's considerable that, again, there's still...
Oh, look at
that is
going
a
to
day, especially given some of the activity we saw just last week, of course. Last week closing out a really strong week for all 4 of our major averages. But as always on the show, we'll kick things off with several of these key stock movers to keep on your Monday radar. We'll also preview Johnson & Johnson and CarMax, both ahead of their earnings reports due out tomorrow morning. And for FOMO, we'll dive deeper into a downgrade call on Nike, with HSBC saying its turnaround is now a show-me story with no short-term catalyst. We'll also break down why Evercore is turning a bit more optimistic on the very beaten-down home builder stocks. And we'll discuss the loneliness epidemic, its $400 billion economic impact, and the rise of this IRL economy. So, wide variety of conversations today, but to start things off, we have lots of analyst calls as we, of course, reset for this week, reset for the geopolitical headlines, and also reset for earnings. And I think that we're seeing a lot of this updated coverage as we now go into a full other earnings season. But starting off with CoreWeave, as we did see Macquarie upgrade CoreWeave shares to outperform from neutral. Price target also raised to 125 from 90, saying that their recent announcements with Meta and Anthropic, of course, that we got last week, suggest that its ecosystem role is becoming structural, and they believe CoreWeave will increasingly become a structural player into the next decade as opposed to a stoppage on balance sheet financing or GPU risks. They did say they have near-term capacity to shore up their compute needs relative to these in-house deployments, and that recent headlines validate this differentiated platform that CoreWeave is trying to establish. And so CoreWeave has been definitely in the headlines and definitely of note as of late, because we are now up just 44% so far this month and now up 56% on the year. I mean, this thing has been in a rally.
Yeah, and we've made the case that
kind of
niggas not playing around
consistent
this
cash
thing
flow
made,
through a
bro.
subscription-based model. So while they're selling capacity, while they're selling hardware, while they're selling maybe rented out space for data centers, whatever it may be, it's annuitized almost in its structure through that subscription-based model. And that's essentially what Adobe and Salesforce have been able to do for the last 5-10 years that the market absolutely loved until it didn't.
It's true, until it didn't. And we also did get some reports from the Wall Street Journal that CoreWeave did hike its prices by more than 20% through the end of last year. Also now asking for these smaller companies to sign more long-term, like 3-year contracts, up from prior commitments of just 1 year. So also interesting because, again, taking a note from the business model that the street tends to like, and that's more consistency, reliability, and long-term contracts. I mean, plus, again, getting like $21 billion deals last week definitely helps provide a catalyst. We rose 3.5% Thursday, another 9% on, or excuse me, 11% on Friday, and now we're up another 9.5% today. So this name's last 3 sessions have been really impressive, and again, it's finding these winners and losers with the broader AI trade instead of like, you know, the broad-based strength we saw throughout most of 2025. But next name today here is Starbucks. Starbucks with actually some positive analyst news as Jefferies did upgrade shares to hold from underperform. Price target raised to 92 from 86, citing the company's less international exposure now that China is franchised and a stabilizing U.S. business is also a bright spot. They did say visibility into their execution really of this turnaround has also improved, and added, however, though, that Starbucks continues to trade at a relatively large premium, which is unwarranted at these current conditions and current levels. Starbucks up modestly today, but has seen a degree of skepticism really in regards to, of course, new leadership and actually being able to continue to be as competitive and a fairly difficult market to right now like dominate. But Starbucks still obviously a huge force and actually has looked pretty strong, up still 15% on the year.
Yeah, this is a little bit odd because there's a lot of things that are laid out that sound positive, and then at the end it's sort of a, oh, but it's expensive. So it's an industry leader. It's one of the most, we're going to talk about Nike later on with Marley, and despite Nike's kind of stumbling that it's had apparently in terms of stock price, it's still one of the most recognizable brands. It's absolutely a top 10 logo. I put Starbucks on the short list of similar. It's one of the most recognizable brands, certainly a recognizable logo. And it really, it's positioned itself to capitalize on routine. And so again, we talked about infrastructure as a service for CoreWeave. Starbucks is certainly not a service in the sense of a subscription-based model, but it is a service in the sense of you consistently go back because it's preying on that, hey, I need my coffee in the morning, I need breakfast on the way into work, and that's what the market loves.
It's true, and the market does like that, especially right now in a discretionary environment that has not been very even either, actually, to speak to the comparisons of like, you know, AI versus discretionary, totally different, but definitely confirming this is more of that stock pickers market, it seems. And next name today fits that broader tech theme to HPE with actually a downgrade from Raymond James to outperform from strong buy with a price target that was, I mean, modestly reduced, $29 from down from $30. They do still see significant upside to shares and consider it an attractive value stock, but they did cite less certainty around the growth and catalyst behind this downgrade, saying that their choice to focus on AI profits over market share makes sense as this strategy impacts growth but does protect their margins. And so again, interesting that this is a downgrade because most of the commentary from this note was pretty positive for a name that's been able to hold on to an 82% climb over the last year or so.
Yeah, and this is an analyst shop that provides kind of 5 ratings, so this would be like going to a 4 out of 5 instead of a 5 out of 5. It would still be on most industry compiled lists considered a buy. And so it is absolutely a bullish note. It's just incrementally less bullish than it was before.
Yeah, and a name that is actually, and frankly, impressive given all of the fear of like the SaaS apocalypse.
The market was going up crazy, and he up in prime push and shit.
So last name today here is Best
He waited all day to buy put,
and get liquidated. Our real lone red name of the group today,
just like these people play Daddy
With the Goldman Sachs analyst team writing that sales could falter as rising memory costs push up laptop and computer prices.
He just did all this talking, and he got liquidated. And I'm sure, why you buying puts when the market was going up like that? Everything going up, and he want to come buy put and shit.
Downside from where we closed on Friday. They did say that Best Buy could see a benefit.
The market is literally at the top of the day.
PC demand and higher tax refunds in the
So he just literally out of nowhere thought it was going to flush.
Sales on the horizon this year, saying that these higher costs for computer memory and data
Ever
storage
since that
will
inmate
balance,
bounced, it came down to the inmate again and bounced again.
They believe this could lead to
And then he tried to go put that
towards
all time frames on my shit. That shit said the trend was over.
volume declines as manufacturers prioritize fewer consumer electronic shipments. And
lost
so,
some money.
obviously, the memory boom has benefited
I'm sitting here
names like
making money,
SanDisk,
boy.
Micron. I mean, the list just goes on
I
and
took
on.
some
But
change
this does
and
not
bought
mean
some
again that this
itemized
memory
calls,
demand
bro,
is
from
going to be a
Q's.
boom for the entire
The
tech trade. They think that we're
616,
starting to
boy.
again realize some of
I made 300%.
underperformers. We think that could see like long-term impacts of these rising memory costs.
Yeah, I talked with Marley on Trading 360 on this particular.
Not to mention I had calls on the market like a week or so ago.
Disappointing in a few
I'm creating
ways.
all it.
One, you do have those dynamics that you described, which is sort of product mix weakness, the memory shortage, and how that's influencing, the focus of some manufacturers, the trade down effect of consumers, but also kind of a skewed first quarter based on some of the support of pull forward demand around PCs and higher tax refunds.
What are you
really
going to do now?
Alarmed me as I dug into Best Buy a little bit further. I looked at some of the second measure data, so things kind of observed sales by Bloomberg, or we've had Mr. AI on before. They'll do foot traffic. SimilarWeb will track sort of website visits, things like that. All of them not only were disappointing, but in some cases significantly disappointing relative to the industry. So, for example, observed sales as compiled by Bloomberg as of March 31st were down 8.5% year over year, but for the industry they were seeing up 14.6%. So that's not only a meaningful divergence, that's like a crater between those two. One's going one way, one's going the other. Foot traffic was down 1.1%, and then even web traffic growing 2.7% year over year, lagged industry growth, but that was closer to 6%. So any way you slice it, not a super promising second measure data for Best Buy going into this first quarter earnings whenever we get them.
Yeah, and I will say a name that has been a weak spot for this year, and
I'll be trying to refer one for this too. They don't listen to me.
Has fallen about 10% year to date, so it's not like it's seen a huge contraction, but I do think an interesting call, especially because they also have that exposure to like appliances, some of these big ticket items you purchase for your home, which we've also seen a bit of a slowdown in that regard. So unfortunately exposed to some areas of pricing pressures, it seems, and that's called out today by this Goldman analyst with
open
a
up a swap account and then do what again?
We'll leave it there for the top of our show today. But coming up next, time to discuss two names with earnings still ahead, those coming this week, at least tomorrow morning. Johnson & Johnson, which is lower on the session than CarMax, actually up about 4.5% into its earnings again out tomorrow morning.
Are you smoking? I'm losing money, bro. Yes, bro. These AT&T leaps are they're not leaping forward, bro. But what am I gonna do now, bro? I can. So, you saying I should keep averaging into this? No, I don't. It's ugly, bro.
Download the Schwab Network app and
It's weighing my portfolio down.
Sure. This place is incredible. This is where I get all your office supplies.
What he said? Send what he said.
Fancy coffee.
Tell the community.
It's everything in one place. It's like Schwab. Everything investors need, all in one place. Yeah, Schwab, they can do everything. Invest.
I know. I heard everybody said that. That's what Chris said. I still got. I averaged another one into the. I guess Rascal talk to me that way. I got 2 leads. I got 2 leads just getting liquidated.
Whether you're a bull
And
or
I told
bear,
you
you
when I
want to
get
catch the
paid, I might
latest
buy 10
market
of them
action on
because they're getting
morning
cheaper
moves
and
with me,
cheaper.
Diane
But
King Hall, live from the floor of the New York Stock
I'm gonna take
Exchange,
A&T's
only on
money
Schwab
and do
Network.
it. You know, I was thinking about getting some more puts, but really they might start bouncing for real.
Investing, it's time for our Chart Master segment. A little bit of chart and trade action here. We got Rick Ducat, lead market technician, here with me. A mouse coffee, of
Which
course.
way should we bounce to that?
Investing like Johnson & Johnson, Rick. So let's talk about this.
I might get
Hey,
it.
you know what? It's a big market cap company. It's had some interesting moves
So
here.
make you sleepy?
Sometimes opportunities are found in places you might not always be looking at the start. So, like I said, up almost 59% on the year here on the past.
It's like a snake we got going here.
Well, exactly, yeah. So, I mean, it's really been a pretty nice, consistent channel that we saw.
Don't you understand,
a
bro?
lot of the past year or so. Now we can see that things have kind of moderated a little bit here. 251.71 is where we had our highs. From there, you could draw a downward sloping trend line connecting.
Well, this has been bullish the entire day, bro.
Draw an accompanying trend line going across these lows. So, kind of a triangular
Well, it's making
shape
my
here.
money
Kind of
go
funny
up
you say a
and
snake, because it's also
go
called
down.
a cobra type pattern sometimes because it can resemble that figure. So these low volatility periods can often be a precursor to higher volatility, especially when you have earnings on the horizon.
I ain't heard about that. I heard no
notable
ceasefire.
horizontal levels, obviously, our old highs first.
I'm listening to Schwab. They didn't say this shit.
Our set of
You can't read
relative
Schwab.
highs here,
They did a report.
247, and then a low point here,
It might be a choice.
232 would be kind of a breakdown point to watch out for, and then 225 potentially.
Nah, my stream,
if we were to think about our moving averages that we follow here, we can see that we have seen much more of a sideways drift over the past couple months.
Oh, she's little as hell. I wonder why people think these little people are so attractive.
Our weekly and monthly exponential moving averages right around 239,
Yeah, everybody I'm not
roughly
little.
here. To the downside, our gold quarterly 63-day EMA comes in just below 234. So an easy short-term downside boundary stands out here because it lines up roughly with our relative lows as well as our trend line that you could draw here. RSI, our measure of momentum, trending lower, green trend line broken, downward sloping trend line away, but
The only person that's not little is
earnings, momentum.
it's fucking
I don't think I would make too
the one they try to make white on there anyway.
Finally, our volume profile study shows that we have some pretty distinct nodes that you could be on the lookout for. The most notable one closer to current price activity between about 238 to 246. Then to the downside, a pretty
We
small
gotta get your ass out of here.
but still one that
We gotta get
kind
you
of
a
stands out as
girlfriend.
bit more of
Cause
a
you always talking about some bullshit.
overall
See, if
picture.
you had a girlfriend, you need to be thinking like that.
Then down here, near about 220.
So if we were to summarize here, maybe
Yeah.
short-term kind of
Another girl ain't gonna let you talk about another girl like that.
action here a little bit, consolidating, but certainly this longer-term trend seems to be
And plus, you'll be,
intact.
brother, my girlfriend break out, bro.
Illustrated that as well, but can't ignore that
For real,
breakdown
we gonna make a
momentum.
new high, right?
Has been notable.
And the swings that I got on the market are gonna print, right?
Speaking of earnings, looking at
And my AT&T position might go lower, right? So what I'm gonna do is I'm gonna go back and buy shares with the market money, okay? And this is how you're gonna build a portfolio. You're gonna have the elite. You know what I'm saying? On that shit down now, you go day trade up here on the market. And you're gonna keep buying shares and elite. You getting?
I went out a little bit more in time to get a little bit more premium with these options. So it's the 230, 227.
I'm gonna learn you something. Just put up emotions, bro.
April 24th. So skipping again next week.
So Josh don't want shares at the top, but he want to do a put at the top.
This week's expiration to next week's, and looking to collect 50 cents. So that 50 cents.
Only way you can do a put at the top is if they have a real rejection.
Creating a situation where you're risking 4 to make 1, or in this case,
And start breaking support.
For this example, 200 per spread with a chance to make 50.
This shit been bullish all day. Look at this, all day of bullishness.
Some of those moving averages, and of course,
Since
below
8 in the
some of those
morning,
support levels that you talked about.
straight
So
trending
risk
upward.
defined, neutral to bullish, a little bit over a week
Came
and a
down here
half
and
or
touched
so
this
long
MMA
trade.
right here, boy, and took off. I started screaming this morning when it took off from here.
All right, not the only name
Came
with
up here
earnings
and just started
pre-market
rising
call. We're
ever
also
since.
looking at CarMax, stock ticker is KMX. In this case,
Now somebody's daddy done came back from lunch and put some more money in the market. Now it's stuff. Everybody came back from lunch, Wall Street. Everybody came back. Market just want to go higher.
Here, down about 26.5% during the past
Look,
trading
nice, so
year to
look,
51 days.
pull it back then. We
But
wanted
we
this.
are up,
If this pulls back,
pretty
this will be
notably
a great
as well from
retest
the
to go
lows,
higher.
up 61.5% from this low point that we established here near 30.26. Much more of a sideways drift
Not
once again
oversold at
during
all.
this past quarter here, with some big swings
That
interspersed
was
between
nothing.
that
That's
area.
ridiculous.
A low point that we established here near 38, but really this was much more of a consistent bottom area near 40. Our high that we saw here near about 49 or so, that's about where we find ourselves today heading into this earnings event. So kind of staying within the boundaries of our established range here, but very much more toward the upside here. If we were, oh, go ahead.
Well, Rose, just how it really stands out to me is clearly disappointment longer term, but we're actually percentage-wise much closer to those highs than we are to the lows. So it's had a really significant rally, but just so much damage was done.
Yeah, exactly.
Well, they're charging me 110, no 130 for my 10.
Vertical line representing
I paid for it. They want more money for
area
it.
there that we saw. So also too, consider this low point here and this pre-gap
business
downward low
ID
point here gives us a resistance zone of around 54.50 to about 56.50 or so. That could be an important area to watch.
I told that girl, I said, bro, I'm gonna come in here, I'm gonna make all that money that they asking for
So when we look at
before
our
this money's
moving
out.
averages here, we have crossed
How about
above
text?
all three of our shorter term moving averages in pretty quick
I said, how about
succession
text?
here. Our 5-day comes in near about
Telling me I'm
46 in
gambling.
dark
I'm about to
blue
show
on
you
roughly
that we
the
making
trend
money
line here.
every single day on this stream.
Gold and teal are
Talking about we
63
gambling.
and
I just ain't
21
made
day
no
respectively.
withdrawals
Both align
in
right
2
near
weeks.
43.
In 3 weeks,
To the
I ain't made
upside,
no withdrawals after the
51.19,
market just
our
been
long-term
greening.
251-day yearly EMA
Talking about
watch,
gambling.
that
Boy,
stands out
I'm
as well.
up today, boy.
Entering into the
Up every day.
overbought area as well today, actually, kind of the opposite of what I was saying. You often see momentum
Thanks to
slow.
AT&T,
In this
I
case,
need
we're
them to
seeing
keep doing what they're doing.
push above our old relative highs
Look, just
and
keep
a push into the
falling, too.
overbought area. So an
Shit is
interesting
ridiculous.
setup if you had a more bullish outlook in this
They ain't
name.
going nowhere,
Finally,
but
our
when they
volume
was moving, they was
profile
falling.
shows that we are entering
right in there
this
about
very
to put on
thinly
them.
traded area that we have here. Everything kind of dried up here. You can see it's because we had those big gaps. So not much
VIX is rising.
sense to be made of any heavy trading areas around here until we start to get around 59, 60 or so.
I don't
to the
necessarily like
upside,
that for the
and then more
market,
like
but
47 to the downside.
if the market happened to break down and break this
Second in
structure,
as many days, I feel like, where we've had that significant
it's still bullish
price
to
gap
me.
on these charts. But Rick, really a story of two different CarMaxes as you're kind of in this CarMax
They need a
2.0
cool
for
down.
the last 6 or so months, and then all that price
As
action
long as they
here
stay above
really
50, I
skewing
think
that
they're bullish.
look. But an interesting stock, especially as it approaches that level, as earnings, as Rick pointed out, was certainly a catalyst and has the potential to move really, really dramatically. Appreciate that, Rick. Before you go, though, quick look at an example trade in CarMax into earnings. Now, this is a stock that only has monthly option cycles, so you were forced to make a decision. Do you want to extend time, or do you want that short earnings trade? In this case, I kind of
always
found
gotta
the
take a
middle ground.
lunch
I went
every
out to
day.
May, so it's the
One of these
second
days, you're gonna be running up and down the steps, but you're gonna fall down the
but it does
motherfuckers.
give this trade a little bit more
On
time than
stream
just
too, all you gonna hear is boom, 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 boom.
And I couldn't get out of my head sort of that new price range that it established itself
I'm okay,
over
folks.
the last quarter or so, Rick. And
I'm not in the trade, folks.
neutral range down the road for strategy, looking for that range to hold. And there's, of course, momentum building.
I'm not in the trade, folks. I'm okay, folks.
Escape velocity.
That's what he gonna tell me what he gonna say when he bought out the
So
subs.
$5 wide iron condor, selling the 50 strike, 55, and then selling the 40, 35.
He gonna stand up, fucking bearish, folks.
So really, this is probably going to be leaning a little bit more bearish than neutral, just because we're closer to that 50 strike.
Fucking
Looking for that
bearish.
longer-term moving average, the upper bound of that particular price range.
What is going on with this little penny stock right here, bro?
175,
These little penny stocks be trying to run, bro.
Break evens, of course, 38.25 to the downside.
Are y'all focused on these other big companies?
Over the next month and a week or so as we go out to that May 15th cycle. Appreciate it to Rick Ducat for the help as always, lead market technician here for the Schwab Network. Coming up next, we'll be joined by Marley Caden here in studio as we discuss.
I had saw something up here that Datavolt made a deal with some crypto, and then the rose up here.
Downgraded to hold at HSBC and, you know, really trending near its low.
I want to see they will get over $1
We'll talk
again.
more about that right after this.
I'll start trading it.
For instant reactions, earnings breakdowns, and hot takes that teach you about stocks and markets. Follow me on X at @NPetalides and connect with me, Nicole Petalides, on LinkedIn, Facebook, and Instagram.
Let's see what they do right here at this Sunday.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim. The award-winning trading
Been bouncing off of it the whole
bring your
time
trades
right
into
here.
focus on Thinkorswim desktop with robust charting and
Turn
analysis
off of
tools,
it
including over 400 technical studies. Tailor the platforms to
the
your
whole
unique
time.
needs with nearly endless
Just kind of
customization,
riding it.
and track market trends with up-to-the-minute news and insights.
See if they get a bounce right here.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage.
What? BTM did not go from $2 to $4 today.
Stay connected to what moves markets. Download the
And they had a
Schwab
stock
Network
split.
app and get live coverage wherever you are.
Look at here, bro. You know BTM, bro.
Last year, my dad had a stroke. Big shock.
Damn.
Family be vulnerable.
It literally went up $2 today off this.
Yes.
Damn,
Now
bro.
we're
What
in the
is
car
going
together
on,
daily.
bro? I
I
told
started to
y'all that, bro.
realize, what can I pick up from my dad? He's been with Schwab for a long time. Jim's my financial consultant. I programmed that 20 years ago. Jim's really been there to answer any questions I ever have. Makes a huge difference.
Ridiculous.
That actually cares.
This might be the second coming of the bull run on BTM.
Charles Schwab offers a webcast that's right for you. Are you a
Coming
long-term
all the way
investor?
down here to
Our
try to break
investing
the
webcast
structure.
series breaks down different investing styles, including growth, value,
That is
income,
ridiculous.
and
Oh, I
more.
forgot about them.
Best of all, you can ask questions by chatting directly with an education coach.
People gonna lose this
It's
stuff.
interactive learning at its finest. Tune in live or on demand.
How about they don't want to fall no more, boy.
And start learning today.
Come here and start getting 100 shares of Gumbo. Let them come back and pull
Schwab
to
Network
this
delivers
MMA again.
real-time market insights, live from the NYSE, NASDAQ, SIBO, and beyond. From earnings to economic data, we cover what matters as it happens. Streaming 24/7, anytime, anywhere, free on SchwabNetwork.com.
Got that DOS right there, breakout.
Welcome back to Next Gen Investing. It's time for FOMO. And today's discussion, of course, will be Nike. Joining us here in studio to discuss the stock is Marley Caden, host here across the Schwab Network. Market on close.
Where's that target at? Did that target ever get hit?
Earlier on Trading
Right here?
360,
Nope,
we're
it's
talking
up here.
Nike now. You know, it's hard not to see the Nike logo. I've made the case. It's one of the most recognizable. We talked to those who survey, like Piper Sandler, who survey consumer trends. It consistently rates across generations one of the most popular brands.
It wasn't that much drawback on this trade that they gave right here.
Here comes down to 18th fairway. You got Rory McIlroy for the second year in a
No
row,
drawback.
basically stepping up for a putt to win the Masters. You got the guy he's going to
They had
have to
this
play
pullback
who
right
doesn't make
here.
the putt, and Scotty Scheffler,
And
who
somebody
also
just knew that this
fell onto
trend
the
was
Nike swoosh. Two best players in the world, 4 of the
being
last 5
respected right
Masters
here.
won
This
by
is
those two
May.
guys.
They're just riding
They
it.
seemingly are dominating
Targets
the
up there
culture,
on it.
but not
I want to see if it comes through. I'm not in that trade, but I want to see if it comes through.
Observation, because obviously if you watch any, if you watch any sports, not even just the Masters, but particularly the Masters this weekend, because so many people on the
I'm not in
leaderboard
that
have
day
Nike sponsorships.
trade.
I mean, Rory has been with Nike for more than a decade, I think. But the swoosh is so identifiable. I mean, it's just it's a culture phenom, really, at this point. I mean, people have tattoos of
Target
the Nike swoosh.
615.
But the turnaround story is just not happening fast enough. And I think that's
a whole dollar right
where
there, 90
we're
cents.
at right now. I think they got so diversified across different places. Now they've got Elliott Hill in place since October of 24. And he's really trying to target in on getting things back to being profitable and being the Nike that I think people think of when they see the pop culture thought of Nike, not necessarily the investor version of Nike. Trying race restructuring,
Nike's,
people
they
restructuring
moved
the
their price
business,
target down.
trying to offload some of
And
their
I thought
heavy
about putting puts
inventory
on
numbers.
them like
But
last
the
week.
analyst consensus is that it's just simply not happening fast enough, Alex. That seems to be what I'm reading overwhelmingly. It's also showing up in the numbers. The latest one coming from HSBC, HSBC putting out a note. They downgraded Nike to a hold from a buy. So they're not in a sell, but they are in a more neutral stance now. They have a target now of $48. Now, it's a pretty significant drop-off from the $90 that they had before. And they cited some visibility issues. They don't think there's a lot of visibility in that recovery plan. They said the turnaround thesis, what they say, has shifted from a not if but when, which is where
Elite might not
they
be
were, that
that
Elliott
bad
Hill
on
would right
Nike.
the ship, it
They
would
got
get
Nike
better.
messed up.
Now they're saying it's a show-me story with no short-term catalysts. And that's a direct quote from the note. Elliott Hill's been doing everything he can, I think, but still seeing weakness in the last report. In Converse, the numbers were bad there. China and Europe, the Middle East, Africa, not moving along fast enough. That sportswear athleisure segment, which is so popular with the younger demographic and very important to any company in this space's success, not doing well either. So HSBC then went farther. They cut their fiscal EBIT targets for 26 to 28 by about 35% overall. So pretty massive trim there. I mean, a third. Right now, they're trading pretty close to 52-week lows. We're just cents off of them at this point. We're, about half, about 100% downgrade from where we were.
The 2-year leads so Nike aren't that bad.
It really is not been the year for Nike. Just year to date, as we take a look at some of their performance, they're down almost 33%. And Piper Sandler also weighed in on Friday. They gave a pretty negative note. They downgraded to neutral from overweight. So again, we're not into sell territory, but a lot of the bullish sentiment is really waning here on this name, moving into skepticism. Piper Sandler, they really cited that sportswear athleisure segment as their reason for dropping their price target to $50 from $60, also saying they think the turnaround's too slow, and particularly referencing Greater China revenue. They're also a little bit worried about margin compression because of tariffs, and also their weakening direct and digital channels. I mean, overall, it just wasn't a great report from them, and now the market's responding.
Yeah, I think we're circling the target now in the sense of how can seemingly two things be true at once, which is objectively the recognition, the power of the brand, the popularity of the brand lead to a stock chart that looks like this in what's objectively been a bull market for the better part of the last 20 years now, post, or I guess 15, post the GFC, and the reasoning might be twofold. One is, while you were talking, I looked up NFL, NBA, just objectively not niche sports, both Nike, partnerships on those two sports. Carlos Alcaraz, a little bit more niche in tennis, is a big Nike player, but you look at the brand recognition, it's objective, it's strong, and it's worldwide, but we are sometimes, I think, prisoners of our own bubble and our own reality. It's actually doing okay in North America. I noticed you didn't mention North American weakness. 4% constant currency growth 3 quarters ago, 9%, 3%, turning towards 3% again. But Europe, Middle East, Africa, struggling. China, absolutely struggling. And then, of course, it comes down to just a dollar and cents story, and the execution has been hampered by tariffs. And so they do so much stuff overseas in terms of their manufacturing, getting their product. Thin margins, big business, little impact, but go a long ways.
Yeah, I mean, their fiscal third quarter margins were at 40.2%, I think was where they fell. I mean, it's a decrease of 130 basis points from the year prior. That's not what the market wants to see. They've got regional pressures. I think I read a note from B of A mentioning that earlier. They've also had some departures, which is another issue. We never see any response that's generally positive when a company isn't doing well. When we see the departures, their chief innovation officer leaving, less than a year in that role. Also, it's the third such departure in under 3 years. So I think that there's just a lot of things weighing here. And Elliott Hill's been straightforward, saying, we're moving as fast as we can. It's not as fast as we wanted. And you did mention North America performed well. That was one of the places they were focused. Those numbers are holding, but China was another place they were focused, and those numbers didn't hold at all.
Do you think it's also possible, too, that, I'm trying to figure out a way to phrase this, and I'll use an example. Under Armour was very popular in sort of the 2010 time frame, and they tried to double down, and they expanded into footwear, and it was just a miss. Has Nike overestimated its branding power and trying to step into regions
successfully against a Lululemon and some of these other direct-to-consumer brands, and maybe that was just a misstep?
There's a possibility that's true. I think whenever you step into a fashion segment as opposed to sports apparel, which I would argue is sort of a separate sect than athleisure.
It's just footwear.
Yeah,
that's their bread and butter.
It puts, and fashion is cyclical. Trends are cyclical. Lululemon was the only thing anybody wore 5 years ago. Now I'd argue that's aloe, at least in major cities in America. So they're cyclical trends. But Nike Dunks are still on everybody's feet. Air Force Ones are still on everybody's feet. So you bring up a good point. Sneakers will always be their bread and butter, not Converse. Converse is not performing well. But their signature swoosh shoes are doing well. But you bring up a good point. Perhaps they just over-broadened their market. Yes, and if athleisure is not their space, they have to offload that inventory and focus on what does sell for them, which consists of, I mean, I was in the airport yesterday, certainly in 2 different heavily traveled international airports, and there were Nike shoes, I would say, on probably 20% of the people I saw.
And sometimes, hey, you just got to be refocused. And we're watching that happen at a company like Starbucks that maybe just saw their offering expand too much. They're honing it back in. Maybe that's what Nike will do too, as they focus on getting things back in order. We appreciate it, Marley Caden, with the update. Before we go to break, though, a quick look at an example trade in Nike. Say you think that it's finally time for Nike to make a turnaround. We got a bullish example here for FOMO, and it's risk defined most importantly in case it continues on its downward spiral.
Just
We're
about
looking at a
position
call
on
diagonal
Microsoft.
spread. It goes out to June to give this stock just a little bit of time to work its way back up, and it, of course, sells May outfit against it, creating that call diagonal spread. It's the 40-45. Really just looking for stabilization and upside from here in Nike shares. 325 definitely means you have $325 in risk on this bullish call diagonal spread. Best case scenario, move towards 45 or so by mid-May.
Maybe this will be my low-key earnings play.
Here as we shift towards social trends in the real world. We'll talk about how that intersects with the market and the economy.
29th, they have earnings. Hopefully they give me a bullish. Yeah, bullish P&L.
Smile. Carl. Yep, your #1 broker's here to welcome your new little dependent.
Actually, we invest with Schwab. We have everything we need all in one place.
I can set up her college fund.
I've been learning about trading strategies.
Schwab helps me generate retirement income. All this Schwab is everything
Everything
you need
on
is
slowly
making
went
me
green. That's what crazy.
Invest your way.
Circle going crazy. Look at that. Wow.
Download the Schwab Network app and stream live coverage wherever you are. Morning Movers brings traders the biggest headlines to start the day. From volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern. Morning Movers only on Schwab Network.
Welcome back to Next Gen Investing. I'm Alex Coffey, now joined by Sam Vadas, of course, host across Schwab Network, host Market on Close, of course, with Marley, as well as Morning Trade Live every morning here on Schwab Network. Good afternoon to you, Sam. Evercore ISI has home builders on their mind. Talk to us about what they have to say.
Yeah, so they've had 3
you've also dubbed, and I've heard it elsewhere, the loneliness epidemic. So let's start there. What is this loneliness epidemic, and how did we get here?
Okay, first of all, thanks for having me. I think that we are seeing like this trend. Actually, there's been a few years in that.
That's all we need for the bigs to fall and the market to
all the
take off after
that
that.
we went through in the last decade. So after the emerging of social media, people tended to say on social, on screen, because everything has been optimized for the screen, for screen engagement. So after the pandemic, we saw the explosion of the, let's say, dating apps, but also so the rise, but also the fall of dating apps, because people now, they tend to be quite overwhelmed by the interaction they are having online, and the lack of a real meaningful interaction in real life. That's the point. There's plenty of articles out there and research out there that are basically underlining the fact that all the dopamine stuff that we are having in the online interaction are not turning into something real, real connection. So that's the point, is bringing back people in real life and start to try to make a business out of it.
Yeah, this makes a lot of sense. I imagine some of those trends were already kind of snowballing down the hill, and then they just fell off the cliff once the pandemic kind of forced us into those kind of buckets. That said, we're past that, or at least we've reopened, we've returned to IRL, and we've tried to fill that void, or at least many have. And Fabio, you and your business are seeking to provide experiences, is my understanding, to help people who are experiencing that loneliness and wanting to re-engage. Talk to us a little bit about that IRL economy and the opportunities that you and your business are seeking to find consumers at.
Yeah, look, we started because we have a problem and would like to find someone to travel with, for example, doing trips, long-haul trips, and it's meant to target people in their 30s and 40s. The point is, you just moved to a new city, you have a new job, and it's very, very difficult to rebuild your network of friends. Or maybe your friends are like, they are married, they have children, so it's very, very difficult to travel with them. So the idea when we started in 2017 was, okay, I have to find someone to travel with. And we started, of course, providing itineraries like on-the-road tours, like 10, 15 days long. But what we immediately understood is that the real need that we were fulfilling wasn't about providing a nice itinerary, but was providing a context to make new connection, meaningful connection. So this trip were meant for people that didn't know each other before the trip, and they got to be friends during the trip, and they stayed friends after the trip. So we understood that the real deal was about connecting people, not about making them traveling. It's something slightly different, because we took care of the context, but the real need was about connection. In fact, people started to come back and get in touch with new people again. We did it with travel. The travel is just one of the channels, one of the means that you can use to do that. Now there's like a plethora of new startups working in real life. There are people organizing dinners for strangers. There are small groups organizing, again, running clubs. Or there are people using Strava, for example, to meet new people. So the point is that people are getting back to real, but not because they are just tired of swiping on the online side, but because they are looking for real connection. That's the point. And to get real connection, you need time and you need a proper context.
Yeah, this is really, really interesting. And so, Fabio, I know that this show is primarily targeting viewers that are self-directed, retail investors. But as an entrepreneur who's operating and building a business within this space, I'm sure you got visibility into the kind of demand for this type of opportunity for consumers who are seeking this. Is the demand kind of following the inverse to what we saw kind of pre-pandemic, the other way, where it was like slowly we're becoming more online? Is it we're slowly going back to IRL and hopefully
So, look, I believe that the peak of for the dating apps and let's say the online engagement has been soon after the pandemic. We were all about connecting in digitally, and then we started growing the need, or at least we started to appreciate this comeback of the real life in multiple forms. As I said, it's not just trip or traveling, can be dining out. Dining out is a very, very big industry. Still, what is changed is not the size per se of the industry, which of course is going back to real good numbers. But the point is the objective. So what is changing is the consumer behavior. So people are still going out and dine out. The point is they want to pair this experience with meeting new people, with getting new, we get to know new people. That's the main deal here. It's not just about the size and the volume of the, let's say, experience economy. Experience economy, of course, it went much better after the pandemic, and
Here's a
even
pullback.
being hit by COVID
So we'll get a bounce right here.
everything in travel that happened, he get back to the previous pandemic
Small round and
levels
we give
and
him a
even
bounce.
better. The point is, what is changing is the driver for people to travel, or the driver for people for going out. This is the
Right
biggest
here,
thing.
you can tell.
And from my observatory, what I can tell you is,
This is curling.
the future is not about like releasing the next big app change in the world, or getting customers, but it's just about intercepting in the right way, in the smartest way, the consumer needs. And that's why, for example, in the real economy, there's not just one dominant app or one dominant player. There are many, many players. Most of them are very local, they're very tiny, they are using very low code technology, still they are generating business. So what I'm seeing here is a huge space for everyone, and also the opportunity for small communities, local communities, just even using low code or high code technology to start their own follower base and their own customer base. Because people are ready, that's another very important part, people are ready to pay for that. They are ready to pay subscription, or just in form of, like, let's say, adding an amount to the dinner, whatever, but they are ready to pay for, they're not ready, they're already paying for that.
Really, really appreciate you taking the time, Fabio. It's been a pleasure, a great conversation, and look forward to the growth of your business and this trend continuing. That's Fabio Bin, the co-founder of WeRoad. As we shift gears, we'll welcome in our next and final guest of the program. That's Brian C., the founding partner of the Capital Stewards. We're going to take a step back. We're going to talk some macro markets. Nice little start to the week here for the broader indexes. Brian, I want to get your thoughts on how things stand so far in your eyes.
Yeah, Alex, thanks for having me on this afternoon. The market has been moving sharply in both directions to start the year, right? And that's exactly why long-term investing perspective matters. It would have been really easy to go into this weekend and say, man, they didn't get a deal done, so the market's going to go down today, so I should sell. And that would have been the wrong thing to do. Trading day-to-day based on the headlines is a low probability path to success. And so what we've been telling our clients is that investors that put money to work in 2008, before the financial crisis, in late January of 2020, before COVID, in 2022, again, before the tech correction, and even for folks that put money to work right before the Iran conflict that we're seeing now, those people are all happy investors today.
All right.
And so,
sorry, Brian, I was going to say, I got a quick question for you. I've been starting to make the case that the market's starting to look through this conflict. Do you think that there's evidence that that's the case, or is it too early to tell?
I think the market is absolutely expecting this conflict to come to a resolution in the next couple of weeks. If you look right now in the Middle East, the barrel of oil is trading at $125
experience like yourself, and they want to be a good capital steward of their own investments. Talk to us about some of the things that you've learned in your career, experiencing all sorts of markets, and where this one maybe fits within that framework.
Yeah, so I think the first thing for younger investors to understand is that asset allocation and investing in the market in a broad basket of different assets is the most important investment decision that they're going to make. It's really easy to get sucked into what's really cool today, what's fancy. Maybe it's Bitcoin, maybe it's gold, maybe it's certain kinds of technology stocks. But at the end of the day, the thing that's really going to matter over the long term is getting invested in different kinds of assets, stocks, gold, real estate, all different kinds of things, and then doing that over the long term. And that sounds really boring, right? Everybody's like, man, I don't want to hear that. I want to do something that's cool and nifty. But what we see over time is that that's what drives the highest probability of success for folks, in the long term. And so if you want to be successful, if you want to make money investing, the best way to do that is to take sort of a disciplined approach over the long term. And I've seen that. I've been in this business since 2008. I saw the financial crisis, and so I've seen that be successful now for really coming up on a couple of decades.
Seemingly more important than ever with this sort of K-shaped economy that we've started to see develop over the last 5 years. Even that's always been there, it seems very pronounced right now. What's your kind of longer-term view, I guess, with all the disruption of AI that's sort of looming large over the tech sector at the moment?
Yeah, I think this is a structural reality that we're going to have to live with for a while, right? The parts of the U.S. economy that are performing well are those that are linked to the AI investment cycle. These businesses that are investing heavily in AI and technology infrastructure, that's going to drive future profitability down the road, but that's really where the business spending is at today. And the consumers that have investments, I talked about this, just a minute ago for younger investors, right? Being invested is really important. And for consumers that have investments, they're continuing to spend because they're looking at their portfolios and saying, man, I have more money than I ever expected to have at this point in my life. And so, I think for folks, regardless of where you sit, sort of in that K-shape, whether you're sort of earlier in your career, whether you're sort of trying to grow your investments, or whether you've got capital and you're sort of sitting at the top of it, it's really important to be disciplined, continue to invest over time. I don't think that that's going to change, right? AI is only going to drive returns to be sort of even more bifurcated in the economy. So getting in is the right thing to do.
Well said. Brian C., the founding partner of the Capital Stewards. We got to run. Appreciate it. We'll love to have you back soon and talk more. And that's going to do it for us here on Next Gen Investing. Thanks as always for tuning in. We've got the watch list up next.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines.
important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it, to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years. Purchasing up houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
memory stocks with up arrows. And right now, as I look at the heat map, you see Walmart is down, even though that actually got some positive comments. We did see some upgrades today on some of the housing stocks, Quilty Home and Toll Brothers. Williams-Sonoma got an upgrade, and so that's a name to watch. CoreWeave has been killing it. Microsoft is unbelievable. Microsoft is a name that a lot of people are looking at. We're going to talk more about that this hour and next hour, too. And here's a look at the futures right now. We're looking at gold down $32 at the moment. It's at 47.55 a troy ounce. Oil is higher. Look, it's well off the highs today. Has been up over $100. Both West Texas and Brent crude have been above $100. So this is a nice move here. And now it's at 98.85 the barrel. The 10-year bond yield comes down. There's still a lot of bets that the 10-year bond yield will continue to come down lower. And the U.S. dollar is at 98.33, and the Bitcoin trade right now is down 1.6%. So that's worth noting. But we've heard some positive comments from Morgan Stanley today, J.P. Morgan, Goldman Sachs, on why you should be buying into the big picture. And so we're 2 hours away from the closing bell. As I just mentioned, some of those big names that are saying they're turning cautiously bullish. For example, that's what Morgan Stanley said. Let's take a closer look at today's market moves. Joining me right now, Diane King Hall is with me, and that first story here this morning, we woke up early, and then we heard from Goldman Sachs, which kicked off the bank earnings this morning. I love this kind of week. It is trading a little lower, but there was a lot of excitement around the name.
There was, and listen, banks take center stage this week. Goldman was first up at bat, and this one gives you kind of a temperature check on how the banks are doing. And to be fair, some of the banks have been underperformers so far this year, especially in the context of the outperformance last year. Now, Goldman actually did do better than expected. They had one weak point within their quarterly results. The CEO was a little bit more cautious with regard to the macro picture. Of course, we know there's geopolitical headwinds that have been surrounding and slowed some activity. But they did beat expectations on the top and bottom line. You saw a profit coming in at $17.55 per share. That was better than expected, up 19% on a year-over-year basis. Revenue topping $17.2 billion. We're looking at a lot of this trend. Global banking and markets up 19%. Asset and wealth management higher. Investment banking, huge surge there, almost 50% there. The CEO David Solomon saying companies are looking to scale and consolidate here, even with the geopolitical tensions. The hesitation, though, is an uncertainty tied to the Middle East. We know we're continuing to have those conversations. The peace talks ended without a resolution this weekend coming into this week. So we've seen some escalation of rhetoric, but it looks like investors are looking beyond that, especially when you look at the price action throughout today's session. Yes, Goldman is still under pressure, but as you mentioned, Nicole, big picture, quite the recovery that we've seen from this morning there. Now, the question is, can Wall Street keep up the momentum? We've got more banks reporting this week. We've got J.P. Morgan Chase up next at bat. We've got Citigroup as well at bat. And Citigroup's been a huge outperformer so far this year. Hats off to Jane Fraser for all the work that she's done. The momentum it's had both on a year-to-date basis and a year-over-year basis, especially given the weakness, for instance, if you look at the KBW index, it will be interesting to see how they perform.
I'm just going to add one quick thought, and that is on Goldman Sachs here. I mean, obviously, you heard David Solomon. He talked about, he really was pretty confident about how they were positioned, talked about the geopolitical landscape being really complex, but that the IPO market conditions will stabilize. They saw a lot of good things going forward, record quarterly, IB and trading. So there was a lot of good things. But the one thing I wanted to add was private credit. And Bank of America saying it's good to see how maybe these banks have less exposure to private credit than they did in past years. And so that can set the tone, too, for the rest of the week. You don't want to have too much exposure to private credit, which has been beaten down.
Absolutely.
So we'll talk about Rule of 10 here. And this is something that we don't necessarily hit, but Goldman Sachs has its own way of looking at stocks. And maybe stocks that really have some growth potential going forward that have been beaten down, right?
Some of these on the list now were high flyers once upon a time. So you get these emails from Goldman every now and then that kind of takes an assessment of how they look at the market, whether it's on the economic front or the equity front. So there's something they have that's called the Rule of 10. And you put this in the context of what has been your high growth names. Think of like a
super slow.
I love this
It's
list.
been
Just
slow all
going
day.
through it, and it obviously talks about the
No
last
real
10
momentum.
years. I'm sorry, the last
I mean,
2
it's
years
going,
each
but
was
it's just
10%
going slow.
growth, and then the next 3 years was 10% growth. The projections, right? And I thought this list was really cool. I mean, I was looking up some of the names too. Uber, which had a $94 target today. Netflix, which is expecting ad revenue of $3 billion. We also saw some positive comments on Netflix as well. Meta, which actually has an AI version of Mark Zuckerberg.
I know,
You can
that's
talk to
wild.
your AI boss. I mean, I can't get over it. It's going to have these mannerisms
Yes.
and all these things, in addition to being a
Very
digital
meta.
advertising
basically being re-looked at, especially given the context of where we are on the geopolitical stage and the AI demand that people see that's real, that's physical. From data center development to energy and power plants that are being built to orders for chips, it's there. Let's be honest, the stock is barely up 1.2% for the year. It's down 2% for the past 6 months, and there look like it's $178 to $180 support level on the back end, and on the top end, there seems to be immediate resistance at 190 to 192. But once it breaks past 192, you're going to see something different. And it's not because these are made-up numbers. I mean, they're real revenues. I mean, you saw 78 to 79 billion. You see Jensen talking about a $1 trillion in sales from Vera Rubin and Blackwell through 2027. These are real numbers, and it's a year-over-year increase of 77 to 80%. You still can't deny that. And so when we look at the reset that's going to happen after this Iran conflict, you're going to see something different. You're going to see people coming back to tech as a flight back to safety, and more importantly, you're looking at tech as the only growth driver because it's the only unregulated industry out there, and chips are the heart of it, and NVIDIA is at the heart of that AI boom.
And, so many guests who come on say how NVIDIA is such a, enclosed network, that it does a little bit of everything. It's not just, the chip sector or just, what a big picture it is. And that's what really differentiates it from its competitors. Would you agree to that?
You're absolutely right. I mean, what they have done is they've gone from chip all the way to software, all the way up to agents. And they have not only invested in companies that are in the future, they've not only invested in the rest of the market, they've taken the entire ecosystem with them. Not just through the CUDA software, not just through simulation through the Omniverse. We're only seeing 10% of the roadmap that's imagined in Jensen's head. And if you just look at market share, they have 94% of the add-in board market, 80% of the AI chip market, 80% of the AI data center market, and 95% of the gaming GPU market. And because they're investing and partnering all the way up the stack, they have the entire AI factory. This is compute, data, pathways, orchestration, and that's what's giving them leg up. And so they're now in software, they're now in connectivity, and that recent deal with Marvell shows that this glue moves across chipsets, optimizing power, latency, and they're basically building an OS for a single platform. And what they want to be is that one-stop shop where you access tokens, and tokens are the currency for AI. They plan to be in every piece of that business.
Yeah, I mean, Marvell is hitting record highs, right? I mean, you don't see that every day. In fact, over 1 year, it's up 113%. Year to date, it's up 53%. And one of the articles said how it's getting a boost from Amazon, as well as from the optical business that it has. And we know there was actually an optical trade show recently. That was a big deal, too. It wasn't just the GTC show for NVIDIA. That following that was that optics show, which had a lot of the big names, too. So Marvell getting a nice boost here.
Yeah, and this is just the beginning. We haven't talked about physical AI. We haven't talked about sovereign AI. Every country now wants to have their own AI so they can get the scales that the companies in their country are protected, their cultures, their values are being delivered in the right capacity. And the physical AI with the robots is coming 3 to 5 years out. It looks great now, but it's going to take 3 years for it to get commercialized. So sovereign physical AI, and then the next set of chips. And the inference that they're doing now that we're moving out of training to inference is really shifting. So, but there are constraints. There are headwinds too that are in this space.
Ray, I can't tell you how many people come on and they talk about AI strength. How many people come on and talk about surging global demand and the AI revolution, and that we're still in the early stages. How does this Iran war factor in for tech investors overall? What would you say to them? Is this a great opportunity on the pullback? Because you have a lot of great names that are down, 20% off their highs right now, right?
Yeah, there is. Here's the thing. If the Iran war continues for 3 months, we're going to run out of sulfuric acid. We're going to run out of supply chains. You saw today, it's kind of funny, it shows up on your terminal. It said, Toto not shipping any toilets because their supply chain is completely cut, right? So that's going to continue in the chip sector and in the AI sector if we're past 3 months out. If we're before 3 months out, which is where the traders are at this moment, they're betting the fact that this will be over in 3 months, and then things are going to be okay. But what we're missing is sulfuric acid. That's what you need to etch chips on. You're missing all the components that are passing through the Strait of Hormuz. You're missing all the components that you need, not just the chemicals, but also the capabilities in terms of moving chips from one area and then back to the other, back to Taiwan and back out. So that's really what's holding things up. And so those noteworthy over 3 months, which is why you see the hedging in a different direction.
Well, it's good to see you. Ray Wong, thank you of Constellation Research. Appreciate it. Well, some of the latest AI updates from Oracle have that stock up 11%. We'll dive into the technicals for Palantir and NVIDIA. A lot more to come. We'll look at the energy sector as oil prices still hovering around $100. What's next there? The watch list. We'll be right back.
Kick off the morning with the data and the decisions for moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
Trading with Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time.
Welcome back to the watch list. We're watching Oracle. Oracle is rallying today, up 11% after the company unveiled AI-focused updates to its utility software suite at its Customer Edge Summit. Now, the company also announced that its Acon X platform has been updated with new capabilities to improve project transparency and control. And even after today's move, Oracle shares, well, they're down more than 55% from the September all-time high. And here is a look at how the rest of the group is doing. So you see Oracle there, but look at the rest of the names. Software stocks, looking at Salesforce and also Palo Alto and ServiceNow and Fortinet and Adobe. You know what I see? Intuit, green, 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 Microsoft, green, Synopsys, green, Intuit, green, CrowdStrike, green, etc. So that's what you're getting there today. Wow, right? You're going to see that there. And Palantir has been an incredible story, too. I mean, Wood just bought up about almost $11 million worth. Let's get some technicals for all of this. So now it's time for Charts to Watch. Joining me right now, Rachel Michelle. Oh my goodness, it's great to see you, Senior Manager of Trading Services at Charles Schwab. And Rachel, I know you've been watching a lot of these stocks that have been on the move. The geopolitical story, day in, the headlines, they can sometimes really move this market around and can weigh
that first sign of that possible bottom taking place. So looks like we had that false breakdown at support. We know that failed breakdowns or failed moves really turn into fast moves in the opposite direction, and that's what we've seen here. So I will say NVIDIA does have short-term support right in the middle of this range, right at that 200-day moving average, right around 180 or so. And then resistance, long-term resistance is going to be up ahead at 195 from that range. But on shorter time frames, you can see bottoming formations like a cup and handle pattern. You see that momentum has actually shifted into a bullish regime on the shorter time frame. So I will say if NVIDIA can make its way up to and out of this range, they could be looking at much larger measured moves to the upside past those all-time highs around 220.
All right. Rachel Duchelle, thank you. It's great to see you, Senior Manager of Trading Services at Charles Schwab. Thank you, Rachel. Coming up, our panel is standing by. We're going to look at the surge that we've seen in oil prices. You saw 117, 119. Okay, right now, we're seeing it at 98 bucks. But better rub your eyes because they're moving around a lot. Conflict in Iran continues, and what could happen next? We'll be right back.
Intern, this place is incredible. It's where I get all your office supplies. Your golf balls, your fancy coffee, giant TVs, everything in one place. It's like Schwab. Everything investors need, all in one place. Yeah, Schwab, they can do everything. Invest, trade, get full service wealth management, and anything in between. I think I'm gonna be sick. We have to buy that now. Schwab.
Invest your way with Schwab.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Real-time market moves, earnings breakdowns, and trade-ready insights. Follow me on X at Sam_Vardis and connect with me on LinkedIn or Instagram for more. Welcome back to the watch list. We want to take a closer look at oil, the energy sector. Now, some of these names have been soaring. Oil has been soaring, but it's a lot of back and forth. And we're going to have a back and forth with Andrew Graham, Managing Partner, Jackson Square Capital, and Ben Cook, Portfolio Manager at Hennessy Energy Transition Fund. We also heard from OPEC and lowering the global outlook. And we know that the production from Iran and Saudi Arabia and UAE has all come down a bit. So, Andrew, I'll start with you. Some of your thoughts here as we take a look at the big picture. Andrew, go ahead.
Well, I think the price of Brent crude that sort of spooks equity markets is usually something above $120 a barrel. So we're beneath that now. If the conflict ended tomorrow, I would think that prices go back to something in the low 80s, high 70s, something like that. We had a structurally oversupplied market prior to the conflict, and I don't see any reason why we wouldn't return to that, right after the conflict ends. But, it'll take a while. I see structurally higher oil prices for 3 months, probably in that $80, $70 range for about 3 months.
Yeah, I had a guest who said 65, 70 for oil. The front contracts are coming down, so they do think it's coming down. Ben, your thoughts? Do you think that the crude oil supply disruption is really unprecedented? What say you?
As we've said, we think the magnitude and the duration of the outage ultimately will determine where pricing goes. And what we've seen
Headline inflation is definitely moving higher, right? That's food and fuel is like a big component of headline inflation, but the core rate, I think, is what the Fed cares most about. Fed policy is very important in terms of determining, what growth looks like, what earnings growth looks like going forward. We still have 2 rate cuts priced in for this year, one in September and one in December, because core inflation, the key drivers of core inflation being housing, shelter prices, and wages, those are all in disinflationary mode, and we just proved it today with existing home sales for March down 3.7 percent, month over month. So no, we don't think inflation's going to be the big issue here. The core inflation rate we see is well contained. It's something close enough to 2.5%. You can see that in the inflation break-even yields that have been well anchored. Anything beyond 3-year inflation yields have been well anchored.
So what's the biggest energy story, Ben, outside of the Strait of Hormuz? What are you going to be watching? I know you look at a lot of the stocks, the energy equities, the other stories.
So yeah, I'm sorry, go ahead.
That's for Ben.
Sure. We continue to look at the disruption in refined product inventories as well. The Strait has actually seen obviously a very significant volume of crude oil disconnected from the global market, but we've also seen significant volumes of refined products as well, on the order of 3 million barrels a day, as well as natural gas. We think obviously those commodities are ones that are maintained in storage around markets that are dependent upon imports, and to the extent we see supply impacts there, we'll, just as with oil, we'll see elevated pricing in refined products as well as natural gas. Now, obviously, we're during the shoulder period in the northern hemisphere when we have generally weaker demand than we do throughout the year. But if this conflict continues and the duration, as I mentioned, continues to extend into the future, that's going to have important implications for obviously refined product prices like jet fuel, gasoline, as well as natural gas going forward.
Yeah, understood. And a final quick thought here, Andrew, a lot of your stock picks that came in today had nothing to do with energy. Do you own any energy stocks? And if you do or did, what did you do with them?
We've got just 2 positions. They're sort of idiosyncratic positions. One's California Resources, symbol CRC, which is, there's a, believe it or not, in California, there's an improving regulation kind of environment that's going on, a little bit of deregulation that's going on, and it's going to help California Resources. And then on the other side, we have TC Energy in Canada, that is a vertically integrated natural gas producer. So those are our 2 names. We're not big because we believe that the oil market is going to be oversupplied again once this situation resolves itself, and that was originally a function of trying to force Russia to the negotiating table with regards to Ukraine, and that hasn't changed at all. So again, we expect oversupply, but it's going to take a long time, or 3 months probably max, for this sort of physical supply issue to resolve itself. So yeah, structurally higher oil prices in the $80 range, high 70 range, and I don't see that becoming a big problem for U.S. growth.
Yes. Andrew Graham and Ben Cook, thank you both so much. A great look there at the oil energy stocks, where oil could be headed, nat gas, and more, all about that. Thank you so much. Now we'll continue to take a look at some of the sectors that are on the move in today's session and examine a new ETF that focuses on crypto overnight. It's after the close. You want to hear more about this, so watch us. We'll be right back.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Real-time market moves, earnings breakdowns, and trade-ready insights. Follow me on X at Sam_Vardis and connect with me on LinkedIn or Instagram for more.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization. And track market trends with up-to-the-minute news and insights.
Welcome back to the Watch List. I'm Nicole Petalini. We're coming to you live on the floor of the New York Stock Exchange, corner wall and broad, looking at the sectors on the move, making the markets, stories, the big ones. And Kevin Hanks is joining me now, and you're looking at today's overall trading. I saw some up arrows in some cool sectors. Some of your thoughts today?
Yeah, hey, Nicole. You know, it's basically as we get close to the 2 o'clock hour in Chicago, it is 5 up, 5 down, and 1 unchanged in the S&P 500 sectors. Why is the market up then with a mixed market? Because information technology, communication services, and consumer discretionary are all 3 of the main leaders on the upside, and they're such a big fraction of the overall S&P 500 that it's leading the market higher. Crude oil, that is such in focus right now, was up overnight. It was up early this morning. It's still up, but it has worked its way down the rest of the trading day today. So that's not up as much as it was. The overall market is feeling a little different. I'm looking at the VIX. That's barely positive on the day. Despite the market being up, it's still positive. So I think when you look at it, it's a relatively mixed day in terms of the sectors. However, the leadership, especially within information technology, the software stocks, all higher today. A big bounce back in that software sector that, as you know, has been so heavy, Nicole.
5 up, 5 down, 1 around town. I like how you said that, because the truth is this morning you only had energy higher and the other 10 were lower on the sector. So what a day it's been so far, and it's not over yet, folks. Kevin Hanks, thanks. Let's look at the ETF space. It's time for the ETF watch list. Joining me right now, David Nicholas, CEO and founder of X Funds by Nicholas Wealth. And taking a look here at night, NGHT. Tell us about this one, a little overnight exposure for folks?
Well, you know, really excited to talk about this fund. It's the first of its kind overnight Bitcoin ETF. So yeah, essentially what we're doing is we are buying Bitcoin at the close. So we buy it at the close, we hold it overnight, and we sell it right at the open. Because it's really interesting, if you look at the numbers, Nicole, since IBIT was started in January of 2024, it's pretty fascinating. If you look at all the performance from IBIT have come in the overnight hours. So if you just held it in the overnight hours, you were up 200%. If you just held IBIT during the intraday hours, you're actually negative 50%. So all of the returns, 100% of the returns since January 24, can be accounted for the overnight hours. Our fund attempts to really hopefully give that arbitrage, give investors the ability to really own that arbitrage and have exposure just the overnight hours, and then own treasuries during the day. So first of its kind and totally unique, Nicole.
Look, I mean, 200% up or minus 50%. Which one do I want? I mean, it's really obvious that the overnight in this case from January that you did the summation. But what's interesting, though, did that come from 50% of the time it was higher, or was it big moves that really accounted for that move? You know, did you have to hold it the whole time? Obviously, you had to hold it the whole time to get the returns, but is it more than half of the percent of the time that it is higher overnight?
Yeah, so it is interesting. We have been in a bull market for Bitcoin during that time period. So what we do see is the overnight hours, the majority of the up moves for Bitcoin happen in the overnight hours. So that benefits the strategy. But again, to give some context, year to date, right, we've been in somewhat of a bear market for Bitcoin. And so how does the performance look? So if you look at the numbers just year to date, it's actually, if you were to do the overnight trade is down 14%. The intraday is down 9%. So we actually So we actually think this is a really unique way. If you already have exposure to Bitcoin, but you're a buy and hold investor, why not give you some time diversification? Only have exposure to part of your Bitcoin exposure just in the overnight hours. We actually think, as a prudent investor, this is a new way to think about investing as different type of diversification, being time versus just asset class diversification. We think this one, and also just from a tax standpoint, if you were to replicate this, Nicole, just for you're going to buy Bitcoin at the close, sell at the open, you would get killed in taxes. ETFs under the tax code have a very unique wrapping where we do not have to pass on those capital gains to investors, so we can do this in a very tax-friendly way because it's sheltered inside of the ETF, where if you're just a retail investor trying to mimic that trade, it'd be tough to win with the taxes you have to pay.
And I like that you're talking about tax efficiency, right? I mean, that is great. People love that, especially because they're 2 days away from April 15th. David Nicholas, you probably gave people some cardiac arrest, and they're probably saying, oh, I didn't get that into my accountant. David Nicholas, thank you, CEO and founder of X-Funds. But in this case, you don't have to do that with Night ETF by Nicholas Wealth. Okay, coming up, we're going to take a closer look at the outside trades that we're looking in, the outsized trades that we're looking in the market. See, Alex Coffey has been all over this, and he has been looking very closely since meeting Microsoft, Alphabet, and Intel. So watch us. We'll be right back.
The final 90 minutes of the trading day, that's when markets make headlines and traders make decisions. From earnings shocks to sector rotations, we're tracking the catalysts that move markets right into the close. Here on the floor, I bring you real-time sentiment from traders driving the action. And in Chicago, we break down the data, technicals, and trades you need to see before the bell rings. Live coverage of the close every single day. This is Market on Close, live weekdays 3 p.m. Eastern, only on Schwab Network.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour.
Hey, investors, you know the market moves. Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Sam Vardas, live from the New York Stock Exchange. When the market moves, we're on it, getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Welcome back to the watch list. Time for big moves in the day, and where we are looking and highlighting outsized options trades from today's trading activity. Joining me right now is Alex Coffey, and he has found 3 bullish trades in the tech sector today that you're going to share with us. So we're looking at Microsoft. This one is up first. It did struggle to start the year. It's down more than 20% this year. It has some new features that, you know, we talk about agentic AI. It's up today. I did see an up arrow today, right now up 3%. And you found a trade that you're going to share with us, a bullish trade.
Yeah, this is a very bullish trade, and it's a very large trade, Nicole, even by Microsoft standards. 10,000 of the August 21st of 2026 450 strike calls traded for an 890 debit this morning. So I'll do the math for you. That was $8.9 million worth of options premium on a trade that not only needs upside, of which it has unlimited profit potential if this stock really does move to the upside, but it needs a significant rally of a move to 458.90 just to break even by that August expiration date. So nearly $9 million in options premium, Nicole, for a stock that needs to move
60 by that time, but for it to be there at the expiration date, only about a 16% chance. So we're looking at about 1/6. So 1 in 6 times it breaks even basically at expiration based off current option prices. But if you're bullish, unlimited profit potential if this stock were to make a huge run.
All right, 8.9 million. That's huge. As you said, you can buy the Microsoft standard, so we are watching for that. And it has been down 30% from all-time highs. Let's get you here to Google. The bullish trade is up on the year, up more than 105% in the last 12 months. Let's check it out.
Yep, similar trade structure here, Nicole, except in this case a little bit smaller in size. And by smaller in size, it's only 3.6 million in options premium. Trader bought 3,180. A little bit shorter dated calls here in this case. The June 18th, 2026, 335 call for an 1130 debit. Break even on this trade would be 346.30. Right now, Google trades at about in those Google L shares trades for 320. So it needs about $26 worth of a rally just to get to that break even point. So if we use the 345 call as a similar metric, 60% probability of touch, about a 30% probability of finishing in the money. So on this one, Nicole, higher probability of success, a little bit smaller trade, though certainly less units.
And the exciting part of Intel today, I mean, what a run it has had. And then hits 5-year highs today. I mean, no one was really expecting that. There was a time it was so beaten down. Let's talk about the bullish trade you found.
Yeah, we're almost running out of strikes here, Nicole. That's how rapidly things have repriced in the case of Intel. This is a much shorter dated trade. This is a trader who's looking for a move to happen this week. It is the April 17th 70 strike call. Earlier today, they bought these for 68 cents. In real time, they're trading closer to 55 cents. So right now, a little bit underwater. That theta really moves a little bit quicker as we're only 4 days to the expiration date. Smaller trade, but so short dated, out of the money options premium. In many ways, this is almost a bigger trade given how quickly this could be worth zero if it doesn't get a move quick. 9,996 of the 70 calls expiring Friday. Needs a move to about 70.68 to break even. Looking for more upside. Can't believe we're looking at $65 in Intel. What a last couple months it's been.
It really has been incredible. And when you think about how the NASDAQ has been moving here, last week we saw the NASDAQ up 4.5%. And year to date, the NASDAQ now is just down, it was like 0.3%. I mean, is it almost positive year to date? Just turned positive. The NDX is now positive today with this move. I mean, and you just talked about 3 tech names. It's pretty incredible, right?
No doubt about it. And call buying returning. Microsoft certainly leading the charge as one of the most highly active call bought stocks today and one of the market's general. So we'd love to see, if you're a market bull, a recovery of Microsoft leading the Mag 7, which of course leads the market.
Yeah. Thank you so much, Alex Coffey. Great look there at Microsoft, Alphabet, and Intel. Alex Coffey, thank you. And thank you, friends, for joining me here today on the new watch list, where now we are seeing the S&P 500 and the NASDAQ positive for 2026. I'm Nicole Pevelides. Download our Schwab Network app. It's available in the Apple App Store. 24/7, SchwabNetwork.com. Market on Close is next.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it, to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years. Through purchasing of houses, opening up our business, having children, they've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Stay connected to what moves the market. Download the Schwab Network app and stream anytime wherever you are. Good afternoon. It's 3 p.m. on Wall Street, and this is Market on Close. I'm Marley Caden, coming to you live from our Chicago headquarters.
Hello, Marley. I'm Sam Barnes, coming to you live from the floor of the New York Stock Exchange. Let's take a look at what is coming up on today's show. The Paramount Skydance takeover of Warner Brothers Discovery is facing some new challenges. So what does the deal mean for overall entertainment space? We'll discuss that. We'll also get some stock picks in tech and cybersecurity and why utilities and fossil fuel energy companies may actually be overvalued after the recent rally. And today's closing bell ringers here at the New York Stock Exchange, Diversified Energy. They're going to stop by the set to discuss their change, the listing to the New York Stock Exchange, and how they're feeling about the Middle East war currently going on. But Marley, take us through what you've been watching in the these markets today.
Oh, Sam, you know I'm excited to talk about that P-Sky Warner Brothers deal. But as far as what I've been watching today, Goldman Sachs, of course, top of mind, moving lower despite posting a beat on both the top and the bottom lines. The big bank reported record quarterly equities trading revenue in the first quarter, but shares still dropped after its fixed income number significantly missed expectations. Intel stock is higher today, though, and on track for its 9th straight day in the green after getting a price target hike over at Jefferies. The firm maintained its hold rating, but says that increasing CPU demand and favorable pricing conditions will benefit the chip maker. But Best Buy falling after getting a double downgrade from Goldman. Analysts lowered the price target all the way down to $59 with a new sell rating, as it sees potential risk to the company's sales going forward, as it has to deal with higher memory costs as they start to work their way into the prices of electronics. Lots to talk about there, but first let's check in with the markets, see how things are shaping up as we head into the end of this Monday trading day. We are holding on to green across the board. The S&P trading about 0.6 higher at 68.57 right now. The Nasdaq about 0.7 higher, 25,285. The Dow was weighed down heavily by those Goldman earnings. Goldman clawing some of that back, still in negative territory, but the Dow overall up about 0.25%, adding 104 points at 48,022.91 right now. And the Russell 2000 trading more than 1% higher at 2661.83. Taking a look at the 10-year, we're falling just slightly. We're down to 430 right now. The dollar at 98.18. For gold, we're down about 0.5%.
One higher.
61.80 a troy ounce. Crude oil has dipped below $100 a barrel. We were up north of 102 earlier this morning, just a few hours ago. And Bitcoin also falling just ever so slightly, but still pretty range-bound, down about 1% at 72,620. I do want to check back in with Sam, though, and see what top stories caught her eye today, or what sectors on the move. Sam, what's sticking out to you?
Well, it really took a few hours, didn't it, Marley, for stocks to warm up this morning on these Iran headlines, but we got there in the end.
Yo, Kiba.
They're basically saying the worst is perhaps behind them as far as the market bearishness is concerned. But markets really, Marley, at the mercy of Iran headlines right now. We're in 5 hours into the U.S. blockade of Iranian ships in the Strait of Hormuz now. So we continue to track these headlines, but suffice to say, things are holding up pretty well at the session's high as we speak. So I'm joined here by Nicole Petalides to break down some of the stories that I just mentioned. And Nicole, obviously software is front and center. We saw this nice rally out of the gate, even before the major indices actually managed to get going on some of these Iran headlines. I mean, I'm looking at the ITV, as I mentioned, up 5%. I love numbers, and it looks like we could be on the longest losing stretch for the ITV in 4 years, even with this gain today. Intel, a 9-day winning streak. If it closes high tomorrow, it'll actually be the longest winning streak in 20 years since 2005. So I thought that was fascinating. But just talk us through some of the stories and catalysts which might be behind this today as far as what you've been seeing.
Yeah, I mean, that's probably when some of the other big names like Duran Duran or something
exactly,
were really popular. You know, make a good point. And you mentioned Intel, and today with this run that we're seeing, and today a 5-year high on that stock, which I know you know. But it really is exciting because Intel was sort of left behind for a little while, had some tough PR headlines, was sold off, and people didn't love Intel for a while, and look at it now, an incredible long-term run and new 5-year highs. I think about the SaaS apocalypse, hundreds of billions of dollars in software market cap erased. And now what? I mean, you can't say that AI agents are going to eat into the whole group and nothing is worthwhile. This is the typical, Sam, baby out with the bathwater.
That's right.
It's too much. Even our own friend Dan Ives has said the carnage is overdone, arguing that the market has really underestimated what AI can really bring to the table, expand in the world of software. And in fact, he leaned in and he re-added ServiceNow and Salesforce to his top AI ideas list. So, and he said it, he framed it with this, and he said, a generational buy. You know, that instead of it's a terminal decline and oh my goodness, it's over, it's the opposite. It's your big opportunity and a generational buy to get into some of these names after hundreds of billions.
Valuations come off considerably, and I mean, he makes that point as well in his notes, doesn't he? I mean, while we're seeing another turbulent week here, I mean, these tech winners are on sale, and he's been beating that drum for a while that this whole SaaS apocalypse thing has been a little bit overblown. I know there's been that short-term money where we've seen swift rotation, quite aggressive moves in and out of the softwares and the hardwares. We've been watching that semi-verse software spread quite closely over the last year or so. So it's a really interesting move today while you have chips up as well as the softwares too. So it seems like a bit of an everything rally across the space today, even though some of the Mag 7 are lagging. But we also finally are getting back to fundamentals. We're getting some corporate reads on what is going on right now, something to chew on, some meat on the bone. So we got Goldman today. It's been an interesting reaction. It was down, what, like 3 or 4% earlier today. It was really weighing on the down, but it's up like 100 points now, and it's coming off the low. So what happened there?
Yeah, you know, with Goldman, I think it was some of the buy on the rumor, sell on the news. I mean, the weakness was actually in the fixed income and commodities part of the story. This stock had a beat on the top and bottom line and actually saw investment banking, trading revenue surging and really set the tone for the rest of the week. Also, the fact that these names, how much private credit are these bank stocks exposure to? So I think that's another great point. But you don't have to worry. After the financial crisis, these banks won't have as much exposure to this kind of volatility. You mentioned Palantir, and I thought Palantir was a great part of our story. I just wanted to add one little quick thing because, you know, as our friend Jim Cramer, he called it the software empire strikes back. And so what we saw there was that the software empire strikes back, and he really talked about some of these names coming back. But when I was looking at Palantir today, do you know that Kathy Wood of ARK bought in about 85,000 shares like about a week ago, $10 million worth, and that this is a name that's also fast catching up. So I will leave you with the final thought here, and that is that many of our guests tell us how Bitcoin and software can sell off and sometimes move in tandem. And when it's risk on, people get back in because they won't throw them out. They still love them. They're just not the first choice. And so when it's risk on, you may see some of these names back higher once again.
Yeah, that's a fascinating point that you make. And then obviously sticking with this whole AI
surging global demand, data center revenue, the cyclical spending. AI is not stopping anytime soon. Every guest who comes on here and picks something AI related. And CoreWeave, as you know, was a pick, and you talked earlier today about the analyst calls as well on CoreWeave. You mentioned I think you talked about the Macquarie call.
Yeah.
And I also saw Bank of America. Macquarie had a 125 target. Bank of America had a 120 target. You know, everybody's in. It's all in on a name like CoreWeave and some of these AI-related stocks. So really good news here, and and becoming a structural player. See, I said it's becoming a top player. It is no longer in the background.
Yeah, it certainly seems like it. It's fascinating, isn't it? Because you still have some of the risks around concentration, and then also I mentioned earlier, I've been reading about how some view this as one that is so closely tied to NVIDIA as well, that if NVIDIA sneezes, CoreWeave could catch a cold. But I think, obviously a really positive and much more sort of bullish perspectives and more conviction coming from the street around this one. Yeah.
That I know you saw this, but the Anthropic Mythos really crushed everything because of its capabilities to find. We are not releasing Mythos out. It is not going out, so don't worry about it. It is not going out to, sort of rule the world and ruin the world.
Today is the
day. I think it was so powerful that they had to all get in a room together in DC last week, Beth and Powell and some of the bank CEOs. You just wonder. So, yeah, interesting times, but obviously we're in partnership with CoreWeave too. Nicole, thanks so much for joining us today and running us through some of these top stories for us. I'll send things back over to Marley in Chicago for now.
Thanks so much to Sam and Nicole. Coming up, we're going to turn
I'm
our
over
focus
watching.
to the entertainment
Bro, you know
space.
my
Talk about the
616
latest with the
calls
Paramount
were
Skydance
printed
takeover of
today.
Warner Brothers
Probably
Discovery.
held them
What
even
will the
more
deal
longer,
go through
bro.
it all? What does it mean for streaming and the movie business? What's the latest?
They
We've
went
got it for you next.
They went to 615, bro. I should have won 1,000,000% today.
Hey, investors, you know the market moves. Schwab is here to help you move with it.
Well, of
So,
course, you probably
whether
gonna be
you're
like,
buying,
oh, that's because
selling,
you don't know how to
holding,
trade,
or planning,
right?
whether you're
You get
ETFing or
200%, you're
401k,
supposed to hold it for more
saving,
money, right?
spending, or even retiring, you can count on Schwab. Market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest.
So I bought an
your
AT&T
way.
put too, though,
Sounds
bro.
nice,
That motherfucker is up $10 right now, bro. I'm
Live
up
from the New
50%
York
on that
Stock
thing.
Exchange, and this is the watch list. Your midday view into the trends driving the markets with a sharp focus on technology, innovation, and companies leading the next wave of growth.
Should I sell some of these
Big
positions
movers,
today or
real-time
tomorrow?
interviews, and insight from analysts, founders, and market voices you trust. The watch list, 2 p.m. Eastern, only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different
Hey, how's work
investment
today?
styles, including growth, value, income, and more. Best of all, you can ask questions by chatting
I hate that.
directly with an education coach.
Well, actually, that's good, though. Time's been going by kind of fast.
Tune in live or on demand. Head over to schwab.com/coaching.
Yeah, never mind. Yeah, that's a good thing. I finally got my card back, and I don't know how to act.
Real-time
What are you gonna do now?
data-driven analysis from U.S. equities to global macro matters. Schwab
In the
Network
mail?
connects the dots. Watch live. Subscribe free at schwabnetwork.com.
Welcome back to Market on Close. I'm
Where's
Pat Barnes on
these?
the
Got
floor of the
2
New
in
York
on
Stock
me. He's
Exchange
trying to go on
alongside
2K.
Marley Caden over in Chicago.
And I'm a
Let's
pair
check in with
offline. I
these
don't even know how you
markets. We've
see
got
me.
about 45 minutes left in this session, and
Motherfuckers really be
obviously
spies
took a
for
little
real.
time to warm up for stocks this morning, which looked a little bit directionless as this U.S. blockade of Iranian ships over in the Strait of Hormuz kicked in at 10 a.m. Eastern. But then we hit some intraday highs, particularly off the back of some of President Trump's commentary around Iran agreeing on a nuclear issue that is as per the White House, and of course calling Iran this morning that they do want a deal. So we continue to watch these markets and this sort of shadow boxing match between oil and stocks right now as oil came off the triple digits, which had sent stocks lower, remembering regionally speaking as well across Asia and Europe. And right now we've got it at $97 a barrel or so. So it was trading up around 103 earlier today. So we've come off the high
So I really would have actually made more money though, but these AT&T leads is really hurting me, bro. I'm down 50% on them.
Interestingly, even though we have some risk on in these stocks, and then the 10-year yield, which is holding pretty steady there at 4.31. Obviously, we've got some more inflation data to chew on later this week, but we're back to fundamentals, back to some corporate guidance, which is good news for these markets as we look for some direction, particularly from the banks this week. But I'll send things back over to Marley in Chicago for now.
Thanks so much, Sam. To take a closer look at this Paramount Skydance takeover of Warner Brothers Discovery and the evolving media landscape, joining us now, Seth Schachter, the managing director at Strat Americas and host of Breaking Down the Biz podcast. Seth, great to have you with us. It's a poorly kept secret. This is my favorite story in the markets right now. You know, the latest update is we got a lot of these big Hollywood names signing this open letter saying it's the worst possible time for this deal to go through. They don't support it. Does that move the needle at all? Does the deal still go through?
It could. You know, this is there's going to be a shareholder vote in 10 days, and I personally, expect that the vote will go through. But, it's a really problematic merger from a lot of perspectives. Netflix, dropped out and didn't win, and you've got kind of the Noah's Ark thing, if you will, of two studios. They're not identical coming together, and a lot of it was predicated on cost cuts, meaning
I'm getting liquidated on AT&T.
Whatever is said, I probably still of the school that there'll be production cuts in terms of the number of things that are financed and released. And, what it means for everyone in the town, both the business and the creative community, which is what the news is about today. And there's a long list of everyone from Lin-Manuel to Ben Stiller and, Jane Fonda. It means that we're losing a studio, and we're probably losing
what is going on with QS?
Talent, whether it's
QS is a bum stock, bro.
And, it's a legacy studio. It's not just some run-of-the-mill studio. It's Warner Brothers. So, for sure there's going to be a lot of outcry on it, and it's very, very legitimate from the perspective of losing a bond.
Bro, the government is supposed to be investing in farms.
It's not monopoly, but I totally understand
that's what they said, bro.
Why it's happening. But I
that's what they
think
said, bro.
Even with that.
So even with that, we've got promises from Paramount, from Ellison saying there won't be layoffs. We're still going to release these 30 plus films per year. Nothing's going to change. How realistic is that concept? I mean, you're combining two monster studios, as you mentioned, giving a lot more pricing power to one big major player. One of the major concerns cited in the open letter is these sort of mid-level films, some of these indie films that just won't have the ability to get made with fewer options out there. Where do we see this show up? Is it in wages in Hollywood? Is it in employment opportunities? What concerns are we going to see rise up to the top if this deal goes through with the shareholder vote, and then, of course, obviously will likely be met with more scrutiny?
Yeah. The biggest thing, Marley,
hey,
is this enterprise
if I sell some swing positions, my contracts, is that still a day trade? If I buy them on the same day, but I still have a run notice?
Debt reduction play going forward. So what I see here,
I get yelled at. I'm about to get yelled at.
The merger or the takeover.
Alright, say like if you enter a day trade with 4 or 5 positions, right? I'm in contracts.
They've been very
and
clear
you still,
very distinct, had
3/4 on it.
So you're going to have that. It's definitely layoffs. It's definitely cost cuts in terms of probably what's invested and the number of pictures that
are financed all on the same day,
and maybe even picked up for acquisition. And then just looking out at the broader kind of labor perspective, which is I think where some of our leaders are coming from, the AG and our senators here in California. You're talking about, I guess you call it.
Damn, I knew that too.
You're going to be reducing the
number of hires. Hold these systems
probably going to ripple throughout the ecosystem. So it's pretty bad stuff in terms of the talent and the working environment. And it's very hard for, at least for me, to take that comment that you just made from
in the morning.
Value. So I see it as a cost cutting exercise.
And you're going to do a continuation from the market close.
Retire all that debt going forward.
So we've got debt concerns, we've got monopsony concerns, we've certainly got the monopoly conversation as a part of this too with the regulators. And then in response to this note, we got comments from California's AG saying it's definitely not a done deal. The Justice Department, I think, came out and said they don't know why certain parties are acting like this is a done deal. They're doing their due diligence. The UK has its regulatory
$700
cost ain't that bad, bro.
Realistically, does the
On the
state
market,
of
the market's
California
at 680.
have the power to block or reshape this deal in any meaningful way?
That's a great question. I mean, I don't know the answer to that off the top of my head. I think it'll be a real.
It just did that today. You don't print on them calls.
You know, we're seeing this a little bit with
I'm about to say I'm about to say out.
Circumstance where there was a federal
But
judgment
AT&T,
or settlement, and there's
I probably would have been up at least $100, $200, $1,000 to work for AT&T.
For sure, I think it could cause some problems and cause delays, and I think it's good that the regulators look at this stuff. And I think it probably is more.
You know when I get paid again?
Talent, if you will.
I get paid in 2
This
weeks.
enterprise is really big, right? There's 2 news networks in it. There's sports rights, and all those things in different ways touch pretty
Bro, it's bringing my whole position down.
I would bet the Europeans look at it, with a degree of depth too, because there's probably some market share concerns over in their territories. So, it's a real tough thing, and it could be a problem for sure.
And so I'm glad you brought up that it has assets in addition to film, because we talk a lot about the Hollywood saga component of this, but there are major news assets tied into this as well, and obviously when you're controlling entertainment assets and news, which is supposed to be impartial in theory or in operation, how is that
the cash card going up and the money going up.
standpoint as they're running an
I
entertainment
don't want to see red nowhere.
contributing to something that's supposed to come from an unbiased
No,
perspective?
I want all this shit to be green.
One would hope they would look at it that way. And I think the big concern has been that there's some kind of preferential thing or relationship that supersedes all the stuff at the federal
What you gonna eat there?
So, I think that's probably the biggest concern there. But I think they need to look at it objectively in terms of consumers, which is where I think a lot of the attention is going to be. I mean, the irony for me.
But the market's gonna break out again, bro. Like, really, why won't we hit?
Back into Hollywood, if you will. I don't necessarily know if there's going to be
bro.
because there's so many streamers in the market. There's price competition.
Right here where I'm watching it, bro. It's going, bro.
Pressure on and raise prices, as are some of the audio streamers too, Spotify. So I see it more.
Let me guess, you're not in the trade,
the
folks.
talent and preserving that, and the business around that than anything. I'll also mention to you.
You done for the day, right?
Sports rights keep going up. The NFL's getting looked at as well. And all these things, if you're putting them all together in one big organization, they're going to play off against each other as well. So it means there's probably going to be less of a pie.
Oh yeah, that's what I was trying to tell you, bro. You see that shit?
I was going to ask you about sports. That's where I was planning to head.
It just went up like $2 today.
Allison has been very open about how important sports was to Paramount Skydance, and that's a big part of his strategy.
No, bro,
now with this
BTM,
combined
bro. You
company,
know
I
BTM?
don't think that's going to change any. But you mentioned the rights
No, that shit
to
up
these
now.
deals. There are fewer and fewer of them, so they're going for more and more. And
Yes.
it's no secret that he wants the deals that are out there. Does that then cause a turn-off or a takeaway from the film and scripted content component? And then how much does sports become an anchor part of their strategy?
They falling out, but they still trying to hold $4.
For these streaming companies.
I would
They
think
went up
they play
50%
off against
today.
each other. I mean, the news over the weekend.
Yes,
there was, the NFL's having its licensing practices looked at in terms of who they license
No,
to.
bro, my 616s would have been in the money again today, bro.
I still to this day
I bought these $5 ago, bro. I would have printed so much today if I would have sold them early.
Those prices for it, so
I mean, I made 300%, but I don't care, but I want all that shit.
Everyone's got appetite for, so I don't see the interest.
And my swings from the spot is printing too.
But yeah, if you're combining these things,
And I'm about to sell them. Because it's all about what you got in your pocket. You get me?
It probably would, particularly given all that debt.
They ain't gonna liquidate me when the market closes and shit, and I can't sell my shit. And my stop loss won't trigger and shit, because the market closed, fuck that shit. I'm gonna take my money and put it in my pocket, you get me? Somebody say amen or something, bro. I'm about to get all y'all up out of here, bro. Yeah, don't talk to me.
Sometimes independently, by different studios. So you kind of hope that the marketplace doesn't go away. And I think that's what this letter was about today from all the creatives.
Seth, I could talk to you about this for the next hour easily, but I know we're tight on time here, so I have one last question for you. If you had to handicap it right now, with everything we just laid out as potential issues for this deal going through, what percentage would you give it that this deal goes through as announced?
60-40, something like that. I still think it will, and I don't think it's going to be held up, but I think
Come on, this is the day. Today is the day. Shit, tell them that. This is the day, bro. Today is the day. Today is the day.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour.
I'm Diane King Hall on the floor of the New York Stock Exchange. When markets react, we are live with analysis that matters. Watch now, only on SchwabNetwork.com.
letter D, because if you could still get somewhere around a 4.6, 4.5, 4.6 dividend yield on that, and the PE ratio is somewhat reasonable.
Okay, so if it's a case of attractive dividend yields, then where else in this market are you looking for that kind of return then, Joe?
That's a real good question. We like the international markets, DVYE. DVYE is the symbol, and gives you large cap exposure on an international basis, and the dividend yield on that ETF is about 5.6, which is extremely healthy, especially given that it is subject to a cap of 20% because there are qualified dividends being distributed. We love that ETF, and we've been accumulating that position for the last 6 months.
And Joe, I know part of your strategy as an options trader as well is, generating income. That's what everybody wants to do right now. As far as in your options action, your options overlays to some of your longer term plays, where are you seeing the greatest opportunities to make money right now in this market?
Great question. I do like the natural gas sector, LNG. We've been playing Shineri for the longest time. If you want to play energy, that's the great place to play. We are producers of natural gas here in the U.S. That's one of our major exports. And because Shineri, symbol LNG, has just declined about 30 points, a great way to play that is by trading options, selling them, and buying it at a much lower price point than where it's trading today. For example, we sold the 240 puts, so it's got to go down 20 points, which I don't think will occur, before we get exercise. So I love that play, and I love that space.
And just to highlight that DVYE, it's an iShares emerging market dividend ETF, which has hit a 52-week high today. So, obviously as we see areas like South Korea, China, India catching a bit, even though they are largely exposed to some of the energy shock that we're seeing around the world. But I just wanted to quickly pick your brain before we let you go, Joe, about what you said with respect to the apocalypse and the scare that you referenced it as. Do you believe that any of it's real? Or, because, there's an argument to suggest that it's a bit overblown. Would you subscribe to that?
Toast is about 7%.
Which apocalypse? I'm sorry.
The SaaS, the softwares as a service.
Oh, I'm sorry, yeah. I really don't think it's an apocalypse. I think that it is a correction, a correction that's occurring right now. Whenever you have too much money chasing too few products, you're going to have these bubbles from time to time. And that's what you're seeing right now. I'm not saying it's an apocalypse. I think that if you want to trade in this area, you can pick up some ETFs that make sense for the long term. I would not be a day trader. I would not be a day trader in this sector at all. But I am positive on this space on a long-term perspective, not a short-term.
Joe, we really appreciate you being with us today. We got through quite a lot there. Lots of good insight. Joe Rinaldi, President and Chief Investment Officer, Quantum Financial Advisors. Coming up next, we've got Options Corner heading your way. Rick Ducat will join us here in our Chicago studio to take a closer look at Palantir, which is the third highest traded stock on the S&P 500 today. That's next on Market Unplugged. Kick off the morning with the data and the decisions moving markets. Morning trade line.
I'll be back.